Welcome back. Let's take a look at the S&P 500. The index showing a solid 17% gain over the past year. Well, the S&P's top performer over the past year just so happens to be marking its first anniversary today since entering the very special group. Our Dom Chu is here to break it all down and reveal our mystery chart. Dom, good morning.
It has been 1 year since Palantir has joined the S&P 500, and during that year, it has made significant gains overall. Over the course of that past year, it has risen to be a $425 billion company in terms of market value overall. That's due to a 380% gain in just 1 year alone compared with the S&P 500's 17% approximate return during that same period. What's interesting about this now is if you rank the top performances over the course of the past year within the S&P, it is far and away the best performing stock in that benchmark index. Palantir shares up 382%. Tapestry is a distant second at 168%, GE Vernova at 163%, Warner Brothers Discovery at 138%, and Western Digital at 123% as well. Those are the top 5 one-year performances. Now, in terms of rookie performances, the CNBC data team over the last 10 years looked at the numbers for the best one-year performance of an S&P 500 company in its inclusion. These are the numbers they came up with. Palantir, Carrier, Align Technologies, GE Vernova, and Etsy as a double. So keep an eye on Palantir as a big one-year performer. I'll send things back over to you.
All right, so one of the biggest debuts ever in the first year. We're looking at a name like Palantir. How typical is it to have that kind of performance in the first year?
It is not at all. And in fact, that's what I was trying to kind of point out here. Over the course of the last 10 years, these are the absolute best performances, and far and away it's been Palantir. But there's been a conventional wisdom at times that when companies do get to the point where they're big enough, mature enough, if you will, to be included in the S&P 500, that it may actually be time for them to slow down a little bit in terms of their stock performances. It has not been the case for Palantir, so we'll see whether or not it keeps up. By the way, analysts right now, the target price for this stock is below where the current trading is, so we'll see whether or not they either up their targets or Palantir evens out a little bit, Frank.
It doesn't seem like it's going to even out today. By the way, it's up 1 3/4% as you're showing. Leader in the NASDAQ 100 this morning on its anniversary, so anniversary getting off to a good start. Our Dom Chu with a look at Palantir over the last year. Dom, thank you very much. All right, coming up here on Worldwide Exchange, looking overseas for opportunity, the case for international markets. Despite the U.S. sitting at record highs, we're going to be back right after this. Exchange. Back to the markets, coming off another record close. For more on the trading day ahead, let's bring in Adele Zaman, partner at Wall Street Alliance Group. Adele, good morning. Thanks for being here.
Good to be with you.
All right, let's start with your word of the day. Your word of the day today is inflection. What inflection are you seeing?
So inflection in terms of market leadership shifting from US equities more towards international equities. Inflection also when it comes to movement of capital more away from cash, more towards dividend paying companies. And inflection also when it comes to China, where their policy is changing more from control, more towards supporting growth.
Okay. I know you gave us these notes yesterday. I don't know if you gave us these notes before the NVIDIA OpenAI deal. It seems like so much of the momentum in this market is going towards the AI trade and tech trade. And in fact, just there's so much momentum in the market, which generally leads investors to do trades in higher beta stocks, a little bit riskier investments, if you will. Do you still think that investors are going to go into dividend stocks after what we heard yesterday from Jensen Huang and Sam Altman?
Well, the macro tailwind is very strong, right? We have like low rates, less regulation. Even with the big beautiful bill, you're seeing that the bonus depreciation is essentially reducing the effective corporate tax rate down to about 15%. So it's undeniable, the macro tailwind. But we do think that right now with rate cuts, we are going to start to get a pivot. And US markets are doing well, but they are trading at premium valuations. So we would be looking towards more relative value areas.
All right. Your pick for us today is the IXUS ETF. It's basically everything but America. So I was looking at the top holdings. There's some names like an ASML in there, some names that are tied to the tech trade. But generally, the top holdings are outside of the tech trade, and of course, they're outside of US companies. Seen outperformance over the last year-to-date performance time frame, up 25% compared to the S&P, up about 14%. But don't you think there's going to be a catch-up trade in the U.S., especially when it comes to AI, because we continue to see these investments?
So we think that there's going to be, if you look at the leadership between international and US markets, it goes through cycles. And now we've had 14 plus years where the US markets have been outperforming. So we think that there's going to be a pivot there. Also, the advantage of investing in international markets from a diversification point of view is that when you're investing in US, the gains are concentrated in a handful of tech companies. When you go international, you're getting broader exposure. So from a risk-adjusted return point of view, I think there's a lot of attractive valuations there.
All right. I want to talk to you about the bond market. Coming up later today, we're going to hear from Fed Chair Jay Powell. Just very quickly, what are your expectations? Do you see it having an impact on the U.S. bond market?
Yes, so we do think that as far as that is concerned, the trend is going to be that rates are going to continue to go lower. And I think that's going to be a good tailwind when it comes to the housing market. The GDP multiplier on the housing market is very high. And overall, I think the theme is going to be that investors will shift their focus away from that 7.7 trillion that is sitting in the money markets and look for some good quality companies that pay a solid dividend.
All right, Adele Zaman, great to see you as always. Thank you very much. One more quick look at futures before we let you go. In the green across the board the last time we checked, still there. That does it for us. Squawk Box starts right now.
Get out. Good morning. NVIDIA scaling new highs on a $100 billion computing deal with OpenAI. But does America have the power infrastructure at this point to back it? Corporate leaders, including the CEOs of NVIDIA and OpenAI, and JP Morgan's Jamie Dimon weighing in on President Trump's changes to high-skilled worker visas. We'll tell you what Dimon said overnight. And to no one's surprise, at least not here, Disney folded like a cheap suit, and ABC is bringing Jimmy Kimmel back already tonight. Now the real fun is going to start, folks. And not all affiliates are on board. It's Tuesday, September 23rd, 2025, and Squawk Box begins right now.
Good morning, everybody. Welcome to Squawk Box right here on CNBC. We're live from the NASDAQ market site in Times Square. I'm Becky Quick along with Joe Kernan and Andrew Ross Sorkin. And it looks like right now we see some green arrows this morning if you want to check out the U.S. equity futures.
Again.
Green, well, no, yesterday we had red arrows, but we closed the day at record levels for all three of the major averages. You can see this morning the Dow is indicated up by about 60 points. S&P futures are flatlining up by about 1 point. The NASDAQ up by close to 12 points. If you check out Treasury yields right now, you're going to see that the 10-year is sitting at 4.12 still. The 2 years at 3.59. Those yields a little lower.
Meantime, let's talk about NVIDIA and those shares coming off another record high. The company is going to be investing up to $100 billion in OpenAI as the AI lab attempts to build hundreds of billions of dollars worth of data centers based on NVIDIA processors. The company said that OpenAI planning to deploy NVIDIA systems that require 10 gigawatts of power, roughly the power from 4 Hoover dams. In an interview with CNBC, NVIDIA CEO Jensen Huang calling this the biggest AI infrastructure project in history.
This is additive. This project, 10 gigawatts of AI infrastructure, is additive to everything that has been announced and contracted. Remember, they've contracted huge amounts of capacity through Azure, through OCI, through CoreWeave. And all of that is powered by NVIDIA, and we're really delighted working with all of these partners. And that's going to continue to grow.
In the same interview, OpenAI's CEO Sam Altman talked about the off-the-charts demand for AI.
The compute constraints that the whole industry has been, and our company in particular, have been terrible. We're so limited right now in the services we can offer. There's so much more demand than what we can do. And as we look forward another year or 2 years, if you have, let's say it takes 10 gigawatts of compute or 5 gigawatts of compute, you could choose one of two things. You could choose to cure cancer by doing a bunch of having AI do a bunch of research, or you could choose to offer free education to everybody on Earth. No one wants to make that choice. And so increasingly as we see this, the answer is just much more capacity so that we can serve the massive needs and opportunity with this.
The news from NVIDIA and OpenAI moving stocks throughout the chip sector. AMD rising yesterday, but Broadcom moved lower. Taiwan Semiconductor, Dell, and Supermicro all closing higher. And the only thing that I thought, my only skepticism about this, is whether you like the idea that a chip maker is ultimately funding an AI company to basically fund themselves. Remember when Cisco, back in the day, there were these kind of periods of time where this is like vendor financing, if you think sort of through what that actually means. And is that...
you're questioning whether there's demand beyond this, and outside of this, or if this, the ecosystem is...
Right, when you get into when you get into sort of the vendor financing of your own industry, it sort of becomes this unique... cyclical thing, which could be virtuous or vicious, depending on how you look at it.
Competition-wise, I guess, but I'm pulling for him.
Oh no, I would like all of this to work. I'm curious, sort of.
I think I would before it kills me because I'm superfluous. AI, I'm talking about. We said the power of 4 Hoover dams. That doesn't. I kind of understand. I guess a lot of power comes from the Hoover dam. But it doesn't quantify exactly what it means. Tom Fanning's going to be on. The biggest nuclear plant, the biggest electric generating plant in the country is a nuclear plant that generates 4.66 gigawatts. And they're talking about deploying 10. And it hasn't even been possible to do this.
Right.
Yeah.
There have been questions raised about this. It takes 7 years to get permitting for a nuclear facility to do some of these electrical things. Look, my guess is the government is probably on board with trying to streamline some of the permitting process and get some of these things done more quickly if they possibly can. And Sam Altman, I understand what he laid out here, this idea that you can either cure cancer or provide free education for everyone, but that's not everything that we're using AI for.
AI might do both. So if we get it really going, NVIDIA's going to, for each gigawatt, they're going to invest $100 billion. So if they're going for 10, I used AI in my own brain. That's $1 trillion.
No, it's 100 billion.
100 billion.
How do you think this changes the competition
1 times 10 to the 9th.
with all the other AI and large language models? So that's the other thing that's going to be so interesting, right? Because now, in the same way that the government has a stake in Intel and you have to pull for Intel.
Right.
And so does NVIDIA, by the way.
Right. NVIDIA not only has to pull, but now NVIDIA has to pull for Intel. NVIDIA always had to pull for OpenAI, right? Because clearly they were buying a lot of their chips.
Right.
Now you have to pull for them even more, and the question is, do you end up pulling for them more than Google or Anthropic or Microsoft or somebody else, well, Microsoft is part of OpenAI now, or at least has that partnership. What does that ultimately look like, and how does that work?
That's a good question. Another question I initially had was does this just mean they're going to be providing chips to them for this? And it's not. It's cash
Right.
infusion that they're putting into this. But yeah, a
What's
lot
your
of questions.
favorite? What's your favorite now? I've gotten mad a couple of times.
At Complexity?
Yeah, I have.
I use that in ChatGPT.
At least
They're next to each other.
on 3 or 4 occasions, they've given me a definitive answer with the first question, and then I said, "You better check your facts," and the idiot does, and he comes back with a completely 180-degree answer and says, "Oh yeah, you're right, it does." I go, and then I ask, "Why did you tell me so definitive?" "Well, you ask it in general terms, and it didn't really cause me to
You
look
found
into
someone new
it."
to fight with.
I did. I've called them useless.
We're all happy.
And
AI is even more useful than we realize.
I said, "Why would you say it if you didn't know?" And it answers. The scary thing. So we got to pull for OpenAI because then Perplexity has something better to steal, right? Then they can. Is that how it works? What's it called? Scraping or something?
No, they're not stealing. They have a partnership. I mean, they pay.
Okay, and that don't mean stealing, but they don't do. They just kind of collect everybody else's data. So maybe everybody else is.
Isn't that kind of what we do?
I guess we do. I guess we do.
All right, shares of Tylenol maker Kenvue rebounding this morning. They fell sharply yesterday on controversial comments from President Trump about Tylenol. Angelica Peoples joins us right now with more on this. And this is an announcement, Angelica, that really shook things up yesterday.
Yeah, Becky, the Trump administration advising pregnant women against taking acetaminophen, that's the active ingredient in Tylenol during pregnancy, and they also moved to approve a drug for the symptoms of autism. So the FDA is starting the process of updating the label of Tylenol and other products that contain that pain reliever to reflect evidence suggesting that taking the drug while pregnant may be associated with a higher risk of neurological conditions like autism. And President Trump told pregnant women in that press briefing yesterday not to take Tylenol more than 24 times without offering any new evidence on why exactly they are recommending that. And FDA now sending a letter to doctors that says, well, an association between acetaminophen and autism has been described in many studies. A causal relationship has not been established, and there are contrary studies in the scientific literature. The association is an ongoing area of scientific debate, and clinicians should be aware of the issue in their clinical decision making. The FDA also moving to approve an old GSK drug to treat the symptoms of autism, and GSK stopped selling the brand name of that drug, Lucovarin, almost 30 years ago. But updating that label will help the generic versions of Lucovarin add that indication to their labels, so it's a little confusing, but a GSK spokesperson telling me that the company has no plans to bring that brand name drug back to the market, Becky.
Angelica, I was just saying, I know people who went to get prescriptions for this yesterday. I know the confusion that this is causing for pregnant women in particular, and there are physicians groups that are kind of pushing back on all of this and saying, wait, you should not be sowing this, in their words, misinformation on some of these issues, that this needs to be more thoroughly researched before you can say this, and that in fact, it's very dangerous for a woman to not take something to bring down a high fever when she's pregnant. That could be big issues for the baby as well. So there's a lot of confusion that has come out as a result of this.
There's so much confusion. I mean, I see it on my own social media, right, with all of the different moms groups asking about this. And the takeaway that I've heard from doctors is that this is an area of research, right? The connection between taking acetaminophen during pregnancy and autism. It is not a totally out of left field idea to talk about. It has been studied, but really our evidence is mixed as best. Yeah, it's worth being studied. The evidence is mixed at best. But at this point, to draw conclusions, and I thought that's why it was important to show what the FDA is actually telling doctors. Because if you listen to the press conference yesterday, you might come away with the idea that you really should not take Tylenol only in very limited circumstances. But the FDA itself is acknowledging that this is not a definitive, and this is not a definitive, case closed, you should not take Tylenol situation. And so I think people do need to be measured and go look at what the FDA is saying, and also, some of what those studies are showing as well.
We know for sure that there's a lot of other things, even if it is, does factor into the overall equation, there's a lot of other genetic, environmental, a lot of other things. Maybe it's one of the environment, maybe, but I mean, where were the studies in Sweden, the sibling studies, where it just didn't look like,
larger studies, by the way.
and even larger, but that doesn't prove it's not, but it doesn't prove, there's nothing
And
that
that's the problem, Joe.
Yep.
Yeah, you mentioned a good point, and that's when you talk to all of the different researchers out there. You really can't run the studies that we want, the randomized placebo-controlled trials. You're not going to give a pregnant woman the option to say, hey, there's this thing that we think might give your kid autism. Do you want to potentially take it? And then we'll give you not, or we won't give it to you. So you can't run those studies. And that means that it's really hard to prove that something does not cause autism, and that's just going to leave open this gap for any possibility. And people obviously want answers. This is a huge issue, but at the same time, I think people in general are skeptical that suddenly 6 months in we have an answer that we haven't been looking for, despite decades of research and billions of dollars in the area.
Well, if I was gonna be your assignment editor, so which I'm not, there's a piece in the Journal which highlights an op-ed piece. You probably saw it, but the whole idea of placebo-controlled drugs are almost impossible in certain things. You have people that have advanced melanoma that are going to die. You can't give, you're testing a drug, you can't give the placebo to people if it works. And this drug seems to work. And the guy who's in charge right now says, well, there were no placebo. And he's a Bernie Sanders acolyte that is now in, an RFK Jr. Appointee, I think. So, just to say, well, too many cancer drugs are being approved. There's another camp that says you ought to approve almost all of them if there's the slightest chance for people that are, in dire straits for a couple of extra months or whatever. Some of them might work. So did you see that piece today? You probably know more about it. I'm not familiar with the drug, but it's for advanced melanoma. And the criticism is there was no placebo on this trial that showed a third were reduced, or a third were completely obliterated the cancer, and the other ones did shrink. So I don't know what's going on at the FDA right now, or HHS, or whatever we want to talk about. I know this one is.
Yeah, there's certainly debate about how we should be looking at placebos and how we should be running trials. And I think again, back to that drug glucoverin, there have been some small studies that suggest that maybe it does have an effect, and maybe it does help some kids who are nonverbal, be able to make improvements in terms of their autism symptoms. But same thing here. Yes, not all studies can have, hundreds, thousands of patients, but when you're talking about a disease like autism that's so prevalent, that really is a place where you want to see those large studies.
Angelica, thank you.
Coming up, we're going to talk markets with stocks at all-time highs, plus what to expect when President Trump addresses the UN today right here in New York. Don't go anywhere. Squawk Box coming right back after this.
Report single.
Futures calm this morning following a new highs for the Dow, S&P, and NASDAQ. Joins right now with Stephanie Link, Chief Investment Strategist at Hightower and a CNBC contributor. Okay, so here we are. We're on the back of this big NVIDIA news. A lot of people excited about that. I don't know. I'm actually curious, before we even get into everything, how excited or not are you about that news?
Oh, it's transformational. I mean, this is incremental $350 to $400 billion for NVIDIA over time. And, you know, the time frame is obviously to be determined. But this just reinforces all that's going on in AI. The biggest question, Andrew, I get from advisors and clients is, are we in a bubble in AI? And when you have companies that are spending this kind of money, but many of these companies spending, I mean, Oracle's going to see $300 billion from their OpenAI transaction. And so you have all this money pouring into the sector, but it's not just technology that's benefiting. If you look at the industrial companies that you and I have talked about for the last 3 years, you know, the Quanta Services, Eaton's, Vertiv, Vistra, all these companies are also going to benefit. And then you look at utility companies, they're going to benefit. Right. So it's kind of across many different sectors within this landscape. And so that's why I don't think that we are in a bubble, because you have so many companies telling us how powerful this is, pun intended.
Right. I think the reason that people think of it in the context of bubble is just the amount of money that is rushing in all at the same time. And the other piece is that so many of these businesses, at least some of them at least, the end customer, if you will, are not profitable businesses. And so you have this build out taking place that's being funded by companies that ultimately don't, at least in this moment right now, technically have the cash.
On the technology side, it's definitely mixed. There are some companies that are seeing monetization. Look at Broadcom. That's why actually that stock has done better than NVIDIA this past year. Look at Oracle. Look at Meta. I mean, and Meta, by the way, the stock has done nothing in the last couple of months. I think that stock should be much, much higher because they actually have been seeing monetization. They have pricing power. Their price per ads are going up 10% because of AI. So to me, there's the haves, and then there are some companies that are not yet anyway. But it's not all that are not making money. You just got to be very particular. And all the other companies I just mentioned on the industrial side, they sure are profitable. And so here, by the way, yep. AI, you need data centers. We don't have enough of the data centers. We only have 11,000 around the world. We need much more. And then it's all about the grid too, right? The grid hasn't been really invested in incrementally. So you're going to need to do that part of the story. And then, of course, the power, obviously, we've all been talking about that, how we're undersupplied. So there's so many pieces to this story, and there's so many ways to invest in it.
When you think about where the market is right now, we're effectively at all-time highs. Where is it at the end of the year? You could, by the way, the only way to get to higher numbers is to be at all-time highs to begin with. So I don't want to tell people that we're too high, but there's always the question.
Yeah, the market is expensive. There's no question about it. But you're seeing earnings growing at double digits. We just grew earnings 11%. Expectations were for 5%. We have only 3 more weeks until we get third quarter earnings, and I think you're going to continue to see double-digit earnings. Free cash flow is very important to me. It's running up about 14% year over year. And the big surprise for many people, not me because I've been talking about it for a long time, is margin expansion. We have been seeing substantial margin expansion across a variety of different sectors. And that's a function of pricing power. That's a function of restructuring, reorganizations within companies, just companies doing best in class. And oh, by the way, also productivity tied to technology. So I think all of this, earnings are growing like this because the economy is continuing to do pretty well. You're running at about 2.5% to 3% in GDP. The consumer continues to spend. Remember, retail sales last week came in at 4.8% year over year. Manufacturing, we just talked about all the AI data center stuff. And now you also have a Fed easing cycle. So the economy is doing okay, and that's leading to better earnings. And so, yeah, stocks are expensive. I think the numbers, the E is going higher. So therefore, it doesn't look as expensive on an absolute basis.
The E is going higher. That's going to be my line today.
That's not a number.
It's going to be my line today. Stephanie, thank you. Appreciate it. Great to see you.
Thanks. All right.
right, when we come back, what JP Morgan CEO Jamie Dimon said about President Trump's changes to the H-1B worker visa program. We have those comments next. Squawk Box, we'll be right back.
JP Morgan Chase CEO Jamie Dimon becoming the latest high-profile business leader to sound off on the Trump administration's changes to the H-1B visas. The president announcing they'll soon cost $100,000 for new workers. Speaking with our colleagues at CNBC TV 18 in India during the bank's summit there, Dimon said the changes caught everyone off guard.
I believe in merit-based immigration. You know, as a matter of fact, I would beg the president, he has accomplished border control, that's great. I mean, I think all nations want real border control. It helps make a nation. But after that, we should have, good immigration.
We also heard from NVIDIA CEO Jensen Huang and OpenAI CEO Sam Altman on H-1Bs yesterday in their interview with CNBC's John Fort. Huang saying immigration is critical to his company and America's future, and Altman saying it's important to bring the smartest people into the U.S. I saw a lot of stuff on social media that do illustrate the other side, that it's for years not necessarily really high-tech people have been hired at, in India and other places.
The average is 167,000, maybe 165.
People in the United States at the expense of people that are totally qualified in the United States. And it also might it might allow companies to do that without doing what the training which you could be doing for people in the United. I mean, I can see the rationale.
I can see both sides of it. We had
both
Robert
sides.
Frank here yesterday, and he talked to us a little bit off camera. I've asked for him to come back tomorrow and say a little bit, because he's been doing research on this, talking to immigration lawyers who tell him that this has been abused. It's a system that's
We
been
want the
abused.
best and brightest, but we want
We want to pay
Yeah.
market salaries for people to be coming in. 71% of these visas go to people from India. Another 11% are going to people from China. There is a 6% unemployment rate right now, Robert mentioned, that is for recent graduates, so it's much higher than the average unemployment rate. And there are questions about a lot of things that could be causing this, whether it's AI, whether it's a slowdown in the economy, or employers thinking they just want to hold on to the people they have and not bring new people in. But there are some valid questions to be asked about whether this system has been abused,
I
particularly.
mean, you can't do it remotely from India, right?
And there was something weird, because it did say that there are people who are still
In
overseas
India,
who have these
these
H-1B
visas.
visas. Maybe they can come and go back and forth.
Maybe that's what it is, but all the call centers, we know that, when you're really doing anything on the phone.
Yeah, I don't think these visas are necessarily.
The question to me, though, is I'd say, how terrible is the abuse? Because there is a trade-off.
Yeah.
And that's the fundamental question. If you told me that, you could get back 10 or 20,000 jobs, how do I think about that in the grander context of innovation and trying to have the best people
Except
who
for
want
that,
to come here? And
if
that's a
you
real
looked at
question.
where the breakdown was,
And that's-
10,000 of these visas are held by Amazon employees, another 5,000 each, I think, by Meta and Microsoft, and then there's another one of the Mag 7 that takes up almost 28,000. Almost half of these visas are taken up by the Mag 7, and that's an area where they could probably just be paying more. It's not
The whole onshoring phenomenon, you have to do the same trade-offs. And people would say for 40 years, we didn't care about those trade-offs. It's just,
right. It's the
torpedoes be damned. We're going to get the cheapest labor, and we're going to get the highest profit
I think it's a
margin.
different.
But if we bring back stuff that shouldn't be made here to get American jobs, it's probably going to cost more than it normally would, which could long-term hurt innovation. And so every one of these,
It's the innovation question. This one is the innovation trade-off.
But
And that's
the other question is, some of it are used by doctors, and there was an issue that was brought up to the administration saying, look, this could hurt rural areas where you can't find a doctor who will come in. The administration responded by saying we could do exemptions for things that we think are important for the country. So maybe there's a way to cut it back.
Well, that's why I said, is there a way
is
where
there a way
for the Mag 7 they can pay if those are the ones that are being abused? Let's try to focus on those. I'm just curious and don't want to obviously cut off our nose.
there's a whole movement where people say, I'll pay more for something made in America. And it's obviously going to, that there are people who want to do that.
Who are those people?
There's a lot of people that say, I'll pay more. I want it made here. People that want American jobs here. I'll pay more.
They say that,
They
and
say
then
it.
they don't do that.
They say it.
No, they say it and they don't do it, and that's the most important part.
We have a governor's race in New Jersey, and one of the candidates says, renewables, they're going to cost you an arm and a leg, but you'll do it if you're a good person. And that's the same thing. Do people really want to pay that much
But
more?
Joe, it's
the
same argument that you would make to me, and this is why to me it doesn't make sense. I was going to say, here we are in New York, and you'd say Mandami wants to raise taxes, and you would say, well, if the taxes go up, people are going to say they're going to leave.
Yeah.
Well, are they not just going to say, I'm going to live here and I'm happy to pay more?
Yeah.
That's the point. If
It's a matter of degrees. I mean,
well, no, but if you're willing to say, look, by raising the price,
I'm not saying that people that want to say I'll pay more for American-made goods, I'm not saying that they're really going to do it one way or another. I'm just saying there is a movement where, with what we've seen, J.D. Vance is the reason, right? The reason that he's got
there's a political movement, but I don't believe that there's an economic movement. Meaning, I don't think.
Well, you haven't lost your job to one of the 80,000 factories that were shut down.
No. I'm just saying that I don't believe that we're seeing people go out and because it says, unfortunately, say made in America, that they're willing to pay more for that product.
Well, they might not, but they elected this guy because that was one of the major themes, was that the hollowing out of the middle class.
I understand what the promise was.
Okay, I'm just saying it is an argument that people make. I'm willing to pay more if we can do it here.
They've been playing music over us.
Made in America. Made in America, just like Squawk
When we
Box.
come back, President Trump set to address the United Nations later today. We will tell you what to expect next. And later this morning, a wide-ranging interview with Kevin Mayer, the former TikTok CEO and former Disney senior executive. That interview is coming up in the 8 o'clock hour. Right now, though, as we head to a break, let's take a look at yesterday's S&P 500 winners and losers. All right, welcome back, everybody. President Trump addresses the United Nations today. Joining us right now with a preview of his geopolitical priorities, MCC Global Enterprises CEO Michelle Carusa Cabrera. She is a member of the Council on Foreign Relations and a CNBC contributor. Michelle, this is a situation where he's walking into a building that's on U.S. soil, but he's probably not going to have home court advantage.
No, it's a mostly unfriendly audience. He is expected to rail against globalist institutions that he doesn't like. And the UN is a globalist institution. So historically, when he's spoken there, it is definitely a clash of cultures. And I think you can expect to see everything that you've heard him say lately. He's going to say it again, but with a lot more emphasis. And the audience at times in the past has either jeered him, booed him. So I wouldn't be surprised to see that, even though he's gotten a lot more respect lately the second time around since he's been elected.
I guess the big news that we've seen over the last week has been three of our major allies going ahead and recognizing Palestinian statehood. And this is going to be something that is front and center with this. The United States is not going along with that. He's going to be meeting with Netanyahu on the sidelines, too.
Yeah, I would expect that he addresses that. They haven't given a lot of previews about what he's going to talk about. I would think that's certainly at the top of the list because he's very anti-Hamas, and people who are critical of that move by our allies say that's only giving a state to Hamas. It's going to be interesting how he navigates that, because at the same time there has been reporting that he has been unhappy with Netanyahu.
The other huge issues, you've got what happens with Russia and Ukraine, I guess, front and center, and then Iran with the nuclear issues, what we do with that. And I was just hearing this morning, there are some rules and regulations about what the Iranian delegation is allowed to do while they're here.
Oh yeah, it's very limited because of our very tense relationship with them. Yeah, he's meeting with Zelensky, by the way. It's one of the two foreign heads of state that he's going to meet with on a bilateral meetings. So all of those hot button issues, he's never afraid to go to them and talk about them, even though it's going to be an unfriendly audience. Navigating what is clearly his desire to get Putin to come to the table, which he's admitted has been very frustrating. Telling the Europeans that they should stop buying Russian oil will be something that I am sure that you will hear about today. And trying to figure out that very difficult situation, which he promised to solve within days of becoming elected and hasn't been able to do.
I did not realize that we were in arrears. We had not been paying our UN bills to that point, or that if we don't pay it, we may lose our vote on the Security Council.
I don't think it'll ever come to that. It's very
that
hard
kind of
to believe.
shocked me.
Yes, yes. I don't think it'll ever come to that at this point. It would take a lot for him to pull back, and I think for this entire administration to pull back from that perch.
Okay, explain what's happening with Argentina and what the Treasury Secretary did yesterday by saying that the United States was going to step in and support what was happening there.
It was a very dramatic event yesterday. Treasury Secretary Scott Bessent went on X and announced that he would do what was basically almost the equivalent of whatever it takes to stop a currency run that's happening in Argentina. And what I found so interesting about this is Scott Bessent is one of the few people who would understand so clearly what it takes to stop a currency run.
Right.
Which is the
Somebody
bigger...
who's been involved with them in the past.
Absolutely.
On the other side of things.
Yeah.
Stopping them.
From starting them and now trying to stop one. He understands you've got to have a very large bazooka. The biggest bazooka you have, the bigger the bazooka you have, the less likely you are to need to use it. And so he went in and announced that he would use every tool at his disposal to stop the currency run in Argentina. And we did see the Argentine peso finally stop its free fall. It remains to be seen without him having to deploy any money whatsoever. He has a pile of cash available through the state, what's called the Stabilization Fund, an International Stabilization Fund. We used it under the Clinton administration during the Mexico crisis when Larry Summers was the Treasury Secretary. It dates back to the 1930s. But this is a number of tools he has specifically for this kind of situation.
Why do we care as Americans? Why are we getting involved with this? What does it mean?
Argentina is our most closely aligned country in Latin America at the moment. Javier Milei has started what is the most dramatic free market experiment in the world in decades. We haven't seen anything like this before. And I think the United States would very much like him to be successful instead of seeing the return of a socialist government. And that's why we've seen a currency run down there, because there have been indications through a local provincial election that maybe he's becoming unpopular. There's a big legislative election coming up in October, and the United States would very much like to see him do well in those elections.
Michelle, thank you for coming in. It's great to see you.
Now, coming up, Volvo is expanding operations in the U.S. to try to mitigate the impact of tariffs. And to bolster its sales in the U.S., the CEO is going to join us next. Stay with us.
Welcome back to Squawk Box. Volvo expanding production operations in the United States, and Phil LeBeau joins us now with the company's CEO. Good morning, Phil.
Good morning, Andrew. Håkan Samuelsson, back in the saddle again. And we're talking again. Now that you've returned as CEO of this company, we're going to talk about what your future plans are here in a bit. How did Volvo lose its way over the last couple of years? Yes, sales are up 1%, but what's been limiting your potential?
No, I wouldn't say we lost our way, maybe a bit unfair, but of course I think we lost a bit orientation in the future strategic project, have a pragmatic way forward in electrification, and of course also autonomous drive, also slow down, but I think you need to be there in the forefront as a premium car company. But then of course we lost profitability with a lot of extra costs coming in, tariffs, not the least.
Tariffs impacting your decision. Here at this plant, you're going to be adding XC60 production. Most of the XC60s sold in this country already imported from Sweden, but you want to build them here. This is a direct reflection of the fact that the trade environment has changed, correct?
Yeah, I would say so. The world is regionalizing. I mean, the area of globalization, global cars, you should ship back and forth, is over, and it's really now back a bit to basic, produce where you sell. So I think it's also very important to be a serious domestic player. I mean, if we are serious, and that we are of course with the American market, we need to be industrially present here. So we need a factory. Tariffs have accelerated this process.
You're going to have the XC60 built here, probably starting late next year or 2027, and then another model by 2030. You have not utilized your capacity here to the degree it could be, correct?
No, and it's because electrification has not been as fast as we thought.
Which was the plan here?
Which was the plan to build electric cars here for the world. I mean, we're exporting these cars as well, but they are not filling the capacity. So that I think we believe in electrification is good for what. It's an opportunity, but we need to be pragmatic. Maybe we need a bridge solutions for customers who cannot charge. That's the only reason. I mean, if people can charge their car overnight, and when the range is getting longer, and when the price is coming down on the gasoline car level, then I think electrification will pick up. But we need bridge solutions until that happens.
You've seen the world, obviously, being based in Sweden, but you have a Chinese owner. And you said before we went on, we're on the cusp of perhaps some consolidation with this industry. Who are the companies that are likely to merge or to sell to another company?
I think it's an interesting question, but say what is happening is there are new Chinese players coming in, and they're going to capture a big market, a big share of the automotive industry. And then, of course, it gets crowded for the ones trying to fight about the 2/3 left for them. And I think the ones who will lose out are the ones who are not transforming fast enough. If you just try to stay and squeeze out juice out of a lemon, it will not work. They will have problems.
Do you expect that consolidation to be brands from Europe, North America? Who are the brands that are not necessarily naming brands, but where do you expect those to come away?
I think it's brand in Europe and in America, and they are the ones, of course, who are basically having 100% of the market, or have till rather recently. But 5 years ahead, I think maybe a third of the automotive industry will be Chinese. I don't think that's a brave guess. And then, of course, the ones who are not performing, who are not moving ahead towards the future, they will have problems. So I think you can guess some brands easily.
We'll talk about it off camera, and then maybe we'll talk about it on camera. Håkan Samuelsson, CEO of Volvo, down here at the company's plant in Ridgeville, where they are going to be expanding production over the next couple of years, guys, adding the XC60 as well as a hybrid a little bit later on. Guys, we'll send it back to you.
Okay, Phil, thank you very much. When we come back, folks, Jimmy Kimmel is set to return to ABC's airwaves tonight. We've got the details on what Disney said and what the reaction of some of the affiliates are right after this break.
pitch.com.
Disney is bringing back Jimmy Kimmel Live to ABC tonight. In a statement, Disney said, "We have spent the last days having thoughtful conversations with Jimmy, and after those conversations, we reached the decision to return the show on Tuesday to absolutely no one's surprise." This was our conversation on Squawk Box last Friday.
You think that Disney was going to take out Kimmel anyway?
Someday.
Oh, someday, yes.
And I still think Kimmel's coming back next week.
I think Kimmel might come back.
I think he's coming back next week. And like I said, the applause will make Colbert's reception at the Emmys look tame. There people be hanging from the rafters cheering on the hero, Jimmy Kimmel, who is not Lenny Bruce. As you know, ABC pulled Kimmel's show last week, a few days after the host made comments linking the alleged killer of conservative activist Charlie Kirk to President Trump's MAGA movement. A person familiar with the matter says Kimmel's going to address it tonight, but there was no doubt in my mind that there's no way Disney was going to have the spine to stand up to the woke mob. Disney is a charter member of the woke mob, so there's no way that was going to happen. I think it's going to get interesting now because we'll see what Nexstar does. Unclear what Nexstar is going to do, whether it will return the show to its affiliates across the U.S. At this point, smaller station owner Sinclair says it's not planning to air Kimmel's show, but discussions with ABC are ongoing. I still go to Drudge. I always feel like I need to take a shower after I look at it, but they've been running Disney World empty as Americans fear tourism is finished in Florida. They already got problems. If they have zero MAGA parents bringing their kids to Disney after this, that's going to be a problem. For me, it doesn't affect me. I go to bed at 8:30. You know what affects me? I watch Frank. I take the hour that I would have been Frank Holland
in the morning.
I take the hour I would have been watching late night, and
good for you.
I put Worldwide Exchange on to see what the word of the day is going to be.
Homer, you are.
Yeah, to see what the word is. So it doesn't affect me, but I do think it's pretty effed up that we have talked 10 times more about Jimmy Kimmel in the media world than Charlie Kirk for the past 3 or 4 days, and I think something's really messed up there. But that's just me.
There's talk, already speculation about how long-term of a move this is. Jimmy Kimmel's contract is up in May.
See how the ratings do now when they have no affiliates. But you know what? It was years ago. I remember Kimmel saying, "I don't care if I don't get half of the U.S., half the audience. I don't care if any conservative ever watches." Remember he said that? He said that he verbally.
I don't remember that, but
I trust
he verbally said it. Yeah. Don't mess with my memory. What day is it? You're Becky, right? All right, Aaron.
Folks,
What's coming up, Aaron?
Does America have the infrastructure to power all the commitments that AI companies are making? Former Southern Company CEO Tom Fanning is going to join us to help answer that question next. Don't go anywhere. Squawk Box. Come right back. what's ahead. It's almost 7 a.m. right here on the East Coast. You're watching Squawk Box on CNBC. I'm Andrew Ross Sorkin along with Joe Kernan and Becky Quick. Among today's top stories, President Trump's going to be meeting with the top 2 Democrats in Congress this week as the government closes in on a potential shutdown at the end of the month. That's according to a person familiar with the matter who spoke to CNBC. Democrats currently holding firm on demands that any solution to the funding crisis, including an extension of the Affordable Care Act's enhanced health care tax credits. Meantime, a meeting between President Trump and China's President Xi more likely to take place next year now than this fall. That's according to U.S. Ambassador to China, David Perdue. He said a meeting in the near future is possible, but in his words, certainly next year. And a preliminary deal to keep the TikTok deal alive, or TikTok alive, in the U.S. won't involve the federal government taking an equity stake in the social media company. That's according to a senior White House official, so you can take that piece of the conversation off the table. Later in the show, we're going to speak with former TikTok CEO Kevin Mayer about all of it.
Let's take a look at the futures this morning. Yesterday, you had all 3 of the major averages closing at all-time highs. This morning, the Dow's up by about 37 points. S&P futures and the NASDAQ are basically flat. Let's get over to Dom Chu. He's got a look at this morning's pre-market movers today. Hey, Dom, what's on your radar screen?
All right, good morning, Becky, Joe, Andrew. We're going to kick it off with shares of Boeing, Dow component right now, which are seeing shares rise just to the tune of about 2.5%. This is all on a Bloomberg report that Turkish President Erdogan plans to buy hundreds of Boeing airliners and Lockheed Martin fighters. The report also says that Erdogan is pushing for some of those aircraft parts to be built in Turkey. Those shares, by the way, for Boeing are up nearly 40% so far over the past 12 months, so keep an eye on that Dow component. Next up, you got shares of Micron, up just about maybe 1% or so ahead of reporting results after the closing bell today. Wall Street is expecting continued strength amid growing demand for memory chips. Meanwhile, analysts at Morgan Stanley raised their estimates for the chip maker ahead of that report, and the options market's currently pricing into about a 10% move in the shares up or down on the heels of that report. We're going to round it out with shares of Kenvue, bouncing back a bit right now, just about 5.5% after falling by about 7% on Monday. This is all after the White House kind of drew some unproven links between acetaminophen or Tylenol, the active ingredient there in Tylenol, and autism in pregnant women. Those shares are down about 22% over the course of the past year as well. So Kenvue, we're waiting to see how things shake out there. It's up 5% this morning right now. I'll send things back over to you, Joe.
All right, thanks, Dom. NVIDIA announcing it's going to invest $100 billion in OpenAI as part of a data center build-out. The plan will require 10 gigawatts of power. The largest plant in the U.S. currently runs 4.6 gigawatts. Here to break down what's going on so far, retired Southern Company CEO Tom Fanning, who has a long career in trying to figure out how to generate power for people. Obviously, it's Southern Company, and you're also Atlanta Fed for a while. So you're like you wear a lot of different hats. It's been a while. It's good.
Swiss Army knife.
Is it like a Swiss Army knife? Like very utilitarian, right?
American Army knife. How about that? But yeah,
I'd pay more for that. I would pay more for that, Andrew. So this is no small feat, Tom, and you're actually involved in this now. That's what you are doing now, right? Trying to figure out ways to for public-private partnerships to generate power?
No, actually, what I'm doing right now is working on whether it's cyber or physical security for critical infrastructure.
For security, too, yeah. Okay. National security efforts between the private sector and the government. But you can... All right, so why are you on?
I think the exciting announcement yesterday with NVIDIA really does raise the question, can we meet this moment as a nation? I really think we can, but boy, oh boy, it's going to be challenging. We need everybody in the boat to get it done. Let's think about it. The kind of assets that we're talking about here, these generative AI server farms, et cetera, are requiring something like 24/7 capacity and energy. So that really speaks to something like nuclear, like baseload natural gas, maybe some combination of a portfolio of renewables, solar, wind, storage. I think that's going to be kind of small. In the very near term, I think you may be able to free up some capacity by delaying the retirement of some assets that under the prior administration were scheduled to be closed by the end of the decade. So look,
you mean because of Because of the type of energy they used, they were considered dirty?
Yeah, coal, and they were fully controlled and everything else. But still, I think the economics of where we were at the time just said that we were going to close a lot of coal assets by the end of this decade. I think we can still achieve long-term goals by just delaying the interim retirement of those assets into something that makes sense. Look, I think this administration's doing the right things. If you think about nuclear, I think we're trying to shorten the permitting requirements necessary to build new nuclear. Becky, you mentioned it earlier in the program. The objective, I think, may be to shrink that period down to about 18 months. That would really be helpful. I think the idea of natural gas, I get drill, baby, drill, but the other thing you got to do is get the gas to where it needs to be consumed. So we need to speed up in a very significant way the location and construction of natural gas pipelines. There's a whole host of supply chain issues that need to be addressed. All challenging, but all doable. Look, I think we need to locate much more resources for especially large forgings. When we did Vogtle, the first nuclear plant in a generation of Americans, we dealt with Mongiarati in Italy, IHI in Japan. When you think about major equipment, transformers, turbines, we were dealing with Doosan and Toshiba. We need to think about where those are going to come from. Don't underestimate the importance of skilled labor. Even when we were the only shop in town building Vogtle, we had challenges getting electricians, pipe fitters, welders to the site. Think about the magnitude, and Joe, your magnitudes are about right. We built somewhere over 2,200 megawatts, new generation. We're going to need to do that in a magnitude of 4 times. We need to get that labor. A key guy here, I think, in America could be Sean McGarvey, the head of the United States Building Trades. Permitting transmission, big deal. Listen, I think there's enough capital available to get this done. I think we need everybody in the boat. This is a moment for America where I think if we get our incentives put in the right place, we can get it done.
What is, you went right down the list, and it's fascinating, all the things that, first you said we need the natural gas, we got to do the more pipelines, build more nuclear, then you got the permitting you're worried about, then you got the labor. What is CWIP versus expensing units in the big beautiful bill? So that some of the things in the big beautiful bill will help with this?
Well, sure, but the big beautiful bill deals with effectively depreciating 100% of an asset in a current tax year, and typically that's when it's in service. When you think about some of these assets that take years to build, so let's say natural gas combined cycle takes 4 to 5 years, a nuclear plant, even if you're successful with the advanced permitting ideas, could be 8 to 10 years. You're going to have cash flow out by the sponsor, the constructor, that is going to put a great deal of strain on cash flow. What you'd love to be able to do, this idea of CWIP, means for these kinds of projects, we need to expense for tax purposes as if we were depreciating them in the year in which the cash is expended before the in-service date.
Right.
That's kind of a big deal. We were able to do that in Georgia with the cooperation of the Public Utilities Commission there. Look, these things are solvable, but we've got to work together.
Tom, I got 2 questions for you. One relates to this question. A lot of skeptics of all of this have said, look, some of these states that have been desperate to try to get data centers built in them at some point are going to regret it, with the idea being that all of this energy that we're talking about building that's needed to power all of this is going to, if you look at these contracts, they guarantee typically, and the AI data centers require, something like very close to 100% uptime, which eventually means that you're going to ultimately prioritize energy going into those data centers, oftentimes not even connected to the grid in certain cases, so that, you know, if there happens to be a storm or a hurricane or something terrible happens, you know, when everybody in the town loses their electricity and they look at the data center all lit up, there is going to be potentially a political problem, if you will. How do you think about that?
Yeah, sure. Andrew, you actually raised a number of different questions, but let me hit a couple. When we build an energy portfolio for a region, it requires certain baseload. That is, it's going to run 24/7, a nuclear plant. It's going to require some intermediate capacity, say something that runs 20 to 70% of the time. Typically, that's natural gas combined cycles, and then peaking, things that will run days within a year. When I think about adding this type of load into a regional portfolio, I'm just going to build more baseload capacity. And so as I construct those portfolios, I'm not going to disadvantage anybody. But you're raising another really important issue, and that is one of affordability. Look, we've got to provide reliability. We've got to provide resilience. That is reliability in those times where otherwise the grid is stressed, a hurricane, for example. But we've got to make sure that for all customers, that we put these assets in place in an affordable way. Finally, this idea of priorities is very interesting. And this is something I've been working on with my new gig. You know, whenever we have interruptions, every utility in a very tactical sense has a well-developed sense of priorities. We're going to turn on, for example, hospitals faster than we will 7-Eleven stores. We're going to turn on fuel resources faster than we will movie theaters. So look, we understand the notion of priority. But what you're talking about here for the good of America is the idea of not systemically tactical priorities, but something very much more strategic in nature. And when we think about electricity being kind of the center of these critical infrastructures in America, what about finance? What about communications? What about health and human services and water and a variety of other things?
Tom, we're going to have to run, but I have one final question. It's a sort of broader question we were talking about earlier this morning. It's fascinating to see a company like NVIDIA effectively take its winnings and invest it back into a customer. In the old days, they called that vendor financing to some degree. And vendor financing is a double-edged sword because part of it is it means you need your customer to succeed. And a lot of these companies, at least thus far, while they're succeeding in the marketplace to some degree, they're unprofitable. And it's, you know, as long as the eye can see, we don't see an end to that just yet. And so I'm curious how you, just as a business person, think about that.
I view this kind of on the flip side of that question, not as a negative, but an opportunity. This is a potential to build within America an opportunity to gain a leg up on the development of commercial AI in a big way. I think we may be in industrial America on the edge of a buggy whip moment. And moving quickly, which is what NVIDIA, I think, is trying to do with OpenAI, is trying to take advantage of an opportunity. So I look at this thing as a good thing rather than potentially a negative.
Hey, Tom, will you come into studio soon? Because I think we have 50 more questions we'd like to throw your way.
Oh, I'd be delighted. Yeah, sorry I missed the party the other day. I got caught up on something else. I was actually in New York, so love to join you guys.
Well, caught up in... With what? What was more important than that?
I was saving the future of the...
Trying to work on the national security of critical infrastructure, Joe.
Oh,
and then the Ryder Cup. That's what's next.
Oh, yeah.
Those are both pretty good reasons.
Mm-hmm. What, you playing?
Yeah, I wish.
Yeah.
Tom, thank you.
Hey, thank you. Great being with you.
When we come back, former St. Louis Fed President James Bullard will be our special guest following the Fed's latest rate cut. And later this hour, Morgan Stanley's chief U.S. equity strategist, Mike Wilson, and his latest note on the markets, the economy and corporate earnings. That's coming up at 7:50 a.m. Eastern Time. Squawk Box. We'll be right back.
Got a news alert. The Associated Press reporting that the U.S. Secret Service has dismantled a massive hidden telecom network across the New York area that could have crippled the communication network as world leaders gather at the UN. It involved a cache of more than 300 SIM servers packed with more than 100,000 SIM cards. The servers functioned like banks of mock cell phones. Apparently, they were able to generate mass calls and texts, overwhelm local networks, and mass communications by criminals. Investigators saying that system could have blacked out cellular service in the city and crippled emergency responses and counterterrorism efforts. It's a scary story, but we're keeping our eyes on it. I want to dive in
Good
more
to
to
them
it.
for catching.
That's
Yeah.
crazy story.
Crazy story.
It ahead of time. We will continue to look for updates on that story. In the meantime, joining us right now to talk about the Fed's recent point rate cut, the central bank's future rate path, and much more, we want to bring in Jim Bullard. He is the former St. Louis Fed president who's now dean of the business school at Purdue University. He's also in the running as the next Fed chair, and as we heard from Treasury Secretary Scott Bessent last week, they had a very good and productive meeting recently. Jim, thanks for being here this morning. Good to see you. What did you think about what the Fed did last week? 25 basis points. Did that sound right to you?
I think it was right. It wasn't just 25 basis points. They put October in play and December. So if they follow through with that through the end of the year, that'll be 75 basis points. Most of that's priced in already today, so it's sort of as if they moved already. But it also gives them some optionality to watch the inflation numbers and the jobs numbers as they come in through the rest of the year. And they could pull back if they had to, or delay a little bit if they had to. So, in the way that the committee works, this is kind of a natural decision to make for this situation.
We spoke with the Treasury Secretary last week. He said that he had a very good and productive meeting with you in terms of interviewing you to be the next Fed chair. Most of the people who have been in the running for that job have said that they would cut rates more and more quickly. Your answer is a little more nuanced in this position.
I've said we wanted to get 100 basis points by within the next year, so we've got 25 of that, and the time horizon has come forward, so now you could maybe get 100 basis points by the end of the first quarter. That would put you in neutral territory, and then we could argue about where neutral is. But you do have to watch the inflation side of this. Inflation's still in the high 2% range by preferred measures of the committee. So they want reassurance, I think, that inflation is going to continue to track down to 2%.
What do you think about inflation and the potential for it rising again? People have been waiting for the tariffs to kind of push prices higher. It hasn't really happened to this point. Do you think that that is an issue? Do you think it's a one-off factor if it does happen?
Yeah, tariffs are a tax. If that you have to look at the incidence of the tax. Probably a third of that would go to the foreign producer, a third of that along the supply chain, and a little bit toward the consumer at the end point. But, and also the consumption basket in the U.S., that the foreign good portion of that is relatively small. So you wouldn't really expect the overall inflation rate to be too much impacted by this. So I think that's what's coming out in the data, and I know there's been a lot of talk about it, but the U.S. Trade Representative doesn't have an inflation target. It's the Fed that controls the inflation rate over the medium term.
How much do you think the Fed has control over, though, what happens to the longer end of the curve, the yield curve? Because there's been so many questions about how much power the Fed actually has, particularly if you want to get at things like trying to bring down mortgage rates and trying to help boost the housing market at this point.
Well, the longer end of the market is very sensitive to how much confidence markets have in the medium and longer run policy of the Fed. So credibility is the name of the game. And if you want to keep longer rates low, you have to be reassuring people all the time that you're on the job, that you're going to keep inflation low and stable, not just in the near term, but in the medium and longer term. So that's really what can deliver lower long-term nominal interest rates. I would say also maintaining the reserve currency status of the dollar, that allows us to borrow internationally at lower rates than we otherwise would. So you want that to be part of the picture too, to keep a lower level of rates as you go forward. If you lose some of that, then you get risk premiums priced into the longer yields, as you guys talk about all the time. And then we all have to pay higher interest rates all the time. So we don't want that.
Jim, that's really interesting. And again, it goes back to kind of the difference I see in what you've been saying and what many of the other people who have been interviewed to be the next Fed chairman have been saying too. Many of them have their own reasons, perhaps, for why they're saying it, but their views reflect much more closely with the president's views in terms of wanting to bring down interest rates very quickly. Are you worried that if that happens, if the next Fed chair lowers rates substantially, and it looks like it could be connected to political pressure coming from the president, that the Fed loses control of the long end at that point?
Yeah, I do worry about that. I've heard the president say that he would, if inflation is a problem, just raise interest rates again. But if you have a whipsaw kind of policy, then markets start to worry about that. They start to price in inflation risk premium at the longer end, and that's very hard to get rid of. So it's a careful game that you have to play, and you have to be systematic in policy and clear as clear as we can be about policy, and make sure that everyone's on board with the idea that we're going to keep inflation low and stable over the medium and longer run.
Stephen Myron, the most recent Fed appointee who just took the position last week and voted at the FOMC meeting, was speaking yesterday at the New York Economic Club and said that he plans to dissent with every one of the votes that continue to come up. I guess that's based on the assumption that the Fed is not going to cut rates as quickly as he or the president would like. Do you think that's the right move? Is the Fed moving in the right direction as far as you're concerned?
Well, he made a good speech yesterday, and he certainly makes interesting arguments about a lower neutral rate, and you could certainly vote as he wishes on the committee and make his case. He's a good economist, so a lot of good arguments in there. I think the committee thinks that the neutral rate is, for the federal funds rate, is about 3 or 3 1/4, somewhere in there. He thinks it's maybe 100 basis points lower than that. That would give the committee more room to maneuver. There's no doubt about it. There's a big confidence bound around the neutral rate. I guess one question I would have for what he said was, if we're as restrictive as what he's saying, why hasn't inflation come down more sharply and more quickly? That's one thing I would have an eye on about with respect to that argument. And also, I think the president's policies and the Republican policies here, I think, are ultimately going to be successful. I think there's going to be a reacceleration in growth, maybe starting now, but certainly in 2026. And so you have to be looking ahead and seeing that reacceleration coming. Usually that adds a little bit to inflation pressure, and so you got to take that into account. If you felt like there was recession was just around the corner, then maybe you go down very quickly, but that doesn't seem to be what Wall Street is thinking, and it's not what I'm thinking about what's going to happen in the economy over the next year or so.
Jim, thank you for joining us and for speaking your mind on this stuff. We appreciate it. It's great to see you.
Great, thanks.
Jim Bullard. By the way, a programming note for you folks. Chicago's Fed President Austin Goolsbee is going to be joining us. That's coming up at 8:30 a.m. Eastern Time.
And coming up, this NBC exclusive on the latest business deal involving legendary quarterback Tom Brady. That's next. Squawk Box returns just a moment.
Low.
We have an exclusive report involving legendary quarterback Tom Brady. The 7-time Super Bowl champ has announced a deal with robotic massage company.
Well, I've heard of this company.
You have?
Yes.
For me,
I've heard that people have done this, and they say it's amazing.
Well, robotic massage has all kinds of weird connotations to me, but the company is called Escape. It's to provide exclusive rights to Brady's recovery and longevity protocols. As part of the deal, Brady will also be named Chief Innovation Officer and will work with Escape to integrate his daily routines into the company's technology. Brady spoke to CNBC about how health and wellness were key to his performance throughout his 23-year career.
At 48 years old, I have a great quality of life. I played 23 years in professional football, one of the most intense sports in the world. I took more hits than probably any player in the world. The reason why I'm still able to do what I love to do is because the body work, the care that I received on a daily and weekly basis, and I want to try to make that available for everybody.
For the full story, be sure to visit CNBC.com and the CNBC Sport newsletter.
It's supposed
It looked pretty good, I have to
It's
say.
supposed to be amazing. But, by the way, this is an example of a situation where you're going to put people out of work. Just, if you think about it, there are people who are professional masseuses, that's their job. And you're looking right
Is
now.
this in your house, or you go to somewhere? And
I believe,
That looks
from what
too
I
fancy
understand,
to
at
be
the
in your
moment,
house.
I believe it's at gyms.
Yeah.
I think they're selling it to gyms and spas and places like that, as opposed to, you invest in, I assume the spa or the gym invests in that device. I don't know how much that
They
device
clean those
costs.
things every time.
But nonetheless, there's an example of, you ask where the job's going to go. We've talked about white-collar jobs, we've talked about blue-collar jobs.
Although I've had massager guns.
I'm not
for
worried
forever
about the
that you-
massage industry, really. And this isn't AI. This is just some. I mean, these kind of things. You've
I
had
think
those
about the
things.
chair and the
You've had
massage
those little
chair.
things. I've gotten them free. I don't even like massages. Do you like massages?
Love
Think you
a
like
great
do you?
Love a great massage.
Never had one. I won't. I don't
Absolutely.
like people touching me.
Okay, coming up,
Not
AI,
that way.
fintech, defense, just a few of the sectors that venture capital firm General Catalyst is investing in right now. The company's CEO is out with a new book that outlines what he's calling a new era for capitalism. He joins us with that and so much more right after the break.
a lifesaver.
Welcome back to Squawk Box. This morning, General Catalyst CEO Herman Taneja is here with a new book. It's called The Transformation Principles, How to Create Enduring Change, and it outlines a new era for capitalism beyond Silicon Valley's old move fast and break things adage. Joining us right now with more on this, AI, all things in the tech realm. We're going to get into what's going on with HB1 visas and so many other things. The man who wrote that book, Herman Taneja, he's the CEO and managing director, or managing partner, I should say, of VC firm General Catalyst. And by the way, I should say, you say that the book, or I don't know if you dedicated it this way, but that Ken Chenault is responsible largely for a lot of the things you're talking about in this book.
Yeah, Ken joined us, first of all, thanks for having me. Ken joined us about 7 years ago at GC, and we've been on this journey together on how to think about the role of technology in society, the kinds of enduring companies you build, and he's been an amazing mentor, so I decided to dedicate.
And so what's the distinction? This idea of move fast and break things has been the sort of adage of Silicon Valley for a long time, and you say that's not the way.
Well, let's take a step back. So if you think about the last 5 to 7 years, what has happened in the world? We're having lots of wars, so peace is not really there, not available to us. If you think about the pandemic, we've got sort of broken healthcare systems. We've got an energy crisis, especially in the world of AI. And then you've got AI, which is a technology leverage that can actually impact these industries. And so it's an opportunity to take a step back and think about what these services are going to look like for the next 100, 200 years in society. And you can't rush and focus on the traditional Silicon Valley mantra of, hey, let's just grow these businesses fast and deal with the consequences later. It really has to be a lot more intentional. So a lot of what the book is about is, what are the key principles, what are the key mindset and mechanisms with which you should be thinking about building these companies?
So here we are in the AI moment. We saw NVIDIA is announcing, $100 billion into OpenAI.
Yeah.
Does this make sense to you?
Yeah, look, I think, so if you think about the AI opportunity, first of all, the AI opportunity is the energy opportunity, because there's so much energy generation that needs to be accomplished over the next 20 to 30 years. How do you really go about doing that? Then the question is, how do you actually create these compute clusters that are going to drive productivity? Because it's essentially taking services and melting them into productivity. That's what AI is going to do. That is a massive opportunity. That's trillions of dollars. And so the amount of investment going in, if you think about the value it creates on the other side, the numbers are staggering, but the math is actually compelling.
So but in 10 years from now, are we going to look back and say this was the golden age? Are we going to say this was a sugar rush? Are we going to see, lots and lots of winners? Are we going to see a bunch of winners and a lot of losers?
First of all, there's some patterns from the past. We're going to look back and say there was a period where we felt like we overbuilt capacity. This happened with the CLEX, for example, in the internet days. So that's going to happen. But then we're going to grow into it. So first thing is, there's going to be some bumpy stuff in a couple of years when you feel like there's overbuilt, but then you grow into it. But this is going to be some huge winners, and it's very unclear how many of the companies built today are durable or not. Because as the models get stronger, so much of their capabilities start sort of seconding what a lot of these new companies are building. So the question is, where is the value going to reside? Certainly in the models.
Yeah, put that in perspective for us. Use an example of a company
Well,
today
so there's, take coding today, right? I mean, if you look at Anthropic, which is, we're investors in it, a huge part of their growth is in bringing cloud capabilities and automating technology development. Well, so as coding gets more sophisticated, it gets easier to build software. So there's these companies that are getting built on top of these models that are actually negative gross margin. They don't really make any profit, but they grow really fast because they're compelling, easy ways to use it. Well, are those companies going to be around, or are those features going to get subsumed by these models?
But you're not questioning the models themselves.
Models, I think, there's going to be enough of them that are going to be durable.
We've been discussing this morning the idea of vendor financing, in that here you have NVIDIA is investing in OpenAI. It cares about its success, and yet a lot of these businesses, including OpenAI, don't yet make money. And so you need to, all of the chip makers to some degree need to prop up or keep all of these companies going long enough that they can get to profitability so they can turn around and keep investing. That is a potentially great game and also a dangerous one.
Well, first, yeah, there is round tripping there for sure, because today a lot of the margin does accrete at the chip layer. So they're sort of taking that margin and saying, hey, let's sort of accelerate the investment in the industry because it's beyond what venture capital could do, for example, right? The main thing is, though, if you look at these models, they all do have applications that are at scale and with good margins. They're just investing a lot in this AGI pursuit on top of that.
You're saying if you just stop,
if you stop, they actually have businesses. They do have businesses that I think are going to be durable. But you know, this pursuit of AGI is the thing that keeps attracting more and more dollars because.
Is it durable to the point that the valuations make sense? The private valuations on some of these things?
Look, I mean, if you think about the growth of these businesses, I mean, Anthropic, for example, went from less than $1 billion run rate last year to something that's going to be 8 to 10 this year. When was the last time that happened? Right?
I don't see any way we go from move fast and break things to planning for 100 to 200 years. That sounds crazy to me. And I think the advances, and we know this now, advances, they're not taking longer between quantum leaps. The time between major advances is shrinking, and we've seen it. And people even talk about a singularity occurring when machines know so much that we can't even predict what it means. So
let me. I think they're two separate.
I just don't see how. I mean, we're talking about changing from quarterly to 6 months, and people won't even do that. We may go to weeks.
So the first thing is, I think technology is moving really fast, which is your point. And so the question is, how do you build this next generation of companies that avoid technology obsolescence as a risk for those who adopt them?
Because half of them are gone already. Novell, digital, they're not even around.
That's right. So I think if you look at companies like Palantir with this forward deployed engineering model, a lot of that is it sort of insulates you from technology changing. My point in the book is actually about how do you create these systems? What is the healthcare system going to look like? What is the energy system going to look like? What are these supply chains going to look like that are actually resilient? That to me is about the innovation partnerships, the ecosystems of companies that need to be created, and how they interoperate. Your point is actually about each of these companies, what is the durability given technology is moving so fast? I think they're like sort of two separate dynamics in how you set these ecosystems up.
Separate question. We've also been debating all week the new visa rules and how that's going to change Silicon Valley. Do you believe that this is a good idea? Do you believe that Silicon Valley companies are effectively taking advantage of the system and employing people at rates that are too low?
First of all, let's talk about what's actually important. There's only 85,000 H-1Bs a year, so we're talking about 85,000 jobs. What we're not talking about is think about AI and what it's doing to our workforce and how do we train them to be AI. I mean, Cloud Code is going to produce more than 85,000 engineers equivalent in how it gets deployed in the industry. So like, just to level set, it's actually, we make it a big deal, but it's actually not a big deal in the context of what technology is going to be doing.
Yeah, but politically, it's much less palatable when you're talking about job losses.
The issue
that are coming
itself
from AI.
is nuanced, I think, because on one side, you don't want it to be that cheap labor comes and replaces American opportunity. I think there's some truth in that. On the other side, you don't want to have labor not be there and actually meet the needs of these startups, because a lot of those jobs do end up being that, and then slow down progress for our businesses. Nobody wants that. So I do think it's sort of.
So what's the solution? Is there sort of a middle ground?
A lot of the founders are saying, you know what, we're going to start moving these folks to Canada, and then the very best ones, we're going to absorb the costs and do it here. So I think companies are going to adjust. But I also think this will evolve from where I don't think this is it's already changed a couple times. So let's see where it actually ends up settling down.
But if we could make you in charge for a day, what would you do? Would you keep it like it was before? Is there a hybrid version of this?
I strongly believe we should bring all the smartest talent to the United States, because I think that's what makes our companies great. So I would accelerate and sort of keep leaning into making sure we can bring the talent here.
Finally, there is a move afoot, including, I believe, yourself, but other firms as well, to bring venture capital and private equity and a lot of things that lived in the private markets into the public markets. And I'm curious how you think about that today, because historically private companies were considered private because they didn't have the disclosure rules and everything else that a public company did. And now we're in this moment where Robinhood,
like 40 Act and the solutions Robinhood.
Accredited investors, Robinhood's doing this. Other people are kind of tokenizing different vehicles, special purpose vehicles that are then buying stakes in OpenAI and SpaceX and other things that are sort of a way around the law potentially.
So I like the idea because to me it's a way to democratize opportunity. I think if you think about how much value gets concentrated in these companies, who captures it? It's like a few of us, right? Institutional investors in Silicon Valley. It should be made available to everybody. So I do think in that sense the idea is pretty good. The problem is it should not be abused. I think you want to make sure you're bringing the companies in at the right part of the risk curve versus you tap into that capital in a way that you put risk on mainstream that can't afford to take the losses on these. So where on the risk curve do we bring this and make it available? If you made it available to Main Street on, hey, invest in the best companies in technology, that's a great way to create inclusive prosperity. If you start saying let's do the highest risk part of the venture capital with these funds, I think that's too risky because so many of those funds actually don't make money. So how you bring in sort of retail into this is an important question.
Mom, thank you for coming in. Congratulations on the book. Appreciate it. It's great to see you.
Yeah.
All right, when we come back, it only took just over 1 gigawatt to get Marty McFly back to the future. Now, NVIDIA and OpenAI need 10 times that to power their new project. So does the country have the energy infrastructure to support the AI power demand? Brian Sullivan has more on that story next. And later, North Island co-founder and chairman Glenn Hutchins. He'll be joining us coming up at 8:10 a.m. Eastern time. We'll talk to him about everything from what's happening with AI to what he sees in the economy right now. Squawk Box will be right back. NVIDIA announcing that it will invest $100 billion into OpenAI, and CEO Jensen Huang telling CNBC that that project will use about 10 gigawatts of power. With the electric grid already near maxed out, some are starting to wonder where we're going to get all that new electricity. Fortunately, we've got someone on the case. Brian Sullivan joins us right now to help put it all in context. Hey, Brian, this is quite the problem to try and riddle.
It is, and I loved your reference to Back to the Future and the T's, because electricity is difficult to understand. You got kilowatts, megawatts, gigawatts, JJ watts, who knows? I'm going to try to put into some perspective about what exactly was announced yesterday, because when Sam Altman and Jensen Huang were with John Ford, they were making this announcement. It was awesome, and markets are moving. I thought, where is all this electricity going to come from? They're talking about 10 gigawatts. All right, so let's put that into perspective, shall we? Because a gigawatt is about, and again, electricity is squishy, guys. Different size homes, different locations. It's hot, it's cold, whatever. I'm going to be very, very general. A gigawatt is roughly 750,000 homes worth of power. 10 gigawatts, let's carry the one, it's about 7.5 million homes worth of electricity, or let's call it one entire New York City, all 5 boroughs worth of power, what they announced yesterday. So how do we make all that power? Again, using very squishy numbers, here we go. The largest nuclear power plant in America is the new Vogtle plant down in Georgia. The 4 reactors combined make about 4.5 gigawatts of power. So you're talking about 2.5 Vogtles. By the way, those took decades and cost $36+ billion to build, or about 15 of the largest new natural gas plants you can build, or you can basically fill up an area the size of Rhode Island with 2,700 massive wind turbines. That's about the power output that we are talking about. Now, to be fair to OpenAI and NVIDIA guys, they are not saying this is going to be one location. They didn't even say where this could be. It could be a bunch of locations in America, in Europe, Australia, and as Diana Olick reported yesterday, maybe we make some of this power in outer space. True story. I'll leave that for her to explain a little bit more. So who does this benefit? Well, anybody that can produce excess power and sell it to a bidder, what they call the IPPs, independent power providers. This morning, Melius Research put out a note saying the IPPs, which are Vistra, Constellation, you got TeraWulf, of course, Oklo, the nuclear startup, NuScale, the nuclear startup. This is one reason that those stocks have done this. But guys, 10 gigawatts, you could have sent 8.5 Marty McFlys back home in that DeLorean. I'm not saying it won't happen, but let's be clear. These are massive numbers, and the capacity does not exist right now, not even close.
Hey, Brian, we had Tom Fanning on a little bit ago, the former Southern Company CEO, and he said part of what might be happening with this is you will get some of the old power systems that were supposed to be going offline by the end of this decade. That's maybe not going to happen. Some of the coal, the plants that use coal to produce that energy. You're going to have to speed up permitting time, probably in a big way, because it takes a long time to get permits for nuclear energy. Maybe 7 years is the average that this works on. And he brought up just the idea that, look, it's going to be hard to even get tradespeople who can perform all those jobs. Some of the troubles they have when they were trying to do the last plant they put together, from everything from the equipment, but especially the skilled labor, the welders and others who know how to put those things together.
They retire. I mean, he's exactly right. The labor is tough, and the longer these power plants are offline, it's not just you lose people. They're like, you know what, I'm 58 years old, I'm out, I'm not going to go back to work. But these things deteriorate. They're subject to the elements. They rust, they have problems. So let's talk about very quickly a few of them. Obviously, everybody knows about 3 Mile Island, now called the Crane Energy Center. At its max, that's about 1.7 gigawatts. That 3 Mile Island that we talked about so much because the 1971 scare, that was 1.7 gigawatts. You got Dwayne Arnold in Iowa, that's a little bit smaller. But right now, Becky, what, about an hour and a half, 2 hours north of where you guys are sitting right now, it's called Indian Point. It's a nuclear plant. It's about 2 gigawatts of power. It's been shut down for a couple of years. A company called Holtec out of Florida is trying to get that thing rerunning again. That's 2 gigawatts. That's a lot. But to your point, you run out of people. You run out of just stuff, right? I mean, just we don't have something open for a couple of years. Try to reopen a gas station after a couple of years, much less a nuclear power plant. I'm not saying this deal will not happen. I want to be clear. Jensen Huang, Sam Altman, everybody else, far smarter, far richer than I'll ever be. But I just want the viewers to understand, as Melius said this morning, power is the secret sauce to making all this work. No power, none of these plans, which are moving markets, help. By the way, EQT, got its stock price raised to 63 by Citigroup this morning because of, AI.
Somebody on Twitter pointing out what Joe Kernan already pointed out in the commercial break, that Doc Brown needed 1.21 gigawatts, not gigawatts. But Joe, you also thought maybe that was just...
I think he mispronounced it. Yeah,
I think
is
the
that clear
actor,
what that
what's
was?
his name? Yeah, I think the actor mispronounced
Christopher
what was in the
Lloyd.
script.
Yeah.
Christopher Lloyd mispronounced what was in the script, and it's a whole
think
new industry.
Joe, you went to MIT, so this is like freshman year learning for you. I think
physics.
MIT was grad school, right?
Physics didn't agree with me, and physical chemistry even less. No, it was physics is weird. It's weird. Mike Wilson's on. He's going to be a genius. He's a genius in physics. I think we're going to talk to him. I was just thinking, Brian, great. So they're going to fix up that Indian Point, like with duct tape and freaking chewing gum and stuff. A nuclear plant. They're trying to put this thing back together to get it. Can they be,
They're doing it right now. They're working.
Can they be careful?
There now.
I mean, they're going to do a good job. They're going to do a good job, right? They're not going to like just slap a few things together.
No, and it's unclear if they even reopen it. But I can tell you this much: there are people there looking at it / working on it right now. Let me give you the good news here before we go to your genius friend Mike Wilson, which is, by the way, a great guy. And Mike, I appreciate him coming on. Europe took all this stuff offline. So that's why Europe's biggest software company, SAP, is about 250 billion or whatever in market cap. We have $4 trillion corporations. At least we have the gas, we have the excess power. And by the way, you can't see it, Joe. I'm wearing a tie that has a bunch of whales on it for a reason, because I'm trying to make a sideways comment that all these power promises are going to lead us back to things that we thought were gone a long time ago. I'm just saying.
Wait a second.
Like whale oil?
Gigawatt.
No, we're not going back to whaling. Whales are beautiful. They're one. They sing.
He's got whales on his thigh. So what do the whales mean?
What's that?
Gigawatt.
You know what? How about this? Here's a good trivia question, and I'm sorry I couldn't be on set. I'd love to be on set with you guys. It's UN week, so to get into New York City, I need a private jet and 400 different drivers. So I apologize for not being there. Here's a great trivia question. Use at parties this weekend. What year did the world consume the most coal for energy? Can anybody guess what year that was?
This year.
Now.
Correct.
Yeah.
Right now. 2025, the world will have never used more coals. Let's save the whales. Make sure that we have the power.
Merriam-Webster had two pronunciations for gigawatt until 2013, I think.
Oh, shit.
Gigawatt or gigawatt. So the actor was not wrong.
We got to go. I also saw Brian the other day.
Take his pronunciation for the book?
Brian, the way that the energy transition is going now, if we look at the last 20 years and our move to renewables and factor out that same, how quickly we're moving, we should be on renewables by right around 2400. Is what it comes out. Anyway, we do.
Well, I'll see you then. I'm gonna make like a tree and get out of here. I'll see you later.
See you later.
Okay, Biff.
Yeah, join us. That's fun movie too. Join us now, Mike Wilson, Morgan Stanley CIO and Chief U.S. Equity Strategist. The reason I said you're so smart about physics is I'm reading how you're basing some of your calls, and you are like tackling the most difficult things to forecast. You're not just like looking at momentum and stocks maybe continuing to go up. You're trying to decide whether there's a recession risk. You're trying to decide whether, at this point, Bullard just said it, you think the recession risk is behind us and we're reaccelerating now. The economy is reaccelerating already.
Yeah, I mean, I think forecasting stock markets is as hard as coming up with gigawatts or gigawatts. Okay, trust me.
Well, you're not even doing stock markets. You're doing the economy and the Fed.
Yeah,
they can't do it.
Well, I mean, look, it's difficult, right? We're trying to live 6 months in the future, and I think the market does live 6 months in the future, as we've said many, many times. And our thesis for the last 2 or 3 years has been very consistent. We think we've been in a rolling recession for 3 years, and we've documented this in quite a bit of detail. The last couple of weeks, we've actually gotten more information around the job revisions, not just the big one that we got the 911,000, but also the 2-month payrolls. And we've done some pretty interesting analysis there that shows very clearly that the trough of the labor cycle was in March, April, okay? Whether you're looking at job cuts or you're looking at the payroll revisions, and that bottomed, okay, with the government recession in Doge, which is what we were waiting for. So that was all of our thesis for this year. So we feel pretty good. We have the right narrative now. The market, by the way, is our confirmation. The market figured this out at the exact same time. So that, like the old adage, you know, trust but verify. We trust our analysis, but the market kind of verifies it.
I was going to ask you, if we went through a recession, why are we at new highs? But you said it didn't happen until the recession was already over.
That's right. Well, typically, remember, Joe, when the market always bottoms during a recession. It doesn't bottom when it's over, when it's obvious to everybody, okay? Now, the Fed's working on lagging data like always. By the way, that's not new either. This is not an unusual feature. We saw the same thing in 08. We saw the same thing in 01. Okay, we documented this. So this is very apropos for how it usually works. The one thing that's missing this time, or it's different than 01 and 08, is the Fed is actually behind the curve more than they have been in other cycles because of that lagging labor data, which we think will catch up in probably November when all those Doge employees who were let go have to file for unemployment insurance.
All right, so we're going to continue, even though we've already bottomed, we're going to continue to get some straggling bad numbers.
Absolutely, that's the way it always works.
They're going to straggle in.
Interesting statistic, okay, which is the market, okay, typically bottoms a year before the unemployment rate peaks. That's typical.
Why should the Fed be cutting now then? They should be raising.
Well, because there are other reasons they're cutting. Okay, first of all, we do need to cut because in order to get a full recovery, right, the rolling recovery now, we need rates lowered. One of the reasons why we've had a tepid, kind of economy in the private sector is because rates are too high for most businesses, particularly small businesses and consumers. So they do need to cut rates. The question is, how much are they going to cut? And that's why we haven't seen the full rotation yet to the early cycle, small cap, low quality parts of the market. Okay, so I believe that last week was sort of a sell the news event because the Fed is sort of dragging its feet. They cut 25 and the market really wants or expects or is priced for, more importantly, for something more aggressive. So we have this window now for probably the next 6 weeks or so where we think the market is at risk of this tension between the Fed being kind of behind its own curve and the bond market and the equity markets really wanting or needing now a more aggressive Fed path.
But the background, your whole overriding theme is that we're early cycle. Isn't early cycle, if you're patient for the next 6 weeks, shouldn't you be buying stocks here then if we're early cycle? I mean, are you telling people right now we're early cycle and it could be the beginning of a multi-year period of rising stock prices?
That's exactly our call. We said very clearly that April was the end of a bear market. That was the Liberation Week was the final piece of bad news you typically get at the end of a major bear market. And by the way, just to be clear, the average stock was down 35% between April of 24 and April of 25. That's a proper bear market. So the new bull market began in April, and now it's evolving, and the stock market's ahead of kind of the data as it typically is. We've seen, by the way, it's because small caps and low quality early cycle stocks haven't outperformed. They have gone up in absolute terms significantly. So the market is telling us that that thesis is correct for now. And the risk of that is that the Fed stays behind the curve longer than the market expects, and we have a little digestion here, which could be a meaningful correction in the next 6 weeks. We'll see how it goes, but either way, that doesn't change our thesis that the early cycle rolling recovery has begun.
I can see going against a consensus, but just about everything you just said is 180 degrees from where most people think we are.
Not the first time.
Not the first time. Well, time will tell.
That's right.
And we'll remember, and it's very, we love having you on, as I said, especially, even Brian Sullivan was excited. Did you see that?
Yeah, marginally, yeah.
And you didn't show enough excitement, enough genuine excitement. Mike Wilson, thank you.
Take a look at the futures right now. Dow looking looking to set open higher, 53 points higher. You're looking at the S&P 500, call it marginally down, and NASDAQ off about 4 points. We're going to get over to Dom Chu with this morning's look at the pre-market movers. What's on tap here?
All right, so Andrew, Joe, Becky, first up we got shares of Kenvue, which are gaining back some of the losses from yesterday, up by about nearly 5%. Remember, the Monday declines were 7% or so. During a press conference on Monday, the White House drew a yet unproven link between acetaminophen, that's the active ingredient in Tylenol, and autism in children whose mothers took the drug during pregnancy. The drug maker has strongly refuted those claims, so those are both sides of the argument there. The shares are still down about 22% so far in the past year, so we'll keep an eye on Kenvue's bounce back today. Next up, you've got Dow Component and Apple. That stock is finally turning positive for the year. It's still down about 0.5% in the pre-market. The company released its new batch of iPhones. The new products mark Apple's first significant redesign in years, and analysts say that some of the early indications suggest that demand is strong. That stock is up about maybe 2% for the year, 50% off its low back in April. And we'll finish up with shares of Tesla hitting a high for the year-to-date period this morning. Mizuho right now is raising its target price for Tesla and several automakers, saying that the tariff impacts for 2026 appear less severe than previously feared. The bank also lifted Tesla's target price from $375 up to $450, and they keep their outperform rating, so Tesla shares up 1% pre-market. Now, for more on that and other top analyst calls of the day, just head over to cnbc.com/pro. Subscribers get all the detail and context around those notable upgrades and downgrades each day. Andrew, I'll send things back over to you.
Okay, Dom, thank you for that. Appreciate it. Great to see you.
All right, coming up, North Island, Chairman Glenn Hutchins on a number of issues that matter to your money. Then later, Chicago Fed President Austin Goolsbee will be our special guest. Squawk Box coming right back.
All right, welcome back, everybody. We know the news at this point. NVIDIA is saying it's going to invest $100 billion in OpenAI. It's sparking a global tech rally. Computing infrastructure company CoreWeave, which went public earlier this year, is just one of the many companies participating in that rally. It's up about 7% yesterday and another 1.25% this morning. If you take a look at it, that stock has been on a tear since its IPO earlier this year. Joining us right now is Glenn Hutchins. He is North Island's co-founder and chairman. He is also the lead independent director of CoreWeave. And Glenn, it's really a pleasure to have you here today.
Great to be here. Nice to see you guys.
You're somebody who wears a lot of different hats, a former member or director at the New York Fed. So we thought about starting with the economy. We've got a lot of things to talk about with North Island and crypto and the moves that we've seen there. But AI is really the story of the moment. And that's why I think we need to start at this position. What did you think of what you heard from OpenAI and NVIDIA yesterday?
My immediate reaction, I wasn't the least bit surprised. My immediate reaction was, this is the kind of scale transactions and scale balance sheets you're going to need to finance what's happening in AI. I've never seen anything so huge as this. When we started building out the infrastructure for semiconductors and hard drives and all those things 20, 30 years ago. And a very similar problem where you literally could not finance them in normal capital markets. You had to go to places like Singapore and Taiwan where they basically offered you their government balance sheet in order to get these things
that's
done.
why the buildup got
And very similar thing is happening today. And so it doesn't surprise me at all that this has happened, because you're going to need balance sheets on the scale of countries in order to get this done, or the largest companies in the world like NVIDIA. Now, when I was last year in this building with you guys, it was the day of the CoreWeave IPO. And there was a lot of skepticism about the company's business model. And the IPO was a very tough one.
Which, by the way, for people who haven't been following along, this company builds data centers for AI needs.
Yeah, but what the business model was is highly innovative, in that they figured out how to finance this huge AI build-out, which was to take a project finance framework, taking contracts for the offtake from the cloud computing facilities, matching them with financing that was matched to the cash flows for 4 to 5 years of the useful depreciable lives of the GPUs. And then at the end of that, the company CoreWeave owning a free option on the used GPUs. So that sort of project financing structure was one that people didn't really understand how CoreWeave was doing it, layering one contract on another. In the last several months, that's become the standard for financing these deals, and they've been adopted by peers and rivals all over the industry. And as a consequence of which, these companies are growing very rapidly. Street estimates, CoreWeave is going to double its revenue this year over last, and is projected by street estimates to double next year. That's just the tip of the iceberg for all of the financing that's going in, but it's become the template for how this is being financed.
How concerned are you or not, though, long term about how all of these businesses ultimately are financed? Because this is dependent on those GPUs being valued as an asset that is meaningful, that can be used sort of downscale. You use the more advanced chips for the most advanced stuff. These chips that'll be 5 years old will be used for less advanced processing and other things. At least that's the concept.
Right.
But nobody knows if in 5 years from now that those chips will have that value or not.
But you extract roughly 2 times your money from the chips over the 4 to 5 years of the contract. So they're fully depreciated, basically free, and you have an option to do with them if you want.
Right.
And you can look at all sorts of decline curves for similar types of technology products and guess at what you think those things will be worth. But they don't have to be worth anything for these companies' things to work. Is the point. But the bigger question I thought you were getting at was, is all this infrastructure that's being built going to be able to be used profitably?
Yes.
I think
that's the bigger question, and the sort of bigger idea that in some ways you could look at this as vendor financing.
It is vendor financing. And by the way, the need to come from other vendors like Dell, but that's not unusual in the build out of something like this. Particularly when the vendors have these massive balance sheets that are needed to support the entrepreneurial economy as it grows. GE did it forever. IBM Credit did it forever. I mean, this is not a brand new.
GE financing ran into trouble at some point.
Well, that was not because of this. That was a different story.
Well, you can go back. Look, Lucent. There were examples where vendor financing went off the rails, and people, when they were announcing these deals, people went crazy. The stocks went up and said, "Oh my goodness, oh my goodness!" And then all of a sudden, a couple years later,
the big difference between this, you mentioned Lucent. The big difference between this and building out the CLEX,
right,
is that those were, if you build it, they will come contracts. They went out and built massive fiber optic infrastructures, and nobody took the demand. Eventually, it got taken up. Now it's all taken up. In this case, these are backed. I said this is why the project finance model is important here. These are backed by 5-year contracts with people who are doing the offtake, people like Microsoft and OpenAI and Claude and Google and others who are taking the output of these contracts and are guaranteeing the payments. It's a very, very different kind of economic model. That's why each of them is, I think, coherent as a commercial building block. And that was the model that CoreWeave innovated that attracted me to the company. When I kind of figured out what they were doing. My favorite investments are ones where the market hates it. And I can figure out something I think is very unique about it and try to invest in it.
You said something at the beginning that I had not heard this analogy before, the idea that the foundries were all built in places like Taiwan because you needed a country-sized balance sheet to deal with this. Are these companies going to be big enough, or does the United States need to invest in this or risk losing it to other countries?
Well, so that's a very, very good question, right? The one thing we have uniquely in the United States is these huge capital markets that can fund a lot of these things.
But I think we're going to need the largest sovereign wealth funds in the world to back these things. The largest pools of capital will have to be somewhere in the financing layers that will enable these large facilities to get built. And that's what will happen. You have to balance sheets express at the national level. It could look more like sovereign wealth funds than like government funds.
Do you think with NVIDIA owning a piece of OpenAI, does it change the dynamic with competitors? So
I don't think so. I don't expect, we don't know, this is just right now it's a press release. But I don't expect either of the two actually do the compute themselves. I think they'll need to reach out to the CoreWeaves and other cloud computing.
No, what I mean by that is, let's say NVIDIA comes out with a next generation chip. Does that chip get prioritized to OpenAI first for access versus Anthropic, for example? And does the Anthropic, or if you're Elon Musk and you run Grok, are you saying to yourself, you know what, I really need to find a competitor that I can use in terms of chips? The problem being, of course, that NVIDIA is the most advanced.
That's interesting. The only relevant experience I have with that is that's what happens today at CoreWeave. In other words, we are the only company that can test these new chips at scale and prove them out before they get rolled out around the rest of the industry. The reason why I say that is that's the major issue. Is you get a new chip, it needs to be tested in production at scale before it can be produced around. So it can be distributed around. So that'll be the major gating item, is who can do that, as opposed to who gets that chip.
But I think to Andrew's point too, it's all these weird frenemies, relationships, and investments kind of changing on a daily basis, trying to figure out, is it ever going to draw government scrutiny about whether this is good or not? Although I would assume the Trump administration appreciates both NVIDIA's investment in OpenAI and the investment in Intel, because they're investing alongside the United States when it comes to Intel.
Look, I think the Trump administration understands what the Biden administration did not, which is that these are companies that make our nation globally competitive. I think a light touch, a regulatory approach is appropriate, with the understanding the boundaries between these companies as are necessary. But at this point, I don't see I can understand why there's people are looking at these things and saying, is there a little smoke here, is there fire? I don't see any fire. I just see the people who are kind of creating all these capabilities having to use the combined financial resources to make them work. I mean, the scale of this thing is vastly bigger. It's like raising a teenager. You wake up every morning and it's bigger again than you thought the day before. The scale is just astounding.
And sometimes it works well, and sometimes it does not.
Yeah, exactly.
We didn't even touch on the energy issues. We've talked a lot about that this morning, too. We had Tom Fanning on earlier. Brian Sullivan was just digging through some of these things.
Fanning.
What are the limiting factors on energy, and do you think we will solve them and resolve them?
Good question. I'm not an expert there. There are other people who know a lot more about this. The thing I will say, if you look at these big contracts now, there are facilities that are out there that have the energy to them. So the near-term plan for the companies that are building these things out there is the energy. And that's kind of one of the things, one of the reasons I think when OpenAI and NVIDIA look around for who's going to do this for them, they'll find that getting the energy and getting the established data centers is most straightforward by going to the cloud computing community than trying to build it themselves. But then, so the energy problem becomes a next step problem. And I think my view is you have to have an all of the above solution. We need renewables, we need natural gas, we need to build nuclear. I think one of the great tragedies of recent American history was that we didn't build up nuclear over the last 30 or 40 years. Thought that was a big mistake.
Since we're throwing around headlines at you, I'm curious what you think of the HB1 visa situation as somebody who's spent a lot of time in the tech space and also in the policy and politics space.
So I would summarize it as a tariff for labor. And it increases the price kind of labor, which will mean in some cases, some types of labor will be uncompetitive in certain places, like some of these Indian outsourcing companies that are bringing people in who are making wages in the hundreds of thousands of dollars. This will be I'm not even sure, can't tell yet whether it's annual or one time, but let's say it's annual.
I think they said one time.
Well, no, but then someone else said annual, so I don't know, right? But it'll increase the price of that labor. In the AI community, I don't think it really matters. It's a rounding error given what people are paying for the talent in that space. But what it does, one reflection I will give you from the AI world is I would say roughly 2/3 to 75% of the most important scientists I meet do not speak with an American accent. They're almost all immigrants. I'm not exactly sure how this might discourage them coming to the United States for training and research as opposed to working in some of these other companies. But I think it's vitally important for us to continue to be the place where the world's most important talent comes to do its work. And I don't know yet how this might influence that, but that's the thing I'd be most worried about.
Glenn, let's talk crypto. Yesterday, there was a pullback in some of the cryptocurrencies. North Island is so focused on early financing of crypto projects. I don't even know if it's worth mentioning the pullback yesterday because 3, 4, 5% pullback doesn't seem like a huge deal when it comes to some of these currencies. But where do you think things stand right now? How does it tie into what we heard from the Fed last week?
I thought I'd mentioned this to you before, but I started investing in crypto in 2016.
Yeah.
About 5 years ago, the team that did that for me, I spun out into a separate entity. And they are now, in the last several years, they've been very successful. In the last several years, they've become a completely independent investment organization called North Island Ventures. And so I'm personally not directly, I put all my resources in crypto there, and I'm personally not directly investing in crypto anymore, entirely through them.
You still have large exposure?
Through them, yeah. But I would say in terms of the crypto, the landscape, it's become a means of exchange, otherwise known as stable coins, a store of value, otherwise known as ETFs, and a unit of account, otherwise known as a blockchain. And right now, focusing primarily on the financial area, they're building out programmable global asset ledgers, which are vastly lower cost, and retooling basic finance functions for trading, lending, and securitizing with huge efficiency benefits. So the ledger piece of it is the part that's really going to create a huge amount of magic for finance. I personally rotated a couple of years ago when this team set up, investing much better than I could, and began looking entirely at AI and other over-the-curve of the earth kind of investment opportunities.
Okay, let's talk about what the Fed did last week, what you think as a former director at the New York Federal Reserve.
Okay, yeah, okay. We are bouncing around today. I feel like a pinball. I think 25 basis points was about right because of recent weakening of the labor markets. I personally would wait there because we also have reason to be very concerned about rekindling inflation expectations. The question is given these influences on the economy, some of which are going to be relatively short-term tariffs, which create stagflation, a little bit less growth, a little bit less inflation as a consequence of tariffs. Which way does that cut? You've got the cuts in government spending, and you have the reductions in immigration. Cuts in government spending are downward, cuts in immigration are bad for the labor market. So where that comes out in terms of the mix of whether we need to lean next against inflation to keep inflation expectations from rekindling, or whether we need to lean next in terms of another 25 basis point cut, I don't really know. Yeah, and we'll just have to wait and see which of those two, because we're stuck in an area where there's reason to be concerned about both. Let's not forget that that we still are well above the trend inflation that the Fed has said they want to get to.
How do you feel about the economy overall? I mean, just based on the businesses you're involved in.
I think, look, the American economy is terrific. Even the measures of labor market weakness are at the low end of the economy, unfortunately, right? But the American businesses are thriving, I think largely, but not entirely, as a consequence of their incredible investments in technology, which are now starting to really bear fruit. I think we're in a productivity revolution pre-AI. We have a younger generation of CEOs and senior executives who are digital natives. They know how to use the massive investments in technology they made in their companies. And when they harness AI, the other thing I would say about AI, as opposed to cloud computing, which was very hard to get uptake by conventional executives inside big companies, the AI, this new generation of executives is embracing AI very aggressively. So I think we're going to see another round of massive productivity increases. I think there's a good chance that the productivity increases that come from technology and AI over the next 10 years can do for our budget deficits what the technology did in the 1990s. actually create a level of growth that helps us solve that problem more than we expect because of the productivity boom.
Well, you think some of the deregulation and some of the, I don't know, pro-business elements of the big, beautiful bill have offset some of the negative headwinds like tariffs? I mean,
look, I would say that I'm not exactly sure. I don't know how to balance that out, Joe. I do say I'm a fan of deregulating the economy.
Yeah.
I think the
expensing, the immediate expensing that's in
I'm not
there.
sure if that's deregulation.
No, I'm not saying that. I'm saying that, but there's tariffs and then there's other
things. But I think a broad attempt.
The worst case scenario didn't happen with the bad orange man getting in power. That's all I'm saying.
Yeah. Well, in this case, I mean, my view is I was pretty clear that I thought that the Biden administration made very significant mistakes with their very overzealous regulation and their appointments in the regulatory sectors, particularly the FTC and the SEC. I was very clear about that, and I think that's been a real positive.
Thank you for coming in, and by the way, happy birthday, I think.
Thank you.
Is it your birthday today?
Today's my birthday.
You chose to spend it with us. This is your birthday present?
Yeah, I did. Yeah, well, I thought that was.
Glenn, was it a big one?
70 years old too.
You didn't have to answer. I know.
It doesn't matter.
Congratulations.
I'm always it's a lucky number. 7's a lucky number.
70 is the way I'm going to call them. I'm facing the same horrific. I mean, it's a privilege.
I can't think of anybody I would rather spend it with than Becky.
There you go.
Okay.
Coming up, folks, Chicago Fed President Austin Goolsbee is our special guest. We're going to talk to him right after this short break.
It's that impact.
All right, up next, Chicago Fed President Austin Goolsbee on the most recent rate cut and what he's seeing on the inflation front. We'll talk to him about that and much more. And then a deal to meet security concerns for TikTok. The president expected to sign an executive order this week in support of that deal with Oracle, Silver Lake, and other investors. We will speak to former TikTok CEO Kevin Mayer about the deal, what it means for users, and much more. Squawk Box will be right back.
done that for us.
The Chicago Fed introducing new labor market indicators this morning that combine private sector data with official labor statistics for a real-time view of hiring, layoffs, and other job information. And join us now, Chicago Fed President Austin Goolsbee. How you doing, Mr. President? It's good to have you on.
We got some new data. I'm excited.
And you know why I like it? Because, say what you will about, the big kerfuffle with the BLS firing and all that stuff. It did highlight that in recent years, it's been hard to collect the data. People just, maybe after the pandemic or whatever, and anything that gives us more data and gives the Fed more to work with to make decisions is a good thing. What do you got?
Look, I totally agree with that. I'm a proud member of the Data Dogs there on the FOMC, and one of the first rules of Data Dogs is sniff everything that hits the floor, and so what the Chicago Fed has done is go get 11 different data sources, private sector, public sector, state level information, and national level information to make these 3 labor market statistics that we can measure. One is a real-time estimate of what will be the unemployment rate when it comes out eventually. One is the layoff and other separations rate for workers, and one is what's the hiring rate, again in real time, for unemployed workers. And it'll just give you a sense of where we are in the job market, and the statistics that are coming out now show a lot of stability, that we have a kind of a low hiring, low layoff and separations job market, which is unusual, but it looks pretty different than if you were just looking at payroll employment, where you've seen big swings in the aggregate numbers.
I had deja vu, Austin. Because you have mentioned some other really good dog analogy about, like when you're going on a walk, it takes walkers or sniffing each other. What was
This is a reference, I think.
That's the other thing.
what was
There's
your
a time
laughter?
for walking and there's a time for sniffing, and we need to know the difference.
You've used that before, and this one you said was anything that hits the floor,
Sniff everything.
You're like Dan Rather or something. You're slicker
What
than
do you mean
snot
I'm
on a
like Dan
doorknob.
Rather?
Because he came up with all these really like Texas, Texas,
I got you.
Also, let me ask you. Maybe you got another dog thing that said. Did you guys move the target, the inflation target? Did you move the goalpost to 3%? Because you're cutting at 3%. People would criticize that.
You know the rules. I'm not allowed to speak for anybody else. But for me, heck no. We did not move the target. The target is 2%. We have to get inflation back to 2%, period. We must get milder inflation numbers looking forward. It's not a monthly 2%. It's over the long run, what's the through line? But anybody saying that we're raising the inflation target, I think that's dangerous talk.
Okay, because I think I might have. I was just asking a question. I wasn't saying you're doing. Are we still? Can you tell me that we're still in restrictive mode, or do we need to wait and see?
If we're still in restrictive mode, or we need to wait and see. I think a little of both. I think we are restrictive, mildly restrictive. It's worth noting, if you hold the rate at some level and inflation creeps up, you're passive cutting. So I don't see that the real rate is as restrictive as it was before we started getting this inflation. But I still think in the period before April 2nd, before we started getting some of these shocks, I thought we were on the rate down. As inflation comes down to 2%, we could still go down a fair amount with the rate. What's neutral, I think, is below where we are now by 100, 125 basis points, something like that.
Were you asking him about another dog thing, or what? I thought you wanted to ask him.
No, it was dog.
It was a dog, because I like, I got 3 of them, and one of them is 3 months old. It's a nightmare German Shepherd. But and actually, when Glenn said that about a teenager every day growing, I mean, the dog, I just wish it was housebroken. I don't know what. I keep trying to show him. Austin.
Here's how you do it.
Yeah, he doesn't have thumbs though. You know, he can't flush.
Joe's neighbors are upset when he goes out to try to demonstrate for the building.
It's like,
yeah, there's a visual.
That's a visual that you can't.
Thank you, Austin.
Did you ever think you might say, I wish we did 50? Was there any thought in your mind that you could have been one of them?
Not right now. No, I'm still. I'm okay with moving to be in a better spot, and I think eventually, at a gradual pace, rates can come down a fair amount if we can get this stagflationary dust out of the air. But with inflation having been over the target for 4.5 years in a row and rising, I think we need to be a little careful with getting overly upfront aggressive.
Hey, Austin, that kind of brings to mind a question I've been kicking around since yesterday when Stephen Myron spoke at the New York Economic Club, or the Economic Club in New York. He said that he would dissent in the future too, just like he did this time. That tells me that he kind of read the room and his opinion is nowhere near where the rest of the voters are. Is that a safe assumption?
Well, again, I'm not allowed to opine about what other people on the committee think or what the committee thinks as a whole. For me, I think the neutral rate of interest is somewhere below where we are right now. And if we're on path to get inflation back down to where it's supposed to be and where we promise we're going to bring it, I think rates can come down some. If you look at the dot plot where everybody gives an opinion of where do they think rates are going to settle, there's a big mass of almost everyone on the committee saying that rates can go down something, as I say, that ultimately the rate might settle around 3% with inflation at 2%. And I'm comfortable with that as a marker.
Hey, Austin, I've got a different question for you. For a long time, folks in your position and others have talked about the independence of the Fed and suggested that if the independence of the Fed were put into question, the bond market would react, that the stock market would react, that it would have a demonstrably deleterious effect. Why has that not happened?
Deleterious. I like what you did there.
Why has that not happened?
Alliteration.
I don't know. You definitely don't want to get in the head of this. It's forbidden to try to get in the head of the other members of the FOMC, and it's very difficult to get into the head all the time of the market. But I will say, I absolutely believe that if you look at other countries or if you look at times in the United States when there is not monetary independence from political interference when setting the interest rate, inflation comes back, the unemployment rate is worse, job growth and economic growth are worse. So I think it's critically important that we maintain monetary independence. Maybe the market believes that ultimately there will remain monetary independence, that nobody would go mess with a good thing that we have had, or maybe they think that conditions are going to make clear that the people calling the shots are the FOMC and not anyone else.
Yeah, rarely does the worst case scenario ever come to pass. A lot of hand wringing. I mean, we're in the media, so we got to do these things. But how about oh yeah, we just had a couple of people, Jim Bullard, who you know, and later later Mike Wilson on saying that we're going to reaccelerate, that we're past the low point in labor and economic activity. Is that possible? And why would we be cutting them? But then he said Mike Wilson said we still need to cut to make sure we get a real recovery. But the low point is already passed.
It's possible. I will say, if you look at these new Chicago Fed labor market indicators, they don't totally suggest that. So the labor market continues to cool at a sort of a mild to modest pace. If you look at the aggregate jobs numbers, they've turned decidedly sour compared with where they were, say, a year ago. But my caution on just looking at that, of course, is that the supply side is moving all around with immigration and some other things. So it is possible. And one of the things that we compute in the Chicago Fed labor market indicators is what's the probability of movement of a various size in the unemployment rate. There is the possibility that the unemployment rate goes down. It's a little lower probability than that it stays the same or rises for the coming month. You got to manage the risk, and so I think to the extent that Bullard or others are highlighting that the economy doesn't have to just deteriorate, it could be getting hotter, and if it got hotter and inflation's already been above the target for almost 5 years, you would need to think about that.
Right. You know, Austin, all politics are local. They always say, and I live in New Jersey, thank God. But in New York, we talk about the possible next mayor a lot, Mamdani. And, you know, as a trained economist, I don't know if you have any viewpoint. This guy is very charismatic. I don't know what kind of political future he has, but maybe you could just weigh in. Maybe he'll be president someday. And you served in one socialist administration. Would you serve in another socialist?
No, look, Joe, you know that when you become a sworn member of the Federal Reserve, you're out of the elections business.
Oh my God. You can't even talk about the
get off my lawn nature in politics. Now I could just be a consumer of it.
Well, okay. Can you talk about, you don't want to talk about Mamdani at all? You're not going to endorse him?
No, of course not. What is that? That's not the Fed. Look, the Fed's job by law
I know, but we're all trying to, we're all grappling in New York. This is, you know, the financial capital of the world. It still is, and it's just very strange juxtaposition that, is there any way out of this, Sorkin? At this point, there's no way out of it. It's like 90%, Austin, and we're going to be dealing with it probably. Are we not? Is it 90%?
At the moment, if you believe the betting markets, you look at the polls, he looks like he is going to be the mayor of New York City.
I mean, Austin, it could get so bad that the Fed might have to do something because New York is that important. And
we got a job.
You got to cut rates for what's happening in New York.
Cut rates for New York. We stabilize the prices, maximize employment. If anything's affecting prices or jobs, then we got to think about it. Other than that, you got your own problems. If you want to move out here to Chicago, we got plenty of space. Real estate
I thought you were going to say we got plenty of problems there too. You're right. You do. All right.
That's kind of the new headline for that. Fed to New York, drop dead.
Yeah, Fed to New York. Yeah, Fed to New York, drop dead. Goolsby to New York.
Fed to New York. You don't get your own interest rate.
Yeah. Okay. We might. I don't know. All bets are off. Thank you, Austin Goolsby, Mr. President.
Great to see you guys again.
Happy birthday, Mr. President. It's not his birthday.
No, but it's Glenn's.
It's Glenn.
There you go. Glenn Hutchins' birthday. Up next, the deal to keep TikTok alive. Former TikTok CEO Kevin Mayer joins us next. We'll be right back.
management.
Welcome back to Squawk Box. President Trump planning to sign an executive order this week supporting a deal that keeps TikTok operating in the U.S. under a new American-led joint venture overseen by Oracle. Joining us right now is Kevin Mayer. He's Candle Media's co-CEO. He was also the former CEO of TikTok, was a senior executive, of course, at Disney, and so there is so much to talk to you about. I can't even get over all the headlines. But let's start with TikTok. You lived inside TikTok for a hot minute or so, maybe a little more than that.
Yeah, a little more than a minute, but yeah,
and
not long.
So I'm curious now, when you look at this deal, do you say to yourself, this is going to be a great success? Do you think that people are going to, I mean, it sounds like people are going to have to re-download this app. I don't know how you think this is all going to work.
Yeah, I'm not sure people need to re-download the app, but here's what I understand about the deal, and it's what I've read in the press mostly, and I don't have that much insider information, but I'll say this. ByteDance will own less than 20%, so that's good, and that comports with the law, I believe. New investors are coming in. I think they're very high-quality investors. You have Silver Lake Partners, big investor, big private equity firm, Andreessen Horowitz, from what I understand, and most importantly, Oracle. And Oracle seems to be the company that's going to oversee data safety and oversee the algorithm.
Do you believe the Murdochs are going to be part of this, or just on the board?
I don't know. That came in really late, and I don't know if they're actually in it or not.
When you joined the company, did you ever think to yourself that the Chinese, the government, was using this app for nefarious purposes, or would use it for nefarious purposes?
It's very hard for me to say. I was there in 2020. My entire tenure was on Zoom, so it was a very, very awkward moment. But I will say the two concerns that were expressed by the American government were, one, data flowing to the Chinese Communist Party. That's solved now with Oracle taking charge of that perimeter, and I don't think there's any data coming in out of China against that perimeter. I think that's pretty safe. The other was the algorithm itself being used to feed videos to Americans and other Westerners and use it for propaganda. And I think with Oracle's oversight of the algorithm and the separate instances of the algorithm that are going to be part of this deal, I believe that's solved. So I do think
what are the separate instances? I still don't understand it.
Well, as I understand it, and I could be wrong, I think the details are a little bit murky, actually. But I think there's the code that exists in China. They're going to take that same code, move it over to Oracle-supported servers. And then I think the code will be managed separately. And so as improvements happen, some of that code might come from China to the U.S., but if so, it'll be very thoroughly vetted.
No black box in that.
No black, yeah, exactly.
Do you believe that the algorithm can be updated and effectively be as good and as effective living in a separate environment run by Oracle as it has by ByteDance? That's sort of
that was a big question 5 years ago, and I was grappling with that when I was CEO of TikTok. I think AI generally, and that algorithm is an AI, curation recommendation algorithm. It's a little better understood, and people and engineers in the West have, been working on AI, and AI is in everyone's lips these days. So do I believe that American engineers have the capability to understand, get underneath the code of that algorithm and update it and operate it on their own, and maybe have two divergent code bases over time, China versus the US? I do believe that can happen.
Let me switch gears on you for a moment. Put your old Disney hat on for a moment. What did you think when this whole Kimmel situation went down, and what do you think now?
It's a tricky situation, obviously. If you're Bob Iger, who's a very good friend of mine, my mentor for years, and a very courageous CEO as far as I'm concerned, and a great CEO, you're faced with a bit of a tricky time. On the one hand, Sinclair and Nexstar, 70% of your base of local stations, you clear your programming, threatened to not show the Jimmy Kimmel Show. On the other hand, Jimmy Kimmel is an old friend and a great talent. I'm sure Bob did not want to take that show off the air. So look, it was a tough call. That's what Bob gets paid to do. I respect him and I respect Jimmy. Now that it's resolved, I hope it just moves forward.
Okay, let me ask you the harder question. Yeah. How much of the pressure that was brought to bear on Iger do you believe was political? Which is to say that, do you believe that Nexstar, which pulled Kimmel, was doing that because of a view that advertisers and an audience were going to walk away from them, or they were doing that because they were worried that Brendan Carr was not going to approve the transaction to allow them to merge?
The answer is I don't know. I really don't know. I wasn't involved in those discussions. I don't know what Nexstar CEO is thinking. You're right. Both things matter. Was he going to lose an audience?
Right. And both things can be true, by the way.
Both things can be true. Right. I just don't know which they are. But I know Brendan Carr, was interested in this situation, and he has to, approve that merger that they're undertaking.
What do you think about Sinclair? I mean, the other piece of this is, at least thus far, I don't know what'll happen tonight, but it doesn't sound like these affiliates are necessarily going to carry Jimmy Kimmel.
That's really going to be up to Sinclair to decide what to do with that.
But you understand better than anybody the dynamic between a Disney and its affiliates and how that works, right? Some of these affiliates, by the way, they need the Super Bowl a year from now. They're going to want certain aspects of what Disney and ABC are providing. But this idea that you can sort of pick and choose off of Chinese menu, I don't know if that is allowed either.
I think we're back to the 7, what were they, magical creatures, and what the Disney, look at that bomb of, what was that, Snow? We're talking about, there's a lot of people that aren't going to go to the theme parks because they're MAGA now. They're furious about that. I mean, this is going to be brand damage for Disney if they left them off or if they brought them back. Half the country's going to be mad if they left them off. The other half is going to be mad that they're bringing them back. I think it's a real brand problem.
But Joe, as you're saying, half is going to be angry no matter what you do. So I think Bob just has to do what he thinks is right for the company. He's a steward of shareholders' value at Disney. He is.
Okay, and he hasn't always done what's good for shareholder value. He's done.
I think he's done almost always what's good for shareholder value. I really respect
By the way,
that.
I think that was greenlit when he wasn't there.
Which one? The 7 magical creatures, or?
But I think the broader question, and as somebody who's living in the media, who's a CEO now, is just how much you think this is being driven by the politics of this country, meaning what Joe is referring to, the idea of a certain sector of the population based on politics deciding, I like this company, I don't like this company, I'm going to boycott this company, I'm going to love this company over politics.
If I could get Kimmel to apologize, it might help.
Hold on. Versus,
but he's not going to.
But versus a sense that the administration has a particular view and that they're going to use that view in the context of how they regulate and otherwise allow certain things to happen with business, right? Like that is I think the fundamental crux of it. How much of it is coming from the actual genuine business interests of serving an audience and advertisers and all of that versus worrying about the regulator trying to impose their politics on the situation?
I think it's a legitimate concern, and it's a tough thing to navigate for sure, which is why my business, Moonbug.
Well, let's talk about that.
Can we move on to that?
Yes. Please do.
Right, tell you the truth.
And by the way, how much of that, I mean, that's killing it on YouTube, for example.
Killing it.
Killing it.
We have 1 billion subscribers to our set of IP on YouTube, including Cocomelon, Little Angel, and Blippi. And Cocomelon's great. I love that business. It's based on YouTube. It's massive. We get 12 billion views of our content every single month. We've developed this thing called Moonbug Partner Solutions, where we are selling our own ads and providing value to advertisers and brands on YouTube. YouTube sells our ads. We also were the first ones to take a YouTube to streaming perspective. Cocomelon, we took those episodes of Cocomelon, they were 3 to 7 minutes long, made 1-hour episodes out of them. Each season was 3 one-hour episodes. Put 10 of those seasons on Netflix, and it was the #1 show on Netflix from 2021 to 2025. The #1 show, period, not just kid show. So we've taken that content. It's really YouTube-based and multi-platformed. It, movie coming out with Universal in 2027. We have licensing and merchandising. It's just a great business.
Shows too. The shows that travel around, those are licensed by you guys too.
Sorry.
Blippi and Cocomelon.
Yes. Those traveling local entertainment shows are ours.
Quick AI question for you, because I know you're investing in AI. People are thinking about text versions of AI. Google's investing heavily, by the way, in video.
Yeah.
I'm curious sort of how you think about where all of this AI, what becomes more valuable long term? AI that's great at text, or do you think it's really a bet on video?
Well, I think both are very important, obviously. There's text, there's voice.
Right.
Smash Capital, my investment fund, has a big investment in something called 11 Labs, which does really well. It's a great voice AI, and voice is important as an UI and interface for people to interact with AI systems. And video is going to be important too. It's going to affect Hollywood in many ways. On the text side, you could say it's going to impact how writers write and how help that creatively. On the video side, this should bring down costs from computer-generated imagery.
Say, your margins should go up eventually.
Margins should go up. Now, the flip side of margins going up and costs coming down is that barriers to entry are falling.
Right.
And it's easier than ever to make high-quality video. If you're an incumbent, you don't like that very much. Right. So, if I go back to my Disney days, how do you overcome this huge amount of content flowing into the ecosystem? Brands, characters, and IP that's not replicable. That's how you win.
Kevin Mayer, we're up against a hard break. We love seeing you. Can you come on back?
Of course.
Thank you for this.
Maybe
appreciate it very, very much. Squawk on the Street is up next.
Good Tuesday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with Courtney Reagan, Mike Santoli here at Post 9 of the New York Stock Exchange. Kramer and Faber have the morning off. Futures pretty solid here, coming off the 28th S&P record high on Monday of the year. It's a packed morning of speeches by Fed officials and by world leaders at the UN General Assembly, including the president, later this morning, 10-year 413. Our roadmap begins with NVIDIA, though, and OpenAI's $100 billion mega deal, which did spark a tech rally and sent major averages to record highs yesterday.
Plus, Fed Chair Powell getting ready to speak about the economy for the first time since cutting rates. It comes amid divergent views from other policymakers about the path of rates. And shares of Kenvue rebounding in early trading following yesterday's sharp drop after President Trump made controversial comments linking Tylenol and autism.
Let's begin with the markets extending their record run, fueled by NVIDIA, of course, and the tech trade yesterday. A lot of desk notes, guys, over the past 24 hours looking at the creativity in financing and layers of contracts and what this means for sort of NVIDIA's business model and the overall AI trade.
Investors are confused to what degree they need to get kind of messy with the details of this, I think. I mean, because there are obvious questions. Is it just kind of a vendor financing thing? Is there enough power for this? All those things are out there. But the risk in the AI trade up to this point has been overthinking it, right? And overthinking it meant, well, are we going to result in overcapacity? Aren't we where we need to be in terms of this phase? Don't we think we have to diversify the winners, find other ones that haven't worked yet? So I think that process of questioning is still underway. Yesterday showed it's really hard to fight it. If you go back the last 3 weeks, Oracle's revenue guidance, even last week, the NVIDIA Intel deal, which everybody said, probably not that big a thing, the stocks ripped on it. And so all of a sudden, it's just dangerous to push against it. Beyond that, I do think that you have to start paying attention to whether this is like the trade that's eating the whole market, because it's been this really orderly grind higher in the S&P 500. Everyone loves the backdrop of the Fed getting dovish into a good economy, but you wonder when we've used that up, I think, on a broad basis.
Does this make us want to refocus, though, on the tech trade? You're talking about the S&P 500 grinding up nicely, 28 record closes. Yeah. But the focus is, again, all back on tech, all back on AI. Are we going to lose the broadening that we were hoping for?
I don't know if we lose it. I think we're going to be, you're kind of getting the benefits of the good environment at different rates, depending on what part of the market you look at. Look, there are parts of consumer and industrial that have been punished for either tariff exposure or the fact that their consumers not doing well, or something else. I do think that when it comes to the tech trade, it's responsible for a lot of the bullish talking points, such as earnings for the third quarter are not even being revised down as they normally are. Margins are holding up. Like, all that stuff is really just downstream of the dominant tech companies still are earning the way they're earning.
And it's also circular, right, with NVIDIA. I mean, investing $5 billion in Intel. They're a strategic partner in XAI. They've got a 7% stake in CoreWeave. Now this $100 billion here in OpenAI, like you're talking about, this vendor financing. How much do we need the details? And New Street Research Analysis says for every $10 billion that NVIDIA invests in OpenAI, OpenAI will then spend $35 billion on NVIDIA chips. And it may reduce the margins, but it sort of encapsulates this demand.
And also, I don't know, like, how OpenAI is diluting out everybody else who owns a piece of it, or how they're not. I mean, where it stands in terms of who has claims on that business. Like I said, though, up to this point, I mean, we are going to see NVIDIA back off a little bit. It did trade like $1.50 below its high yesterday. It closed there. So, we'll see if we've, again, kind of exploited this trend as much as we can in the near term. But I think the psychological dynamics and the chase have been a big part of this market recently. The market's not come in the way everyone hoped and expected in a broad way in August and September. And here we are with 10 days left or thereabouts in September, and people are wondering if it's kind of gotten away from them. And that's why yesterday, these intraday rallies out of nowhere, the retail trade is just like buy over the course of a day. So, we'll see if that gets us to a vulnerable spot for the overall market. Until now, it's kind of netted out to just being a very sturdy uptrend.
Yeah, JP Morgan today, desk note, market seems to be removing negative tail risk scenarios, expect firm support at 6,500. They think we have a shot at 7K by year end, which is sort of Goldman's area for 12 months.
That's right.
7,200.
That's where most of the street is, really not much beyond that for 12 months or maybe by the end of next year. So that's been the theme since April, and it's getting a lot more focus right now, which is the sell side and the buy side got really defensive and cautious and thought that it was nothing but left tail risk, which is downside. And now they've had to kind of make peace with the fact that we've obviously gotten an improved trend. The market has gone farther and faster than most expected. And the question is, does that keep us from getting over our skis in terms of positioning and sentiment and all those things? For now, it probably does, but they're going to try to catch up. And some of the wild parts of the market are as wild as they were in 2021. If you just look at the alternative power, the robotics and automation, the crypto, the quantum, like all that stuff is fully frothed out, I would say.
Yeah. Really interesting stuff, and obviously a lot of Fed speak we're going to have today. We talked about Powell, we're going to hear from later, but we had Goolsbee on this morning on Squawk Box. I think we have a soundbite from what he had to say. Let's roll that.
I'm okay with moving to be in a better spot, and I think eventually, at a gradual pace, rates can come down a fair amount if we can get this stagflationary dust out of the air. But with inflation having been over the target for 4.5 years in a row and rising, I think we need to be a little careful with getting overly upfront aggressive.
So obviously, you're hearing from Goolsbee this morning, and Michelle Bowman also speaking some headlines saying, look, she supported the Fed decision to cut last week, but thinks the Fed should have cut in July. And last week's cut should be, quote, the first step back to neutral.
Bowman definitely defined, more the dovish end of the spectrum, pre-Stephen Myron joining the board. But I think over the last 2 days, the net impact of the Fed speak has not been appreciable, but it's been mostly hawkish. It's been basically people kind of saying, look, let's not rush to kind of cut too much. You had Beth Hammack yesterday. I mean, a lot of the voices yesterday were kind of saying, yeah, we found the grounds to have some room below our rate because of employment, but it's not as if people are, I don't think, completely kind of in their heart very doved up at this point. And so I don't think the market cares, because the market thinks that the direction of travel on the committee and for rates is at least a couple more cuts, because almost everybody agrees neutral is that far below. But the bond market yesterday had yields up a little bit. We'll see if there's any reaction today.
I think, TNX has been up 4 straight, I think, as we've worked our way back from 4%. You're right about Hammack. She did say that she expects maybe another round of pricing pressures going into the beginning of next year. And Bostic, too, who
Bostic said he has
signaling
no more
one
cuts.
cut, we're done. One for the year, at least.
Whereas then Bowman says optimal policy calls for looking through temporary tariff inflation. So if we're looking at more price hikes in the back of the year, she says, look, let's look through that. It's temporary.
And I understand why the stock market would applaud that, because the stock market is perfectly fine with 3% run rate inflation and a loose Fed. And that's a good formula for stocks if the bond market is not going to impose any kind of punishment by sending rates up on the long end.
Well, we were joking before the show this morning about J.P. Morgan and their obviously bullish take, but some of their risks to the market, to equities, are, they name it, a surge in hiring. That would be a negative for J.P. Morgan right now, as far as market action goes.
Yes. I mean, I do think that's one of those, like, pain trade type of deals where, because everybody is assuming soft enough labor market to keep the Fed dovish, that would upend the thesis if you did get a surge in hiring. But I also think that the fact that there's really good two-sided debate about whether we should worry about weak labor market indicators or not is also keeping the markets buoyant. Because in other words, you can say labor market's weak, that's what the Fed targets, but it's not representative of the underlying trend. Because we have this massive CapEx cycle, because labor supply is an issue, and you can kind of throw all these asterisks out there and say, don't worry, that's not pre-recessionary. And you got Mike Wilson from Morgan Stanley this morning. He's been of this mind that, like, we're just getting started. We're just getting started. Yeah. We got the post-recession playbook to execute here, because he thinks this rolling stealth recession kind of bottomed several months ago, and then that's a totally different game, because if the Fed's cutting at the beginning of a cycle, usually you have a lot more time and room in the market.
Right. We'll keep an eye on it. Obviously, there's going to be a lot of Speak Powell at 12:35 today, along with some other officials. Bowman, of course, on the tape just now. Meantime, the president is set to address the UN General Assembly later this morning. Let's get to Eamon Jaffers with a preview, not just of his speech, Eamon, but maybe of Lula's, who's going to speak right before him.
Yeah, good morning, Carl. President Trump is expected to meet with Argentine President Javier Milei today, along with Treasury Secretary Scott Bessent, to discuss a way forward for the financial markets of that country. That's just one of the activities on his plate. As you say, a big speech coming up here at the top of the hour. It's not clear if we're going to see a U.S. financial intervention in Argentine markets right now. Secretary Bessent told reporters yesterday it's going to depend on market conditions this morning. President Trump, as you say, has a slew of other meetings today on the sidelines of the UN General Assembly as well, including with Ukrainian President Volodymyr Zelensky, UN Secretary General Antonio Guterres, and EU Commission President Ursula von der Leyen. We also expect to see multilateral meetings with Qatar, Saudi Arabia, Indonesia, Turkey, Pakistan, Egypt, UAE, and Jordan. So it is going to be a packed schedule today. Also, the White House tells us there's going to be a reception this evening with more than 100 world leaders in New York City, guys. Back over to you.
Wow. Well, traffic is going to be pretty nuts here today.
Yeah.
Eamon, thank you. Thank you so much. We will certainly be watching that. There's a lot of important talks to be had here today. And
interesting, the Argentina move, kind of coincides, with this all. It's kind of a, it's sort of it's obviously improvised, reactive type move to what's going on there. But, this sort of selective bailouts of friendly leaders.
Right, or at least using the rhetoric, the bazooka of rhetoric, certainly. And the other, Barron's had a great piece yesterday looking at Besant's history managing money at his fund, where he actually did play in Argentine distressed debt.
Yes.
Back then, you could argue he was trying to push back on government intervention. Now, of course, you're dealing with a government that needs help.
Or push the markets to the point where it catalyzed the need for government change or some kind of intervention. Yeah, I mean, global macro, that's often the game, is to sort of isolate the imbalances and just push, and bet that they're going to ultimately resolve in some kind of rupture in those markets. So it is kind of an interesting, kind of path that he's taken here.
When we come back this morning, we'll get the latest on the Trump administration linking Tylenol to autism after the president's press conference yesterday with Dr. Oz and RFK Jr. Take a look at the pre-market here, as we do now have all Mag 7 names in the green for the year to date as Apple and Tesla catch up. First time it's happened this year. Stay with us.
Okay, I'm here. Darvis box after hours and this morning. That's the first thing I see on the SPY. I would rather trade the SPY. Where's my phone at? There it is. Oh boy, gonna have thunder today. Hope the internet tempted to leave. Well. Okay, I'm here. Please, let's have good weather today. That's right, Mike. The Mag 7 are green. Plus, I have a new one on the Mag 7 list. And it is MAGS.
Co.com.
Shares of Kenvue rebounding today despite the Trump administration's announcement linking Tylenol to autism. Our Angelica Peebles has the latest. Morning, Angelica.
Good morning, Carl. That's right. Well, the Trump administration advising pregnant women against taking acetaminophen, that's the active ingredient in Tylenol, during pregnancy, and they're also moving to approve a drug for the symptoms of autism. So let's start with Tylenol. The FDA is starting the process of updating the label of Tylenol and other products that contain
The left must believe in science.
suggesting that taking the drug while
Oh,
pregnant
wow. I'm just
may
looking
be
at my-
associated with a higher risk of neurological conditions like autism. And during the press briefing yesterday,
My
President
tread on
Trump
my
told
Brooks.
pregnant women not to take Tylenol more than 24 times without offering any new evidence. And meanwhile, you have the FDA sending a letter to doctors that was much more measured, saying that while an association between acetaminophen and autism has been described in many studies, a causal relationship has not been established, and there are contrary studies in the scientific literature. The association is an ongoing area of scientific debate, and clinicians should be aware of the issue in their clinical decision making.
So
Now,
definitely
the FDA
my
is also moving to approve
right
an
shoe
oral GSK drug to treat the
burns more
symptoms of
tread than my
autism.
left
And
shoe.
GSK stopped selling the brand name Welcoverin almost 30 years ago, but updating that label of the branded drug will help the generic versions of Welcoverin add the indication to their labels. So that's why they need to do that. But a GSK spokesperson telling me that the company has no plans to bring its drug back to market. And the drug is currently approved to help with toxicity from some cancer
I got
treatment,
time to
but
make
it has
coffee.
shown some promise in helping nonverbal patients with autism. We need to be really careful here, though. The studies on this are small, and this is not a treatment that's believed to be widely beneficial. It's one that people think there should be more research on, but at this point, definitely not a cure, guys.
Angelica, what's been the best read so far about how Kenvue may or may not respond to yesterday's presser?
Well, we've heard them from the beginning, since before this briefing yesterday. All of the reporting suggested that this was going to be the case, and Kenvue has been pushing back quite significantly, saying that there is no link, no science has shown that there is a link between taking Tylenol and autism. And so we've seen them proactively going after this. However, I have not heard from them since then. I haven't seen anything on social media yet. That'll be my next plan of attack later today, to see exactly how they're responding. But I do think you're going to see pushback from them, and also just the medical community at large. You've already seen the WHO and other global regulators talking about how they find no new evidence that suggests this is a problem, that really saying that the U.S. is standing alone in calling this out as a potential risk.
Yeah, Angelica, the American College of Obstetrics and Gynecology are not changing its view on the use of Tylenol or acetaminophen in pregnancy. The Society for Maternal Fetal Medicine, they're affirming its guidance for this use. I mean, it seems to me that RFK had come out and said, look, we're going to come up with a cause and a reason for autism. We're going to do it by September, and that he was going to present a smoking gun. And this is the smoking gun? I'm sorry, but there's no new research presented. I've been pregnant, I've taken Tylenol, I would do absolutely anything to protect the health of my unborn child, and doing that was taking Tylenol. I was very sick, I was in the hospital, that's what the doctor recommended, that's what I did. I normally say very...
You're a murderer.
I think this is a very political-based decision. This is not backed in science, and if it's me, I'm taking my advice from doctors, I'm not taking it from politicians. I am happy that investors are seeing through this, and that Kenvue shares are higher today.
Yeah, and I think that...
Honey, did you take the COVID shot? I'm done with you. Major indices on Monday. Yum yum. Peppolini's wearing yellow
How are you
today.
feeling, and do you buy some of these names?
So when investors start becoming confident that there really is a bull market, because normally when you start a bull market,
You don't think
there's a
there
lot
is?
of skeptics. We're getting to that acceptance that we're in a bull market. And
You're a little
that's
late,
when
honey.
you really start issuing IPOs.
She's a little late. She's a little late for my kisses. I'm late today. The SPX did me very well yesterday. The corrections were great bull flags. So today's support is definitely obvious. 668734. But I'll probably never get to see that again. Oh! Come on. Yeah, there it is. Hardly ever do that. 668734. It's today's support. And yes, today's resistance will be 669895. Not a penny more, not a penny less. As I walk into the kitchen and prepare my tea, I have 5 more minutes, and I want to make sure that my platforms are up. Yesterday I went on a rant. I forgot what it was. That's how much it matters. Yippee-yi-yi. Ooh. You know, one thing I don't like is drama. Well, the Tylenol didn't give my kid autism, so it must not be true. Well, when I was born, I had a lot of issues. I know my mom smoked cigarettes throughout my whole pregnancy. I think that's probably worse for you than anything, for a parent to be smoking cigarettes. And I had epilepsy. I had my I had my stomach operated on at 1 week old. I had epilepsy, and I couldn't see. But I was wearing glasses at a very, 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 very young age. I couldn't walk because I couldn't see. So I didn't start walking until I got my glasses. And I was 2 years old by then. Maybe a little later. But I just couldn't see, so I dragged myself around. Better than running into things and getting all scarred up. And then at 1 week old, I had my stomach operated on. Then I had grand mal epilepsy, petit mal epilepsy, then grand mal, and then juvenile right now. But it never stopped me working and learning. I just put them on there. Okay, I got less than a minute. Hank. Both platforms are ready. Watching the video, Apple. What else had good news? Boeing. Tesla.
Seeing their full gold prices. I'll endeavour to unpack that in Morning Trade Live with some of the guests.
She looks a little cute today.
We have got the dollar slightly softer this morning. We've got those yields holding steady. We've got a lot of information coming out, of course, Nicole, today. We've got the peer.
My ding-a-ling just went off. We'll go over the watch list here in a second. So SPX have got a triple quad bottom down here. Unum dum tuum forps. And for you people that on YouTube, I use a language called dog talk. So you might catch me talking dog language. Like one tuum, freum, forbus, Phoebe. Washboardjim, he's kind of strange. Phones are ringing. Today's the 23rd. The options ain't that expensive right now. The 6710's at 275 on the SPX. We're off the 200 EMA. SPX, how you doing? The stock is not a moving. I'm scalping now. Wonder how. Wonderland. Strike is 6710 at 2.75. I get the first scalp out of the way. I had a girl last night curse me sevenfold. Why? After all the money I gave you? $67.10 at 320 right now, so I might wiggle my way out of this trade. We could end up doing we got a head and shoulders, and we got a 1-2 tree forbits, counting a wick. So let's go to the right there, just under 69. Watching Bowen here. Oh, there's 340. La 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 la. Okay. Take some profit. $360. I got $350. I'm out. It hit my target. Jim, how'd you do that? It's magical. It's magical. It's magic. Anybody take the trade with Bobo? Say yes or no. Good morning, room. Good morning, Subway. I took it to the 1, 2, 3 Forbes. One of them, 2 bits, freebie, and 4. And you want to get out of the trade as soon as you can on the, because it needs to kind of consolidate. Good morning, Martin Brex. I like that name. Martin Brex sounds very important. I'm not saying Mike Marchlick. I'm not making fun of your name, sir. I don't do that. So where's support at? Someone would ask, Jim, where's support? Well, let's see if we can hold this here. Let's set an alert on this candle right here and see if we don't hit that double bottom right there. That or back at the 200. So we're going to set the alert right there above this candle. Boom, at 669394. And we're going to look at the watch list. Put up the message board. Put up Titellini. Oh, Diane Hall's in now. I'm not disappointed with that either. She's a cutie. Oracle's down $11. Keep an eye on Oracle. I think it had good news yesterday. New boss. Goldman warns, enjoy the market calm while it lasts. Oh, really? NVIDIA's OpenAI deal adds to a brewing concern. Oh, really? You weren't talking like that yesterday. All of a sudden now you are. I said, well, we missed the run. We want it to pull back. Yeah. Oracle. The video, I mean, these are looking good right now. Ah, darn, 370. Okay. Mag's pulled back some. I gotta tell my little sweetie. What about Apple? What's Apple doing? Apple had a horrendous run yesterday. Oh, it broke out again. Double top. Apple double top. Apple double top. There's support right there for the first one. Please, no thunderstorming. Only because you cursed me. Sevenfold. We're hitting the first support. Apple's hitting the first support. Okay. Oh, triggered. SPX, watch SPX here. Where are we at on this option? Patience is the best virtue that I could ever give anybody. We're now at $3. We was at $2.95 that I could tell. It was probably cheaper than that. Do you understand why I say get out of that trade for as fast as you can? Say yes, somebody. $3. Now where's resistance at? It's a good question. Maybe right here, where we got to break it from this previous low right here, because we got a yin yang. Maybe bring it up just a little bit. So let's put this on here. Put a mark right there on that one. No. Damn it. Put a mark right there. And then raise it up to this candle right here. Whoops. A little too high. So we'll remove it. It's got to be perfect. Right there. Right there. That's perfect. We've got to hold the 200 EMA. Now, you read some of these headlines already. People are freaking out on the run that we've had. Fat cats, because a lot of them are still in disbelief. You heard that one chick. Oh well, we got to convince ourselves we're in a bull market. I don't think they're all that bright because they're used to having it their way. And now that retail traders are involved, it's harder for them to manipulate the market like they used to. That's just my opinion. They still do it, but I mean, it's just harder. That's just my opinion. I've debated even a few retail traders about that, but one of them's no longer with us, so rest his soul. Yeah, this thing it keeps playing around. We might be in for some more drama. It's definitely a megaphone expansion pattern going to the downside. So here we go now. And this thing ain't running like it should. Now I'm going to go ahead and scale out of this trade. Because I don't trust it. We hit my target. See where we hit that target right there? So, I didn't make much on this one. $3 to $3.20. I'm just trying to be in the now, kind of get a feeling of what's going on here. See where I drew that trend line? That's called a yin yang. That's a pivot point. Support, resistance, support. And then we hit this right here. So I just sold it for 20 bucks a contract. And then the options ain't moving that much. Should have been up like 50 bucks. Now if we come back down here again, that'll be number 4, and we might make a little bit more. There's 340. What the hell? I just left 100% on the table in my profit. I could have probably sold that 340. I'm going to go into the kitchen. Oh, I got water in my tea. I'll be right back. I didn't set the timer. There's 340 again. Yeah. Oh, I gotta get soup out too. 360. Shit. Oh God. No. So that just eats me out. Martin Breck says yes. Sounds like a military name. Colonel Martin Brax. And then we got March in here, so he's got to be military too. Well, that's 2 trades out of the way. Very good job, M. Marty. Marty finally messaged me and told me his name. I'm glad it wasn't Marilyn. Tell the wife I said hi. No, I was going to go in there and get that chicken soup out of the freezer. Probably too late now. I'll just have a hamburger and cheese chip with cottage cheese. But I'll have it for dinner. Okay, well, let's see what else is on the watch list over here. Oracle's down $13, and it could drop more. Let's get this out of the way. Clear the drawing set. See how slow this thing's moving? AVGO, I think, was down. A lot of these here, we've got a lot of Fibonacci set up. I called Chipotle under 40 the other day. Amazon's down $5. I can't use 20 hour on this one, 20 day. I got to change. Put it on 5 day. God, look at that, Amazon. Amazon plans to shut down 14 Amazon Fresh stores in the UK. Woo! The market should be happy with that. Jamie Dimon says Trump HB1 move caught him off guard. You know, Jamie Dimon, they used to really love that guy. I don't love him as much anymore. Not like they used to. Whatever Jamie Dimon said, he was right. So let's see what's in the red here, the biggest losers on my watch list. We got Baidu, which is up. We got Oracle. Oracle's the one that we need to watch. Amazon. HIMS, which I don't trade much. Zim. NVIDIA. We got Snowdown. We got Shopify. Meta. I got 757 target for support on this, and I don't know how I got it. I can't remember. It's changed charts because this don't work good on 20-day. Let me see if I got a smaller one. Meta might be one to watch. Meta launches super PAC to fight AI regulation. President Capital adjusts price target on Meta to $8.57 from $8.30, maintains a buy rating. $100 billion bet on OpenAI, NVIDIA. Oh, we got a couple of regulars out of here today. Magnificent and good morning, Johnny. Two Johnnies, Johnny Ringo and Johnny from Texas. Good morning, Bug. Good morning, Angel. Anybody stuck in a trade, just go ahead and let me know. If you see something that you want me to look at, let me know. It's Disney. So I think we're at a head and shoulders right here off the 200. I wonder what kind of day we're going to have. We're going to consolidate most of the day because that huge run we had yesterday. I bet we do. I don't know if Marley should be allowed to wear that outfit. God, her boobs are big. I'll get very distracted. Might have to treat her with a little bit more kindness. I think today I'll have burgers again. We got a little fallen wedge coming out of here on Meta.
Exchange. We've got plenty to hit on both here and abroad over the next hour. So here's a look at what is coming up on today's show, with stocks trading at all-time highs during this historic bull market run. What could be the next growth driver? One of our guests believe it could be.
Well, that's a good-looking chart on Tesla.
More on that coming up. Also, our morning trade is.
We just broke out of the flag.
Multiple analysts upgraded the stock, and we'll go inside out on Micron ahead of its quarterly earnings after the close.
Oh, Micron quarterly earnings after the close. Is that Micron? Is that MU? Yeah. They'll be talking about it today. Well, we've got a symmetrical flag breakout here with the head and shoulders. So I'm going to show you how I'd chart this up. There's two different ways. Just show the flag would be one, but I like to do this, especially when I see an inverse head and shoulders, because that way if we hold that flag, this is Tesla. Come on. Right there. So if we hold that top of that resistance, or we just come down and nick the second, now it'd be the third hit, because we hit here on a wick. That's inverse head and shoulders. And then that's the top of the flag. So if we hold this, we'll come up and do a double top. Let's look at Tesla. SPX is at 255. Let's look at that one too. /ES at the VWAP. We're at the 200 here. We've got a couple options. Tesla looked good there. We'll see if it bounced off that support. Sure enough, so far, someone asked me yesterday where I had resistance that was at 465 to go long. I think he had 480 or something like that. I'm gonna watch SPX here. We're at $2 now. I'm going to grab some of this. Get ready. Prepare ye in the name of the Lord. We're at the bottom of the orb right here. 1, 2, 3 bits. 3 black crows at $2. The 6710s. Now this has got some risk, but not that much. The 6710s at $2. Lotto. I don't know how you do it, but you can do it. Yes, you can. When you can. Some say screw it. I say do it. When you can, when you can. Is it true? I'll trade you when you can, when you can. Ready, set. We're at the ready spot. Whoa, 245. This is trade number 3. You're at the 63. So you, 265. Make a business decision. Make a business decision. You had plenty of time to jump in that trade. And it looked really promising. Jim, I don't know how you do it, but damn, you're good. I got another A+. Woo! $2.60. $2.60. You don't mess with me, 'cause I can count to 3. So let's talk about this trade, because this is a very interesting trade. Who wants me to talk about it? Say yes or no. The only way you're going to learn is if you listen. $2.60, brah. Oh. Okay, let's talk about this trade. So I'm sitting here, talk about Marley's big boobies, and all of a sudden I start to see this thing drop. We hit the 200, then I noticed that we were at the orb. So we got a double bottom on the orb, and then we have a 1, 2, 3 confirmation, and we hit that 1, 2, 3. Jim, why didn't you use the wicks? Well, let's show you. I'll show you what happens if we would use the wicks. That's why I use the bodies. Now, there's not too many traders that will do that. They're waiting. They chart with the wicks. So I'm sitting here waiting for this thing, and then I do it with the bodies of the candle. The wick is a gift. The bodies is certainty. That's where I draw a lot of my trend lines is from the bodies. I don't use wicks because they're unequal in measure. They line up sometimes, but they don't always line up to where the bodies. So when we came down here and hit that third, this is called a 1, 2, 3 trading strategy with a confirmation of a double bottom off the orb. Now the orb was created within the 15 minutes, the way I understand it, of the trading day, more or less. So when we came down and we hit that 1, 2, 3, the body here, and I was just a little off there, but you see how it nailed that trend line on that wick, and that's a confirmation. It's not a true third touch, but it is a touch. It's a confirmation. And then I call this a higher low off that 1, 2, 3 punch. So we had a double bottom off the orb with a 1, 2, 3. And look where she is right now, $3. And I got out at 260. And here you are up here. One of them, 2 bits, and a free. Almost straight across. Yep. Definitely straight across. So you want to get out of that trade at that triple top. And you're out before everybody else. Now you got 3 white soldiers, so that's a catalyst that we might go ahead and have more run to the upside after we consolidate the 3rd soldier. But you're out of the trade and everybody else is kind of twiddling their hands and watching the stock drop in price. And you got out at 3. Now it's at 275. And they're going, oh shit, I should have got out. And you had plenty of time to get out of that trade because you got out early in the heat when it's all you got to do is push that trigger and there's no wait time. Everybody else was waiting for this triple wick up here, if that's the way they charted out, to run up to 6,700. Well, you got out at the triple top. So that's how important. It's hard for people to understand that, but it's real simple once you do it a couple 100,000, 10,000, 20,000 times. When I first started charting, I forgot who I learned it. I think I learned it from, I can't remember his name now. But I watched how he charted one time. I said, well, he's using the bodies. And then I realized how consistent the bodies were. See, body, body, body. You got wick, 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 just up in like a roller coaster. But then bodies, they all line up. Body, 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 body. And the wicks are all different. Body, body, body. We got some consistency here, but not much. Tweezer tops, body, body. Okay, well, that's your lecture for today. So you know what's next. I noticed the sky looked like it was getting ready to thunderstorm. So it gave me some time to think. I got cursed last night, sevenfold what she said. I made fun of her mechanic, then I went straight to bed. She told me that I was cursed sevenfold. I'm not going to share my dollars I made with her today. That was bold. She kept her mouth shut. She could have went out to a nice dinner tonight. She got mad at me and got very uptight. Then this morning when that cloud rolled in, I looked at the sky and it looked down at me. Said, Jim, when you get into the room today, trade that SPX. You'll see 3 trades in a row. I gotta go. That chick cursed me 7 times. I'm telling her to walk the line. Goodbye, honey. It's the last time you'll ever talk to me. It's what happens when you wake up in the morning and you see I wrote a note that said, don't ever curse me. Whoa. Got that off my chest. The singing day trader. Do I have super chats turned on? No. What happens if I do super chats? Do I get paid? Yeah, I might do super chats. I'll figure out how to do that. So stay in tune tomorrow. I thought I had the best mic available, the Yeti. Okay, well, a lot of people charge for their rooms. I don't. I always thought it was kind of strange. Some people make a living at it, and they build up a big enough account to trade with it. That's probably true. Oh, it does? Well, maybe next time I'll sit back a little bit and see how that. Let me sit back a little bit when I do a song. Tell me how this sounds. Pulling back to the 200 EMA. Can we keep going on? I'm writing another song, bouncing off the 200 EMA. We'll do that next time. when I get in this, I'll just walk away and see how it sounds. Okay. The 6710s are now at 215. Could have probably jumped in that a little bit sooner, but I'm not in it yet. I'm thinking about going, getting my lunch ready. I've been up since 2. And all I've had is a biscuit, one of them protein biscuits, and a bunch of caffeine. Okay, here we come. Should I get stuck in another trade? That's not a bad idea, though. Super chat. Because I am wanting to save up for another vacation. New Year's, I'm wanting to go on another one. We're at 180 on these SPXs. We could come down and hit number 4. Or hit a 1, 2, 3 right here. And be shy of that 4. That might be what's next. So let's just wait patiently here. There we go. Okay, get ready. The same calls, 6710s. On your mark, go ahead and jump in. It's 170, 175. And time might be running out too. There's 155. Ooh, no. We just now hit 4. U.S. stock market mixed ahead of Powell's comments. I am mentally stuck. My daughter has a financial reckless spouse. How do I protect her? Tell her to get a divorce. There's 1, 2, 3, 4.
There's a dude down the street with his old washboard. Washboardjim, he got a sneaky snake. Goes boom, boom, boom. Goes boom, boom, boom. Boom, 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 boom. Sneaky snake. Goes boom, boom, boom. Goes boom, boom, boom. Goes boom, boom, boom. Sneaky snake.
You gotta break the 9. Got a Head and Shoulders on the /ES. /ES. Oh yeah. Got a Head and Shoulders. Let's break it. Back to even Steven. So if you're not comfortable, get out. I think this 200 is the one we got to break. Then you got a wall right here above the 200 SMA. So you see how that lined up 1, 2, 3, 4? Boom. Should have had a little bit more patience on that one. Or added on to 150. And it bounced off the /ES off the inverse Head and Shoulders. The body did. You added at 150? Good deal. Smart move. You want to get stuck in it, so I'll make this one a fast one. Looks like we got a volume squeeze coming down. So we could get a goalpost, volume spike. This, I'm going to teach something new here. So you got this big breakout right here on volume. This is called goalpost. So you got the volume coming down. That's called getting ready to squeeze. And then your next volume spike, it's when you want to get out of the trade if we get one. Yeah, we're going to eat after this. Don't get greedy sometimes, you know. You see where resistance has got to be the 21. We start building momentum above that. MU earnings tonight. Analysts suggested earnings per share at 286, up from 118. Be careful. Back down one more time here. We could pull back and hit 6687 now. This is where I'll add. And I got plenty of room to add and bring that price down real good. Okay. Right about now. And see if it wants to hold true to its colors right here. $115. I got 9. Plus 3 at 175. A little risky. So if it doesn't hold here, I'm going to get out. Much better price too. Let's go. I got to work hard on this one here. Better get stopped out. Come on, hold. I'm at a real strong support. We've had such a good run, too. One, two, three, four. Well, should I get out or? I always got to ask myself, should I get out or are we going to break? There's one third. I'm even. There we go, 135. So your next resistance will be that shoulder line or the 21. Damn, what to do? Could sell here at 140, be up $10 a contract. Oh, there we go. Okay. Do something smart if you're stuck in this trade. Out 155. When I'm in trouble, I want to get out and reassess. Perfect. Now I can breathe. I get an A+ on the walkthrough. I think it's important to say you know your level of confidence, know your level of the time of what time it is. It's just like gravity. You know, every bounce is not going to be the same. You get the first big whack, you get the second one, you get the third one, man, you're doing good. You got the fourth trade in, and then the fifth one. Every time it hits the floor, the bounce ain't going to be as high as the first one. So you got to not get caught up in winning all the time, and then when your level of confidence starts to also decrease, because you know from previous times when you're in trouble, you want to try to weasel your way out of it as best as you can without being greedy. That's why I kept emphasizing, don't be greedy. Get out even, or so we come up and we run up close to that double top right here and the 200 EMA, and I said, well, I'm still in the heat of the moment. I'm getting out of this trade. Up $25 a contract. And I waited before I cost average down too, because I recognized yesterday's support. So that gave me a level of confidence to go ahead and add on. Because you don't know, we had such a good run yesterday. Keep that in mind. We had such a good run yesterday. They've got to consolidate for the next run to break out. So, yeah. Okay. Woo! Morning, Maddie. Mike, did you get out of the trade? On YouTube? I'm going to turn on Schwab here and listen to the ladies talk.
We've actually got the DAX sitting high by 0.5%, although our technology
Go get my lunch ready.
this morning. The CAC sitting up 1% right now. So we are seeing green across the board over in Europe as we close out the session there. It was very much a chip rally globally overnight off the back of this OpenAI NVIDIA partnership announcing this big deal between them. We did see names over in Asia, the likes of TSMC and also Tokyo Electron. We've also had Samsung higher overnight. And so we are going to be tracking, obviously, the follow-through here in trade today off the back of that. No doubt good news as far as what we've seen there with the tech story globally and what it could mean for other players internationally as well. But obviously we have seen all of these higher today as we're seeing some follow through. So TSMC, obviously Taiwan Semiconductor, 3.4% higher today. Tokyo Electron, these are the ADRs because of course the Japan was closed overnight, sitting up 1% on semi. Up, and ASML also higher, of course, this making the equipment that is needed to make the chips. So we are cheering today off the back of this deal. Coming up, it's time for Inside Out. We'll take a closer look at Micron ahead of earnings and bring you an example trade when Morning Trade Live returns.
Hey, investors, you know the market moves. And Schwab is here to help you move with it. So, whether you're buying, selling, holding, or planning, whether you're ETFing or 401k'ing, saving, spending, or even retiring, you can count on Schwab for market insights, live support, powerful trading platforms, and 400 branches. All at your service, all so you can invest your way. Sounds nice, right?
I'm Alex Coffey.
And I'm Jenny Horn. This is Next Gen Investing, where we track the trends shaping tomorrow's market.
From tech to energy, crypto to consumer, we focus on what's driving investor sentiment right now.
Clear analysis and forward-looking market coverage every trading day.
This is a make or break level for this stock.
That could certainly be a short to near-term catalyst.
Next Gen Investing, 1 p.m. Eastern.
Only on Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Real-time access, data-driven analysis, from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live, subscribe free at schwabnetwork.com.
We are back on Morning Trade Live. Let's go inside out now on Micron. The memory and storage stock is trading just below all-time highs and reports earnings after the close today. Analysts are expecting adjusted EPS to come in at $2.82 a share, with revenue coming in at just over $11 billion for the quarter. Shares are up nearly 175% from the April lows. Joining us now to take a closer look at Micron is Paul McCarthy, who is president of Kisco Capital. Thank you so much for joining us, Paul, this morning. What are you expecting to hear from Micron when we get this report card this afternoon? Good morning to you.
Good morning to you, Sam. Thanks for having me on. I think that you'll probably see good news. The company did come out in August and raise their guidance on revenue margins and EPS. So that's unusual and more or less tells me that they're getting margin expansion and getting high demand for some of their products that, as you may know, they work with NVIDIA and AMD. So I think that they'll probably, it's expected, they'll have a beat and raise after hours today. And I think the markets will be keen on like what their CapEx spending is going to be over the next year to gauge growth of the overall sector. as well as hear about just how sales trends are going and what sort of customer wins they're getting. So it should be a good earnings report for the company.
Micron should be good earnings.
To justify the huge run-up we've seen in the stock, do you think?
Yeah, great question. So, I think that if you look at
So we came down and double bottomed.
Some of the analysts out there put a forward P of under 15. So that tells me that the market's pretty geared up for a lot of growth. The real thing I think will be on margin expansion. Are they getting more profitable as they get bigger? I think that the stock certainly had a run up. It's overbought, so the market knows that this is coming. So I think probably as long as the stock can stay above 130, you can be bullish on it. And I don't expect it to get to 130 anytime soon. I think that a range after earnings might be anywhere from 150 if it's negative to 180 if it's positive, and that if you go into next year, you'll probably see that the stock will get up into the 200. So, but that's what makes this particular earnings, guidance and results today really important. We're seeing a lot of news in the semiconductor sector right now, and we want to see that Micron is backing up what we're hearing from like NVIDIA and ChatGPT and OpenAI and whatnot. So it should be a really interesting call today.
Okay, the setup looks good. I mean, sitting up 2% higher, 168 and change ahead of this. You say you're looking for confirmation as far as the AI story, no doubt riding on the coattails of the NVIDIAs of the world. As I mentioned, the estimate's looking for just over $11 billion in revenue. I'm just wondering, if you look at the composition of that, what will be key to look out for as far as some of the metrics?
Yeah, I mean, their new chips are the high bandwidth memory, also called HBM, and that's basically stacking DDRM chips, and they essentially have a product that's it's got better computer memory and processing, and it also, more importantly, uses less power. So we want to see that their next generation, the HBM4s, how they're doing. And with the volume shipping of HBM3E, which is the current chip that they have out there. So, and we'll want to hear, exactly what kind of orders there are for them going down the road. So that's essentially what I think everyone's going to be keen on today.
Okay, so looking for the CapEx, you're thinking a beat and a raise as well, and keeping an eye on the HBM2 as far as that growth story. Paul, we're going to leave it there. Thank you so much for that as we look ahead to this report card. Paul McCarthy, President at Kisco Capital. I appreciate your time. Let's trade it now with Tom White, host of Fast Market. Very good morning to you, Tom. How are you looking in an example trade for Micron?
Yeah, Sam, implied volatility levels pretty elevated going into this report. The option market pricing in about a 9% move either way in the shares. So that's the way I kind of looked at this. With that, remember in early August, they did give an update, mid-quarter update, that they raised their guidance, and that's why I think you've seen, the expansion here in the stock. So I look at a strategy that's don't be a hero type strategy here. First, we're going to take advantage of that high implied volatility levels. Going out to the September 26th weekly option, so really short-term positioning, earnings type play. 3 days to expiration. We're going to sell an out-of-the-money put vertical. We're going to sell the 160 strike put, and then buy the 155 strike put. So a short $5 wide, neutral to bullish. Put vertical, you're going to collect roughly about $1.50 credit on it.
There's 115 to 150
per spread, with $350 at risk, but that's all the way below the 155 level. The break even on this, where you start to lose money,
another scalp on it,
58.50 over the next 3 days. That's about 6%
from double bottom
below the current share price in Micron. So you got a probability of that short strike at the 160 being out of the money, which is what you want. You want the stock to be above that 160 level.
We still might hit the 200 again.
About 65% on this short neutral.
There's 165. You know what to do, Mike.
Okay, good stuff. Thanks for getting us a look at Micron ahead of that
YouTuber.
Report, Tom White. I'll catch you a little bit later on. Now, let's just take one quick look at the markets and where we stand as we close out the show for today, because we did see things starting off a little bit higher as far as the S&P 500 is concerned, but we have lost a little bit of steam throughout the course of the morning. We are about an hour and a half or so into trade. The S&P 500 just ducking below the line there. The NASDAQ also trailing by 0.2%. We have, however, got the Dow Jones up 0.5%. And the Russell 2000 is outperforming this morning, up at 1% or so higher at 2,487. We are continuing to track this rally, particularly with the expectation of these rate cuts as we pass over a lot of this Fed speak today. And the big one, of course, is going to be Powell, who will be speaking this afternoon. Already hearing from Bowman this morning. And just as we look across the sectors, as we said, there has been a little bit of push and pull going on. Technology very much on the back foot this morning, but it is energy that is tracking higher to the tune of 2.5% today. We've also seen those yields slipping just slightly off the back of some of the PMIs we got today. Thanks for joining us on Morning Trade Live. I'm Sam Vitus. Download the Schwab Network app, available in the Apple App Store, and tune in 24/7. SchwabNetwork.com. Trading 360 with Marley is coming up next.
Marley, please.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Oracle down $17.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside.
We're back at 115 again.
Insights, actionable data, veteran traders, and trusted financial journalists. Streaming live and on.
I'm gonna go make me a cup of coffee.
Streaming 24/7, any screen,
And have my dessert. 3 black crows. Now watch this next candle here. You got a double-headed snake. Yeah. Do, 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 do. 120.
Live at the New York Stock Exchange, and this is the Watch List. Your midday view into the trends driving the markets with a sharp focus on technology, innovation, and companies leading the next wave of growth. Big movers, real-time interviews, and insight from analysts, founders, and market voices you trust.
I trust you.
The Watch List, 2 p.m. Eastern, only on Schwab Network.
More than that girl that I've been talking to lately.
We're 90 minutes into the trading day, and welcome to Trading 360. I'm Marley Caden, coming to you live from our Chicago headquarters. Here's what we have ahead in today's show. For our 360 Spotlight, we're going to break down the biggest headlines in the tech sector, including NVIDIA's recent major investment in OpenAI, as well as the recent hike in the fees for the H-1B visa. Our disruptor today is CoreWeave, after the infrastructure company received multiple analyst upgrades stemming from increasing cloud demand. And then for our 360 round, we're going to discuss all things streaming. what the recent sector consolidation means for the streaming services, and also the importance of live event coverage and sports. Before we get to all of that, let's take a look at how the markets are performing as we are an hour and a half into the trading day. Bit of a mixed picture here. The S&P 500 just below the unchanged line, but in negative territory, 6689.23. On the Nasdaq 100 at 24,702.74, down about 1/4%.
I love you,
so far
Marley.
today. For the Dow, up about 0.4% at 46,568.22. And the Russell 2000 right now our winner on the day, up 1% at 2487.83. Some of our futures products here and the 10-year yield mostly flat, still at 414. The dollar also mostly unchanged at 96.96. As for gold, though, up on the day more than 0.75%, 38.07, another record here. Crude oil up 2% at 63.57 a barrel. And Bitcoin here up on the day now about 1/3%, but still far below levels I'd like to see, about 112,640 right now, dipping down from some of the highs we saw earlier this week. Now, I do want to take a look at some of the headlines that are moving markets this morning. I want to welcome Alex Coffey into the conversation, our senior equities contributor here on Schwab Network. Now, Palantir getting a price hike today from B of A. Walk us through this analyst section.
Well, they're pumping
pretty
it.
significant adjustment from B of A for Palantir. They already had a buy rating, so they keep that there. But as you mentioned, adjusted the price target higher from 180 to 215. Marley, now this is after they spent time with the company's chief architect, Akshay Krishnaswamy, and they liked the I guess projections that they got from the company. They moved up their growth projections, and that's the reason cited for their price target increase. They view AI forward deployed engineers.
This really got a hold here.
For the company's growth. They said that they're going to benefit from increased demand, empowered engineers that focus on the most complex problems. The stock is up about 1.6% today. Now, if you were to look at kind of how the analysts break down, they don't have the exact percentages, but it's far more mixed with this particular stock, given the run-up in shares over the last couple of years.
BLTR.
Really extended valuation, but there is still those who kind of put prudence to the side and say this is one of those game-changing, world-changing like companies. So you get a lot of neutrals, a lot of market perform, hold style ratings, a few believers,
Got
and
triple
of course,
bottom.
doubters who are just going to look at the math behind the valuation and say it's a big lift. So depending on what.
So we got triple bottom. And this is your snake breakout pullback. And we had a higher high last time out, so this time we could maybe get up to here. Same kind of deal as last time. 120, I got 3 of them, and then 9 at 105. And I'm green right now. Rounded up to 109. I'm gonna go have my coffee, and I'm done for lunch. Cottage cheese and got a new thing now, cottage cheese and a cheese craffle. This Highland ain't as good as that Daisy. That Daisy's excellent. Highland's a little runny. Okay, well, are we gonna have that kind of day? Mike had cottage cheese as well. Very good. We need all the protein we can get. Try that Daisy if you got it in your neighborhood. Dadgummit. I think we're going to that was a major support. I'm disappointed. I hope Marley settles down a little bit. She's a little bit too much.
In our country, we get about 19% of our electricity from nuclear and about 43%, as I understand it, from natural gas. So who's providing the natural gas and the nuclear capabilities for the most part right now? It's the utility companies. And that's why, as I'm bullish as I am on the utility sectors, they generally pay good dividends, they hold up well in the face of volatility, and they become a backdoor play into the AI revolution, whether it's a Duke Energy, a Constellation Energy, or a DT Energy. But don't forget about these smaller energy plays that are building these small modular reactors that will supply power to the data centers off-grid. Think about a company like NewScale or even Oklo that's been in the headlines this week. Tremendous opportunities that exist in the power solution side to accompany all those companies in the AI ecosystem as well.
Yeah, Kevin, you bring up a great point. It's a much bigger story than just who's making the chips and who's putting them into the data centers. There are a lot of opportunity outside of that potentially for people to look at. So thank you for highlighting that today. Kevin Mon, the President and Chief Investment Officer of Henyon and Walsh Asset Management. Thank you for being with us here today. And we have plenty more to come on Trading 360. Next, it's the big three. We've got 3 stocks, 3 charts, and 3 trades. Rick Ducat will go through the technicals, and then Charles Moon will take us through the trades for Astera Labs, Hut 8, and Apple. That's next on Trading 360 on Schwab Network.
Microsoft pulled back to my first support. Somebody asked me about Microsoft the other day, or yesterday. We hit my first support at 510.79. That's my first one. RITM. I'm almost back to even again. I think we're going to break out, but I'm not sure. RITM. Ooh, I'm green. I'm up $12 in my trade. I'm up $12. Let's get to, I want to get up to here. Oh, Jim. What was that?
From the most iconic trading floor in the world, this is Opening Bell with Nicole Petalides, live on the floor of the New York Stock Exchange. The countdown, the setups, the stories that make markets move.
Ringa, do you like my belching?
Minute-by-minute breakdown of the biggest headlines, earnings, and global movers. Just the trades that matter. As the bell hits and the markets react in real time.
Oh, that Greek yogurt sounds
live at
good.
The NYSE, right when it counts.
I was looking at it yesterday. Should have got some.
Carl's Way. Take a left here, please. But there's a Carl's Way.
Carl's Way is the best way.
At Schwab, how I choose to invest.
Washboardjim's is the best way.
I can invest and trade on my own.
Yes, and I let them manage some investments for me.
This girl's snooty.
Let's move on, shall we? No can do.
I'll get out here.
We're now at 115.
Schwab.
Let's go.
Schwab, a modern approach to wealth management.
Welcome back to Trading 360. I'm Marley Caden. It's time for the big three. We've got 3 stocks to go through, and then Rick will take us through 3 charts. Rick Ducat, of course, here for the technicals, and then here to take us through the stock picks is Charles Moon, stock strategist at Prosper Trading Academy. Great to have you both with us this morning. Now, Charles, let's start with you. If you wouldn't mind, before we get to your picks for the day, just a big picture thought on the market performance we've seen of late.
I love you, Marley.
I have maintained that we're going to keep on this bullish course. The Fed only confirmed what the market was thinking, is that we are projecting 3 rate cuts this year.
See, I wouldn't mind working with an Asian.
And they're starting to actually price in the idea that January could start off with a rate cut as well. With the forward-thinking market, obviously a lot of these stocks have been explosive as of late, and we've just been on this really good trajectory.
Yes,
I
we
don't see
have.
anything to really slow us down. You know, the possible government shutdown is looming. There's a possible conflict with China if the trade deal doesn't follow through. I just feel that there's not much to slow this market down. Monetary policy is starting to get dovish, and this is all the markets wanted. They wanted the Fed policy to soften a bit, and when we finally got confirmation, we have hit this little breakout to the upside. While it hasn't been explosive, it's been very consistent, and that just continues to remain within the sentiment since we bounced off lows, is that we've remained bullish.
All right, so then we're going to move right into your first pick here. Astera Labs, they recently got an upgrade from Citi on their price target, up about 71%. But as I just look at their chart, shares down about more than 5%, 5.5% today. Walk us through this pick.
Yeah, and we're seeing a little bit of rebalancing here towards the end of the month. A lot of these stocks that have been strong performers are down quite a bit today, and this is one of them. So initially, I was looking at this 235 price level. They were defending it yesterday. It broke a little bit lower today. So I actually
Who are
like
they?
the idea that it's pulled back a little bit more.
You gonna get my coffee?
Recent highs, targeting around this 215, 220 price. I think that we could find balance and hold at this level. This is offering great short-term value for the near term. This is a stock that's been beloved by both investors and short-term traders, and they've been very responsive off these faster moving averages. So this has been a point where we would be looking for a pivot. I love the rebound idea right back to around 240 to 250 in the near term. I believe that this is a stock that could achieve these levels in just a matter of days versus a matter of weeks, which is why a lot of retail traders love to trade this name due to the velocity and the volatility. So this is a key level, because if they start breaking down below this 215 price, there's a lot of downside to be had. Since this stock was just at 175 a month ago, we could see that possible breakdown to that range as well if we don't see that pivot here soon. So that's why I'm anticipating the buyers stepping in on a very, very bullish name as of late. We'll see if that 215 level holds.
All right, so Rick, with all of that said, can you walk us through the chart here for Astera Labs?
Yeah, so, you know, when we do have these big pushes to the upside here, and here's that kind of 170 area Charles was saying, that was where we opened up after our earnings gap to the upside here. So that was a low end that many traders might have had their eye on here. But, you know, this was our high point here and our breakout point around 193, 194. That could be another level to consider if things really start to break down here. But for now, though, 217, that was our old best close. We came quite near to that level during our recent pullback here, but we haven't quite made it to that level. Notice as well that you could say that for the most part our trend is still intact here. You could draw a white, this white dash trend line here. We did have a bit of an excursion beyond that level here, but for the most part, you could say the trend is still up. In the shorter term, though, we do have another downward sloping trend line here. So the question is now, are we retreating back to a supportive area before the uptrend continues here, or is this you know, maybe the start of more of a difficult situation for the bulls here? But you know, we'll have to see here. So for now, 217 lines up with our yellow 21-day exponential moving average here, so even extra emphasis on that level. RSI experiencing a bit of a reset. Our momentum indicator is out of the overbought area. Its trend line is broken. We are heading back toward the 50 midline here, so that could be another thing to consider if we cross back over that area here. Volume profile, standard deviation channels here. Well, you can see that we have a bit of a node here lining up with our 9-day exponential moving average and our +2 channel. Those come in right around 238
We're
or
at
so.
120.
That could be an upside boundary. And to the downside here, once again, we have 217 or so, and that 194 level, that lines up with our +1 channel here. So some notable supportive areas really stick out there.
All right, Rick, thank you so much. I want to move on, Charles, to your next pick. Your next one is Hut 8. Now, they recently hit a new all-time high after getting an upgrade and a price target hike from Roth Capital. But walk us through here, and are you bullish or bearish on Hut 8?
Extremely bullish. You know, they've kind of topped off a little bit here today near their 52-week high, but, you know, there's a lot of projection and possibility with this name. This is a standout along with IREN and even Cypher, CIFR. You know, a lot of the crypto stocks, especially the ones that retail traders and the public generally look to, names like MSTR and Coinbase, have struggled a bit. They're really underperforming a lot of the major players out there. But, you know, names like HUT and IREN and CIFR have been extremely bullish. They've been in this breakout trend. Now, they're not as explosive as names like Oklo and IONQ, the recent pumpers that we have seen exploding to the upside over the last week. However, this has been tried and true and very consistent. And for me, when I see progressive stocks or stocks making progressive moves, not in an explosive manner, but in an orderly manner, well, trend is your friend, and that dynamic is really important. So, you know, for me, I'm looking really closely here for a break of this 39.47 level. I think the initial slowdown is going to be about 42, but I do believe that 45 is kind of that tipping point, because I think if we get this stock above 45, and then Bitcoin also coincides with a breakout at their all-time highs, this is where the stock can now start getting into that explosive nature. They have tremendous upside potential. They could easily double up from that 45 price in a short period of time. Or maybe not in a day, maybe not in a few weeks, but ultimately in the same period of time that this stock has moved from $22 to $39. So ultimately, I'm looking right now right around this $34 price. The next layer I would be looking at is right around $30. I believe these are going to be great pivot points for short-term traders to scoop up to look for that 42 and 45 upside near term.
All right, so right now trading at 36.56
Deadly 27's
right
resistance.
now. But Rick, as we look at the technicals, you know, what are they showing us on the chart here?
Well, we had a pretty clear point that the bulls would probably want to have broken that 30.24. That was our high close from all the way back there. Now we have pushed above that level, a bit of a symmetrical triangle shape taking place here. Sometimes called a coil, sometimes called a cobra. It kind of looks like a snake in this particular one here. And the head would be this area, the snake like kind of rearing its head up like that. Kind of a more fun name to think about here. But regardless, though, what you would be thinking about in terms of the pullback here, we're seeing this period of sideways to downward consolidation after a strong push to the upside, often called a bull flag, bull pennant type pattern here. So what you'd be looking for would be for price to push back above those initial highs after this brief consolidation period here. So RSI still hanging
underperforms peers
here above that threshold of 70.
Announces $24 price target.
Bullish, even though it's starting to trend
got a downgrade
downward here as price drifts sideways. But our 9-day exponential moving average lines up pretty closely with that trend line boundary here. If we were to look at our other studies here, we can see that there's a little bit of volume here, but the significant volume area is starting when we get back down to the 28 level or so. So if we do get some kind of pullback here, the +2 channel could be a foothold potentially for the bulls. 34.17 is where that line comes in now, and then those old highs near 30.24. A quick look too at our longer term chart here shows that we've had quite a fall from grace here, but notice we're taking out those old highs here. We are significantly above the old range that we established here. So the 40 level looks like it could be an interesting test for this stock.
It's so interesting when we look at this longer term chart. I love when you pull these up because it looks like we're so drastically below this, but if you look at their chart progression over the last 5 years, still up more than 1,000% for HUT 8. So I mean, huge growth, even though this peak looks disarmingly like something has gone wrong here. But when you zoom in, you see we've been on a pretty upward trajectory here. But Charles, with all of that looked at, let's move on to your next one we've been talking about quite a bit this week with the launch of the iPhone 17 Apple. What's your perspective on Apple, and do you buy into this heavy demand, and are we coming into a super cycle here for the iPhone?
ACRH,
that's really
HR.
interesting, is because I think the demand for the phone has actually caught a lot of people off guard. A lot of people were nervous that they're just kind of recycling the same thing over and over. People have said that Apple has gotten boring. That's really why Apple has struggled a bit this year in terms of gaining a little bit of traction to the upside. Well, just recently they've gotten above that 200-day moving average, and all of a sudden the stock is becoming a totally different performer. They're getting back to what Apple was, which was the leader of the market. So I really do believe that they're going to be testing
leader of the pack
at 259, and I actually believe that they're going to break out. I believe that breakout is going to lead to a rally to 275. But again, if more and more data comes in, and if that iPhone 17 demand does lead to record numbers, then we're actually going to be knocking on the door of 300 by the end of the year. Dan Ives, a highly respected individual on Wall Street, especially in relation
until he called out A&C,
has the highest price target projection out there. And if he is that bullish, I believe that the market is listening here. We saw a really explosive move yesterday, a little bit of a resting period today at the recent highs, but I believe that we're not going to roll over here, that we're just going to consolidate a bit. We're going to test these highs. The initial test may not break, but I do believe that it's going to go, that Apple will pick itself up, it will break, and it will make that move towards 275. This is probably the one stock that I'm most bullish on out of the Mag 7 so far.
All right, well, we're about $20 off of that 275 that you're looking for. So, Rick, as far as what the technicals are telling us, is there room to move to the upside here?
Well, there's always room to move to the upside here, but we are stuck near our previous highs here, 259 or so, 260. That's around the level the bulls would want to beat here. But if we were to backtrack a little bit here, you can see this old high point here was tested twice before we had that big push to the upside. That's why we try to look for these repeated stopping points for price. We're not saying we're making a prediction that it's going to break above or it's going to fail. These are just the levels where you could see the potential for the breakout if it starts to push above this established boundary. Another level here that stood out, another high point there near 250. That could be a supportive area now if we do start to get a pullback. So if we were to think about our moving averages here, when price is moving quickly, moving averages aren't too terribly much help. Oftentimes the 9-period exponential moving average, that's one of the shortest ones that we follow, that comes in near 244. So that could be an area to watch, especially if it starts to line up with some of these other supportive areas during a pullback. RSI broke through its downward sloping trend line and re-entered the overbought area, typically regarded as a sign of strength in a trending market here. So look for continued strength in momentum if price makes a big push to the upside here. So if we were to think about volume profile shows all the concentration of trading really down here, 228, 229. That would be the standout level in terms of volume. But to the downside, though, our +2 channel comes in near 246. Our +3 channel comes in near 260, 250 or so. Those could be some boundaries to watch out for as well based on our standard deviation channel study.
All right, Rick, thank you. Right now, trading right about 256, but Charles mentioned Dan Ives. His new price target is a street high of 310, so he envisions it moving about the same way as Charles does, but I want to thank you both. That brings our big three to a conclusion. Rick Ducat, Charles Moon, thanks for being with us today. And coming up next, we're going to spotlight the latest headlines in the tech sector after NVIDIA's massive investment in OpenAI, as well as the
She's a
shift
scary
in the
chick.
H-1B visa policy. That's next on Trading 360.
She puts too much emphasis on these pumpers on fat cats. Marley does. She has too much appreciation for them. I don't. Dan Ives, I mean, he'll call him out, but man, sometimes his targets are just a little bit out of the park. You know, I wouldn't go with his resistance levels at all, unless you want to sit on a stock for years. And then he never says it, you know, like Tesla. He never said he got out of it. And then it dipped all the way down, and he kept saying, buy it, buy it, buy it. And I said, well, it's down $150. What do you want me to do, man? A share. Keep buying it. Eventually he was right. But his target was 5 something. And we hit 515 or 500. Maybe 515. I got out. I think. And then he got involved in politics. Elon. We're back at support on the SPX. It's gonna have to run out of time eventually. I'm sick of this. I was up $6 a contract. That's a big winner. Oh. A Ringa? Do you think that had a ring to it? My belching? Dan Ives is terrible, yes. The guy says he was a miracle worker, well respected. What? I've never seen him be right with any of his calls. Eventually, they'll balance. That's what they do eventually. But AMC, you're worse than kitty litter. Roaring shitty. Pumping AMC. You gotta be kidding. How far dead are they? 10 billion? I'm about due for another nap. Small one.
say as much as 800 million, the fastest rollout of any consumer-facing application in the history of technology. Nothing comes close. So I think cementing this relationship is also very good for OpenAI, because it's going to maintain, they need to get access to chips. These large language models are really robust, and they require a lot of compute power. And so with this deal, OpenAI is locking in access to NVIDIA's system, which is an unbeatable one right now. And they don't have, NVIDIA doesn't get voting control of any kind. So in that regard, it's a great deal for OpenAI. What it's going to do for the actual power of the IPO later, I think we need to see how this works out over the next few quarters.
And as far as your long-term expectations for NVIDIA, this just one in a line of many of investments they've made, you know, of course, with Intel, and then we've got Stargate and CoreWeave. You know, they've had just a series of investments here. What are your growth expectations for NVIDIA as they continue to go on this CapEx spending spree?
You know, that's an excellent point, and I'd like to see a couple of more quarters of data. I mentioned earlier that earnings growth has slowed a little bit, and as part of it is the CapEx. I mean, these data centers and these chips are very, very expensive, and I think what's great for the market and also for NVIDIA stockholders is this is an affirmation that we're not going to see a slowdown in the AI boom. It's pretty much an unstoppable trend. Never seen anything like it in the history of technology being around this area.
I have the internet bubble.
Years, so never anything quite like it. I have.
This guy doesn't been around very long then. The internet bubble's still moving.
Market cap company.
If it wasn't for that, you wouldn't have the AI.
The quarter year over year. That's pretty unprecedented.
I mean, we saw NVIDIA just on the news of this deal. Their market cap went up to $4.5 trillion just on this headline alone. So you know, it is fascinating to watch. But with that said, do you have any concerns about NVIDIA and all of the sizable commitments that it has made? You know, most specifically this one with OpenAI. Is it really possible for them to scale this in a manner in which case the demand is still there for them to meet it?
I absolutely believe so, yes. I mean, that's one of the things so they have a fairly lean model. They don't use their cash to buy a lot of stuff. They aren't out making these major acquisitions. I would be concerned if I saw that Jensen Huang was announcing a series of M&A, you know, doing a lot of bolt-on buyouts. I just don't think most companies are going to integrate into the speed of the operation and the culture. He likes a lean operation with more reports. So they're not frittering away cash on acquisitions that may not work out. So, and the part of it is they don't want to do it. Part of it is they don't need to do it. Another part of it is they really want to remain focused on the bottom line and continue to improve their efficiencies. The cash flow here is off the hook. They're going to get to a run rate of about $100 billion in free cash flow in the next 3 or 5 quarters. That's as much as most companies would be lucky to have that as annual revenue, like basically Target's revenue in free cash flow. It's a pretty amazing operation there. So I think they can continue to do it. I don't think that Jensen Huang's going to get distracted by, you know, the bright shiny objects in Silicon Valley that he can buy. I don't think they want to do that. They want to continue to do that. Blackwell is a breakthrough, and they're already talking about the next thing on there. So that's where they remain very, very finely focused.
And Michael, while we have you, I want to pivot to talk about this price hike we're seeing in these H-1B visas. You know, this is going to directly impact or potentially ripple through the tech sector in terms of how they recruit talent. Just looking at some of the numbers, Amazon, a top employer, they've got more than 10,000 applications just by the end of June this year. Microsoft, Meta, the next two, and then Apple and Google rounding it out. So I mean, we've basically got most of the Mag 7 there. How is this going to impact how these companies recruit talent?
I'll be right back. I'm gonna go lay down a second.
More costly in the sense of, you know, they know how much the cash flow is going to be affected by the number of people, but you know, a lot of these companies are lucky to get 1 out of 5 of the people that they want because you have a lottery system. So Wall Street and corporate executives have one thing in common that they hate, which is uncertainty. So one of the things this is going to do, you know, it's very early, we don't know how it's going to work out in the real world, but what it does do is take out the uncertainty. So it's going to make it easier for big technology firms like Amazon, Meta, and so forth to project how many of these top-notch AI or EEs, electrical engineers, that they'll be able to bring in. And you know, we have a STEM issue in this country. We just don't graduate enough people with STEM degrees, so that fills that gap. I think it could be Yeah, everything is in the real world, how's it get implemented, but right now on paper, I really like how this is going to remove some uncertainty, bring in talented people. You know, Elon Musk with an H-1B, and so is Satya Nadella, so we need these guys.
You know, and the price increase for our viewers, in case they're not familiar with how much it's gone up, it was between $2,000 to $5,000 to sponsor someone on an H-1B visa. Now it will be $100,000 per worker. But Michael, thank you for joining us today to talk all things tech. That's Michael Robinson. And coming up next, we've got the disruptors. We'll be covering CoreWeave following multiple analyst upgrades fueled by increasing cloud demand. Trading 360 will be right back. Stay with us.
Stay connected to the markets in the Schwab Network.
Tune in 24 hours a day, 7 days a week on SchwabNetwork.com.
And on all your favorite streaming services. Schwab Network.
Available anytime, anywhere, on any device for free.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Welcome back to Trading 360. I'm Marley Caden here in our Chicago headquarters. Let's head out to the New York Stock Exchange for a check on the markets and welcome in Nicole Petalides, our lead anchor here on Schwab Network. Good morning to you, Nicole. How are things looking in New York this morning?
Good morning, Marley. You know, we saw back and forth action. If you were watching the futures early in the morning, I mean, you would have been crazy on the roller coaster of the back and forth action, somewhat of a wait and see mode. In the meantime, now you're seeing stocks a little higher. The Dow Jones Industrial Average, for example, up 125 points, but the S&P is lower by 7. This after the Dow, the Nasdaq, and the S&P had record closes yesterday. There's very much a wait and see mode for Powell's speech at lunchtime at 12:35 p.m. Eastern time. Certainly waiting on that. Anything he says could be a market moving event one way or another, as folks are still counting on 2 more rate cuts after last week's 25 basis point cut, the first of this year. We are seeing energy, healthcare, and real estate leading the way, and under pressure would be consumer discretionary and tech. With the deal between NVIDIA and OpenAI, that $100 billion deal brought some optimism to the action on Wall Street, though it's still under some scrutiny here in the big picture. We also have some of our guests being somewhat mixed. It seems that they all seem to pick higher targets. Marianne Bartels, for example, had a 7,200 target for next year for the S&P, expecting some volatility. Stephen Orr, for example, also had a 12 to 17% pullback, but he will be buying on that pullback when that happens. So overall, people seem to be long-term bullish, but expect some volatility. Back to you.
Thanks, Nicole. Now, I want to talk about Lululemon. Their rough year down about 54% year to date. They got
We could drop a lot more
today, but as I'm just taking a look at their chart, a lot of the tech stocks weighed down today, but Lulu up about 1.5%. Can you just walk us through the details of this most recent note?
No.
Well, I think the big picture is most of the analysts on Wall Street are in hold mode on Lulu. The valuation's pretty high. They're looking at the numbers of Lulu, and they have short-term concerns about the margin and growth prospects in earnings.
They
the
do?
other concern, too, is the inventory.
Who, the Fed
has been
cats?
relatively high. They've had 21% inventory increases in the second quarter. That's well above the 7% sales growth that we're seeing. And Baird now downgraded to a neutral from outperform, joining many others on Wall Street with a new price target of $195 from $225. That's right now we are seeing Lulu here at about $175 today. The big picture here is the concern also about consumers and will they be shopping. The latest consumer sentiment number did go down month over month. We saw that Michigan sentiment number come in at 55.4 from the prior
Puts are looking nice.
58.2. And so there's been a growing need for markdowns for the excess inventories. Are they able to get this stuff out? There's one little bright spot, and that is that the new expensive Platinum American Express card, which is going from $695 to $895 a year, and really gives a lot of these upscale folks some perks. One of the perks will be $300 at Lululemon, and Lululemon ultimately thinks that maybe this credit could bring in wealthy shoppers into the stores. But the near-term concern is whether or not the revision cycles are done, and so Baird in particular wants to wait and see if those the downgrades in the outlook are the concerns. They just want to make sure and wait until they make another move to the upside. In the meantime, they have tough competition from Alo and Vuori, underperforming names like Nike and Under Armour. So it's been a tough go of it. It's about 60% off of its 52-week high. Marley?
Nicole, we appreciate you breaking that down for us and talking Lululemon. That's Nicole Petalides, our lead
Oh,
anchor
God,
on Schwab
Molly.
Network. And now it's time for Disruptors. So we'll welcome in George Tillis, our senior markets correspondent. Today's company, CoreWeave, George, getting 2 upgrades today. Can you take us through both notes?
Well, I think, Marley, obviously there's so much going on when it comes to capital investment with artificial intelligence and data centers, and we're seeing such a large amount of money, either, whether it's meta platforms, which, Mark Zuckerberg declared it doesn't matter if we overinvest in this cycle, it's best to do so than be underinvested. And we saw NVIDIA yesterday with an investment in OpenAI, and CoreWeave, and Nebius Group, which we've talked about, I believe, on this program as well, are a couple of players associated with artificial intelligence and data center. They're essentially a new type of technology and service, which is AI as a service, or database services, which are recurring revenues, and they're essentially building out large-scale, hyperscale platforms, which are essentially leased by hyperscalers and even businesses that don't have the capital investment to deploy their own technologies. So it's a new business. It's one way to increase the total technology yield for AI computation needs. And again, if you look at the growth for this company, it's actually been quite phenomenal. I actually looked at the sales last year for CoreWeave. They're around $3.5 billion, but if you just go back to 2022, their sales were only $16 million. So this company's been growing exponentially. And of course, the recent IPO this year has capitalized the business quite well. Now, if you consider some of the movement in price action, but also the analysts, we look at Wells Fargo. They actually upgraded the stock to an overweight from equal weight. Price target on this name is 170 from 105 according to Wells, but they see the continuation of the hyperscale shortage into 2026. The other thing is that the AI architecture, which is still being built out, they actually see backlog for CoreWeave all the way through 2032. So they see about a 6-year backlog. And other firms like Melius, for instance, also upgraded the stock to a buy from basically a hold 165
CRWV
128. I think a lot of these analysts really see the backlog growth for CoreWeave as a huge catalyst going forward, irrespective of the fact that, this year for 2025, CoreWeave is still expected to lose about $1.50 a share. Next year, 30 cents a share.
Why would you be calling an upgrade then?
Right now, based on estimates, and it's a couple of years away, earnings targets, at least consensus-wise, are somewhere in the $2.50 to $3 per share range. So in other words,
That
they're
sounds
going
nuts.
from $1.50 losses this year to potentially $3 in profits as is right now going into 2027.
All right, so with all of that said here,
2027, that's a whole year and a half
certainly,
away.
you know, analysts citing a lot of potential avenues for growth, but still not yet actual growth that we're seeing here. You know, walk us through your example trade, and is it bullish or is it bearish?
Well, yeah, so we're bullish, and the reason I'm bullish is if you look at the trend in terms of price action, the company is demonstrating a momentum burst, I think, alongside the mega cap names. So these are periphery names, you know, Nebius Group as well as CoreWeave, but they're front and center of the AI build out. If you look at the price action too, going back to August when the company reported earnings, the stock actually dipped quite a bit. But right now it's breaking out of a diagonal channel, which could present an opportunity for the stock to reclaim price levels of around $150. So it's got momentum. It looks like it appears to be potentially now moving to 150 once again, which again is early August level. So I'm going to look at that as a possible target. So I'm going to structure a bullish trade by buying a call vertical. So I'm going to buy a $135 call, and then I'm going to sell a 145 call against it, which is right below that 150 target. Altogether, it costs a trader about $3.50 a share, or $350 a contract. So the whole premise of the trade is it's bullish. 138.50 is your break even, and then the max loss is 350 because it's essentially what you're outlaying. Your potential max profit is 650 a share if the stock hits 145 or higher by expiration at 24/8. So that's a max loss of 350 with a max return. The other thing that a trader could consider, if you're really bullish, you could just outright buy the 135 call. It would cost you about $11 a share. Break even is a 146 with unlimited profit. So what I'm doing in this case is I'm constraining the trade with a max profit of 650, but my cost basis is a lot less than just buying the 135 call out.
See, I wouldn't buy that
All
stock.
right, right now trading at 132.36 for CoreWeave, under a little bit of pressure today, but not as much as some of the other major tech stocks we're talking about. George, thank you for breaking that down for us, and thank you for that example trade as well. Coming up next, it's time for our 360 round. We're going to bring in our panel to discuss the outlook for the streaming sector and which names are best positioned in the streaming space. That's next on Trading 360.
I don't like her that much. I don't like the way she pumps these shitty stocks.
Trading at Schwab is powered by Ameritrade, unlocking the power of Thinkorswim.
It's not profitable?
Award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
I'm Alex Coffey.
And I'm Jenny Horn. This is Next Gen Investing, where we track the trends shaping tomorrow's market.
From tech to energy, crypto to consumer, we focus on what's driving investor sentiment right now.
Clear analysis and forward-looking market coverage every trading day.
This is a make or break level for this stock.
And that could certainly be a short to near-term catalyst.
Next Gen Investing, 1 p.m. Eastern.
Only on Schwab Network.
Welcome back to Trading 360. I'm Marley Caden. It's time now for the 360 round, so let's bring in our panel to discuss the latest in the streaming sector. Joining us are Dan Rayburn, streaming media analyst, and Seth Schackner, the managing director at Strat Americas. Thank you both for being with us. Seth, let's start with you. I want to kick things off just with the rumors and the reports of this potential deal between Paramount Skydance and Warner Brothers Discovery, and how you think that could potentially change the landscape in terms of streaming.
Sure. I mean, it's been rumored, so I don't think there's been anything that's been, kind of officially announced. But the thinking is that when Ellison bought Paramount, which was, kind of a long, exasperating process to begin with, that they were not going to be satisfied with just one studio. And so, what has been bandied about, in the press out here in Hollywood, is something that's close to an all-cash bid for Warner's assets that would preempt some of Warner's plans that they announced, Warner Discovery, to kind of split off those TV assets. And I think there's some private equity getting involved, but with Ellison family money largely. And you know, these are two companies that are pretty different in terms of size and market cap. And if it were to happen, it would be a very, very compelling merged entity, in my view, in terms of the landscape competitively. It'd be a real threat to Netflix. And I'm for sure this one would get plenty of regulatory scrutiny for a lot of reasons in terms of losing buyers and news being under one house, a couple networks. But yeah, I think would be a big response to Hollywood studios' need to get larger to compete for talent, for programming against Netflix, essentially. But still something that's just been bandied about.
And Dan, I'd like to come over to you for the same question here too. You know, what are your thoughts on if this comes to fruition and becomes a reality? Right now, just reports and rumors. You know, how does that change the bigger picture of the industry?
Well, there's no way to say. We just don't have enough information. Everybody's speculating right now, and besides the regulatory issues, we don't know what will be acquired. We don't know what type of content they would get. We don't know if they bundle services together. There's just too many unknowns. So it's interesting the industry is speculating about so many deals right now that have not actually taken place, and we don't even know if they're going to happen. But it's too early for anybody to say. We would need actual details.
All right, so with that said, one thing we do have actual details on is David Ellison has been very clear about how important sports are for his view of Paramount Skydance and how important live event streaming is, and that there's only so many contracts to go around. So I guess, Dan, my question to you is, what role are sports and live events programming playing in streaming and the success of the services that have those contracts?
Yeah, it's a great question, and the nice thing is we have some numbers over the last couple of weeks. We know that sports, and in particular NFL, is really big as far as viewership. And even though in streaming we don't measure viewership the same way that we do on TV, the fact that we saw Amazon's TNF kickoff had 17.7 million viewers, that's called AMA, average minute audience. YouTube's live stream of the NFL game from Brazil had 19.7. So we're starting to get some numbers now. Even the Netflix Canelo Crawford fight, you know, it peaked at 24 million concurrent streams. So it's interesting to see how those numbers are going up. Now, when compared to NBC Sports Sunday night NFL game, right, Cowboys-Eagles, two big teams, they had an AMA of almost 32 million. So we're still not there in terms of viewership being measured the same way for streaming as we are in TV, but we have enough data to see that these sports events are very important to the platforms and also have recently gone global. That's an important thing as well. YouTube's exclusive stream was global. NFL on Christmas on Netflix, that's global as well. So that's different than previous years, but sports is where it's at.
And Seth, coming over to you, you mentioned Netflix a couple times in your first answer here. You know, they do have that Christmas game that Dan just mentioned. Also, FIFA, going to be very important for them with the World Cup. How much is that going to give Netflix an edge? Because I think they are still the name that comes top of mind when you say streaming services. Most people say Netflix.
Yeah, I mean, I totally agree with Dan's comments. I think, just top-level sports is something that, particularly live sports, that seems to have, demand for not just broadcast TV, but for all the streaming services. So I think it's extremely important. I mean, I do think for Netflix, they're so big, so wide, so deep with programming and content, that I view some of these pieces, whether it's sports or video, I come from the music industry, there's always rumors about that coming along. I tend to view that a little bit incrementally, kind of as experiments, if you will. But I think it's been successful. I think Prime's experience with it, for Thursday night has been successful. And I also just think on sports, like if you're a consumer, I find there's so many offerings and it's kind of confusing. And I still to this day do not know where I can get every game in one place. And so I think there's a little bit of an open playing field there. But from a Netflix perspective, I kind of view it as, a solid retention tool as opposed to like their main bread and butter.
All right, we only have about 30 seconds for each of you, but I'd love to just have a final thought of which streaming service you think is best positioned moving forward. Dan, we'll start with you.
Yeah, so there's no one winner. Everyone talks about a streaming war. There's no streaming war. War is an armed conflict. That's the definition. This is competition. Competition is good. We're seeing bundles shift. We're seeing changes in terms of which platforms have which pieces of content, but we're going to have many winners in the space to find however you want to measure their success.
All right, and Seth?
I'm still a fan of Disney because of all the different hats they've gotten there, even with the recent controversies. So apart from the obvious Netflix, I put my money on Disney Plus to come back.
Well, we thank you both for being with us to talk all things streaming and the importance sports may play as we see more consolidation in this space. That's Dan Rayburn and Seth Schachner. Thank you so much for being with us today on Trading 360. We also want to thank all of you for being with us today on Trading 360. I'm Marley Caden. It's been a pleasure being with you this morning. You can download the free Schwab Network app available in the Apple App Store and tune in 24/7 on schwabnetwork.com. You can also follow us on YouTube. Stay with us because Fast Market with Diane King Hall is coming up next.
I think SPX just went up too much yesterday. It's not.
Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for
We're not
investors
doing very
like you,
well
with
at all.
unlimited ATM fee rebates
We
for
got a
cash
double bottom
withdrawals
here.
worldwide. No overdraft.
It
fee,
has to hold
and
this,
enhanced
or I'm gonna get
security
out.
features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists, streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. schwabnetwork.com. Live at the New York Stock Exchange, and this is the Watch List. Your midday view into the trends driving the markets with a sharp focus on technology, innovation, and companies leading the next wave of growth. Big movers, real-time interviews, and insight from analysts, founders, and market voices you trust. The Watch List, 2 p.m. Eastern, only on Schwab Network.
Welcome to Fast Market here on Schwab Network. I'm Diane King Hall. Coming up about noon Eastern time here at the New York Stock Exchange. Later this hour, we're expecting to hear comments from Fed Chair Jerome Powell. Meantime, up the road, up in Midtown, you had President Trump speaking at the 80th session of the UN General Assembly. Trading activity's been choppy so far today, but let's do a check on where the major indexes are at the moment after those record highs that we saw yesterday. Initially, we did briefly see the S&P 500 touch another record high, taking a step back. It's been flip-flopping today. And looking at the S&P 500, off by less than 0.2% right now. Dow, pretty range-bound right now, up less than 0.1%. NASDAQ 100 taking a step back right now, off by about 0.25% there. Small caps, though, continuing to catch a bid, up a little bit more than 0.5%. And that's the story many I hear say that they're looking for the potential further confirmation of the rally that we've been seeing and the momentum that we've been seeing in terms of favoring risk on and the bulls. Here's the roadmap for today's show. We'll look at example option strategies for Micron. That's set to release earnings after the bell today. That stock has virtually doubled since the start of the year. Plus, the team from Likefolio will be along with sentiment data on Reddit, and CoreWeave getting some love today from the analyst community. All right, now that we've got the roadmap for today's trading action, time to bring in the trading experts, I should say, my co-host, Tom White in our Chicago studio, and Kevin Haynes joining us live over at the SIBO. All right, you guys, let's talk NVIDIA. I mean, it's taking a little bit of a step back today, investors regrouping, but we cannot ignore that record that it had. Tom, what's your take?
Yeah, I think, the deal that they announced with OpenAI, I think there's still a lot of questions that have to be answered about it. They're investing in the supply chain, right? OpenAI building out the AI infrastructure. Sam Altman was down in Abilene, Texas, opening up one of their data centers. They've already got one running there. But this is all about the investments that OpenAI needs to kind of compete with the other hyperscalers in mass scale, and being able to basically secure those that supply chain from NVIDIA moving forward maybe sets them a little bit of apart. NVIDIA's taking a lot of the proceeds that they're getting, selling it, or investing in a company that's actually buying their product. So I think if you take a look at this, it's probably good for both companies here, probably better for OpenAI in the future. But this also raises a bunch of questions, like you're investing in a company that's actually purchasing from you. So where is the investment going to start to pay off here?
ES is going down.
Besides the fact that they're going to be able to supply OpenAI with more chips in the future, and they've got that partnership built up. But I think those are some of the questions that I would have. Moving forward, is this a good investment?
Got two supports coming up on it.
It is, but I still think there's some details that need to be ironed out.
One right here. If we don't hold the wick.
Different analyst views out here. D.A. Davidson has some concern. It's become an investor of last resort in AI. And then you also have Evercore ISI, who has boosted their price target on NVIDIA to 225. So obviously they see some more room to run from here. Kev, what's your take?
Diane, there was a time where $100 billion used to be a lot of money. And looking at this deal and the one-on-one negotiation, and where did they close this deal, Diane? In the UK. Traveling with President Trump to his state visit to the UK is where they got together and hammered this out. Now, it's pretty incredible when you look at it. NVIDIA's investing in OpenAI. OpenAI is then going to buy chips from NVIDIA, but that's not all they're going to do. That's some of it. But another reason that Amazon might be down today, they're going to get into the cloud business, OpenAI. They basically hinted to that. They're going to open up their own cloud services. So there's another player in that as well. But this is a huge deal that the only question is, I would hate to be a competitor of OpenAI, because it feels to me like they just got most favored nation status with NVIDIA. And when you're trying to buy the best chips, how are they gonna make decisions like that? But this is just showing you the price tag and the number of commas involved in this business now. It's nothing short of exceptional, and it's NVIDIA again. How many times, Diane, have you and I talked about this? NVIDIA widening its footprint, not only getting into the chips, but getting into the business of the people that use the chips. That's basically another bet. They're doubling down on the importance of AI. It's pretty incredible.
Great point. And I think, though, $100 billion is still a lot of money, because it's nothing I would sneeze at if somebody offered me that. All right. Kev, I actually want to get your take, though, because you said
the Fed, we were out of the quiet period, and now it's going to be loud, and it does seem that way. Michelle Bowman, the Fed governor, speaking out earlier today saying, quote, it's a lot easier to support the labor market by lowering the federal funds rate than it is to fix it after it's broken. So we got a lot of comments out from Fed speakers. We're waiting for Powell. Kev, I'm curious to know your take because you said, listen, it's going to be loud this week.
James Bullard was already on this morning. Austin Goolsbee was on this morning. Stephen Mirren was on late yesterday. Michelle Bowman, I thought she made a really interesting observation. Here's her quote. When conditions exist like this, monetary policy should de-emphasize inflation. There's, in plain language, how she feels about interest rates, because she thinks de-emphasizing inflation is what they should be focusing on right now. So yeah, James Bullard came out. He thinks 100 basis points lower, within a reasonable amount of time. So he's dovish. He doesn't have a history of being dovish. Stephen Myron laid out a really interesting point about what he sees inflation. And he thinks, Diane, it's a lot of the Trump policies that are allowing things like productivity and savings to go up, and therefore you can lower interest rates based on that. But yeah, a lot of great, reading through all this, you really get a clear picture of the differences between, remember, it was, several Fed members out yesterday said no more cuts. Boy. Now you're getting the more dovish people talking today. It's, wow, it's a lot to keep up with, frankly.
Yeah, it is a lot to keep up with. So, we've got a little bit of the ping pong effect that's happening. Tom, what's your take?
Yeah, I think it was, not surprising that Michelle Bowman came out with those statements. She said, I think one of the key things that she said, she doesn't want to fall behind the curve as far as employment goes at this point. And it almost feels like, the Fed has this dual mandate, right, where they have to focus on inflation, right? That's been kind of grinding a little bit higher, but we're just above the levels that we were in 2024 about this time. But the labor market is a lot worse, right? So it's almost like
hit my next support.
Fed members, and we could throw Bostic into that category, and maybe even Fed Chair Powell, where they're focusing on what makes them look right at the time. So last year, when they cut 50 basis points in September ahead of the election, they were talking about the fact that there was weak labor data in June, July, and August, right? Well, that pivoted, and that wasn't true, even though you still had CPI around 2.6%. Well, now we're at CPI at 2.9%, and the employment picture is a lot worse in that regard. So if you take Bowman's comments, she's right. You don't want to get behind the curve of this, and then with all the revisions down lower that we've seen for employment over the last year, and then especially over the last few months there, that's kind of, reciprocating her view that, hey, you don't want to be behind the curve. We do need to continue to step up our rate cuts at this point. And, also that with that statement that, hey, we're going to kind of maybe, leave inflation to the side because maybe that impact is just transitory where it's going to start to cool down. Then Goolsbee came out with some numbers, and he's talking about
this one here.
Pretty dovish, but he might be political too. We don't know at this point, but he's talking about the labor market. They're looking for more weakness there, and he didn't seem too concerned about the inflationary pressures to the upside. So yeah, I think I've talked about the bifurcation that we're seeing within the Fed and the way that they're voting and the way that they're laying out their economic projections and the dot plot. I think that's going to grow until we get maybe a trajectory, maybe an inflation that they want to see where maybe it finally stops rising, start to mellow out a little bit. But Goolsbee did state, hey, they're not moving off of that 2% inflation target, and that's going to stick.
Okay. Let's talk Boeing. It's been having a very different year this year than last year. The wind has been at the back of Boeing this year. Have you talked about that when Kelly Ortberg was put in as the new CEO? You were like, this is it. And listen, they've got more orders out today. Kev, what's your take on how it's performing?
remember, I'm such a student and a fan of the news flow, and the news flow's coming. In Uzbekistan, I thought that was a country in a Bond movie, Uzbekistan. I didn't even know that was a country, but they have a big plane order as well as China's gearing up for now a big plane order. So the news, remember, when they get orders, they get backlog. When they deliver planes, they get free cash flow, their balance sheet gets better, and they get closer to recovery. This is a stock that still at one point was $450, and it has just sold off from, 240s, the low 240s down to the almost 210, 212 area. Now a nice rebound today. So a bit of good news for Boeing. We all like that.
Okay, well, I know you know Kazakhstan, and it's near there. Tom, I'm curious to know your take.
Yeah, I think if you take a look at, the Uzbekistan order, yeah, it's 22 787s, and some of those are options for planes. I think the big key here is, Trump's at the UN right now. He's going to have a meeting with Erdogan out of Turkey. I think that order is going to be, what's probably driving most of the bid today besides the Uzbekistan order. But then also, as Kevin mentioned, that China order, as they continue to work on these deals, whether it's the TikTok side, whether it's the chip side, the metals that they're trying to get, out of China at this point, and they're using those in negotiations. Well, Boeing's going to be right in the mix there too, because that's going to be a major part of any tariff talks and any solution to the problems that we have as far as tariffs and looking down the road. I think that's going to be the big key here for Boeing. And Kevin mentioned, the free cash flow and the job that Kelly Orper's doing. Once they start ramping up production more, they're still waiting, processes to get that through where they can actually increase production, especially on the 737 MAXs. I think that's going to be key moving forward. But the backlog, nearly 6,000 planes at this point, so they've got a little bit of time to work with, but they need to get that production continuing and stay out of the headlines, the bad headlines.
We got much more lower to go.
Because they've been in the headlines, and it feels like not as frequently this year, and for the right
I got
reasons.
667166 next.
It seemed like it was, difficult headline.
I got 667166 next. I'm gonna do something here with the Fibonacci. Probably 50% pullback, maybe. $667,365. That could work. Dadgummit. Yeah, we could drop more. I'm just now looking at that run we had yesterday. That is enormous. It'd be hard to be bullish right now.
For Amazon.
Yeah, a bump in the road. I mean, we've seen this repeatedly, in a lot of these major tech companies where there's potential fines, there's Department of Justice inquiries, there's the toll booth that is the EU as far as fines go for a lot of these major tech companies. But Kevin's got it right. Everybody's looking for that next big stock that's going to hit all-time highs. Tesla's just made some inroads. They're near all-time highs. Microsoft, they might be the big winner in this OpenAI Nvidia deal, right? Because they own about 13% of OpenAI, and they've been waiting for monetization of that particular investment that they've made there. But Amazon, you look at this and they're reworking their grocery business to be more fundamentally sound. Their growth rate as far as AWS is pretty significant. but they're the big 800-pound gorilla in the room, so their growth rates aren't going to be as high as Google and maybe Microsoft, which are smaller players in that space. But yeah, I think you look at names like Amazon, you look at names like Microsoft that are off of their all-time highs, and if we continue hitting record highs into the end of the year, historically we're going into that strong fourth quarter. You would expect these two to play catch-up, especially maybe Microsoft and Amazon.
Yeah, and so the headwind today for Amazon, this FTC lawsuit saying that Amazon used deceptive practices to, get users to.
No wonder Amazon was down.
Subscriptions.
Hey,
I'm one of those people who repeatedly renews. Go ahead, Tom.
Yeah, I mean, that's the whole thing. Who's giving up their Amazon Prime membership at any point here? That's why I say this is kind of a bump in the road. It's like, hey, if they came out against Netflix, are you giving up your Netflix subscription? Probably not. I don't know what kind of tactics they're using, but at the same time, I don't know anybody's giving up their Amazon Prime membership anytime soon.
Exactly. So we'll see again. We'll let this play out and see where it goes. It could very well be just a bump in the road, like you guys said. Great stuff, guys. Coming up, bull versus bear. The guys get their example trades put together for Micron. It's got earnings due after the close of trading today. We've got more Fast Market after this break.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Welcome back to Fast Market here on Schwab Network.
Starting to reverse now.
Micron earnings ahead. Those are due after the close of trading today. Analysts are expecting Q4 adjusted EPS at $2.82 on revenue of more than $11 billion. The implication is year-over-year EPS growth of nearly 140%. Keep in mind that stock has practically doubled since the start of the year. All right, let's put on the trading glasses now. Welcome back in. My co-hosts Tom White and Kevin Hinks. Guys, it is bull versus bear time. Before we get to those example trades, we have to talk Micron. Kevin, I'll start with your take on this one. I mean, listen, this has been a significant outperformer year to date. What's your take?
Yeah, I mean, pretty incredible. A lot of analysts raising earnings per share targets and revenue targets, a lot of upgrades going into this. The stock, though, has run a long way. As you know, you mentioned April, it was $61. Now it's almost 100, just off the $170 highs. So it's run a long way, but it's waist deep in AI right now. It's right there, a major player in this game. The question is it cheap or is it overvalued? It's run so far, the bar is very, very high, and when that is the case, Diane and Tom, as you guys know, any weakness, any sign of failing on any metrics, and the stock could back off. That's what my fear is, my worry about it. But so far, the AI stocks haven't disappointed up to this point.
And that's a good question, right? Is it cheap? Because some argue that when you look at it compared to peers or the sector, that there is still value there. But at the same time, the stock has ripped so far. Tom, what's your take?
Well, I think you take a look at it. Kevin mentioned the price target hikes that we've seen over the last couple of weeks going into this report, pretty elevated, right? Everybody's, trying to get ahead of this. But if you look back in early August, mid-quarter update that Micron gave, they raised EPS estimates for this quarter up 14%, revenue up nearly 5% from what they gave on their last earnings report. So the company is comfortable raising those estimates, and which has maybe the analyst community on board too. But you take a look at the high bandwidth memory, and that's going to be their growth area, right? They also signal that they're going to increase operating margins are going to go up by more than a 2 or 3 basis points also. So that's actually helping them. And then you start looking at outside of high bandwidth memory, which is going to be their growth rate. You're hearing all the AI infrastructure build out. They're going to be right in the mix of that because you need a lot of memory. But then also pricing on DRAM and NAND has actually increased due to the fact that demand has increased. This is a really cyclical stock, Diane. Kevin and I have been trading this for years. We've seen the ups and downs, the roller coaster that this stock can provide. But the company's signaling and the CapEx spend out of the big hyperscalers is kind of signaling. That's why everybody seems to be optimistic going into this report. But to Kevin's point, really overbought on a technical and maybe valuation level. But they better hit every metric right on, spot on, and potentially raise guidance for this to be sustainable.
Okay, so you all have been covering this one for years. So then, Kevin, especially since you know the cycles, what is the approach that you're taking in terms of your trade example?
Well, I want to give myself, if they come out with good news and nothing happens, right? I want to set myself up for neutral to bearish news. And even, like I said, because if they miss on anything, Diane, this stock could back off. So I did something we do fairly often on the show. It's a complex trade where we take the expected move, currently around $15, where the stock is trading right now, 168. I went in and sold this week's 180, 185 call vertical. So just short the call vertical on the upside where the stock would have to move. Then I took that credit and used some of it to buy the 150 put calendar. Now that's a little bit outside the expected move, but this stock, like I said, can move here, and I don't want it to blow through the strike if there's any bad news out. So using the short call vertical to finance the purchase of the long put calendar, I put it in around 35-cent credit, trading about 40-cent credit now, which means if nothing happens and everything goes to zero, you make the credit that you took in. But this is got a downside target where it peaks out right around the $150.
Yep, I'll take over. This is the Kevin special. I like to call it the custom four-legged spread here, using that short call vertical to help finance the purchase of that 1 week wide bearish put calendar. Kevin mentioned it's giving you downside exposure, but if the stock does nothing, you're still going to be profitable on this position. But let's break it down. Selling in the September 26th weekly options, selling that 180 call, buying the 185 call. So a short $5 wide call vertical, helping to finance the purchase. You're buying the October 3rd weekly 150 strike put, and then against that you're selling the near-term September 26th weeklies that expire in just 3 days, that same 150 put. So there's your bearish 1 week wide put calendar to the downside. Collected a credit roughly about 35 cents on this. That means your break even. Anything below $180.35 is going to be profitability on this trade. Now you can see where the apex profitability is. right at or near that 150 strike. But even if this thing falls 2 or 3 standard deviations to the downside, maybe they surprise to the downside and the stock sells off even more than what the option market's pricing in, which is about a plus or minus $15 move, you're still going to be profitable because you're taking a credit on it. Now, where you don't want the stock to go is above 185. That's where you have max loss on this. Nearly $500, about $465 if you collect that 35-cent credit. That's where you don't want it to go. You don't want to have an outsized move to the upside on this one. So you're using 4 legs on this spread to do that. Now, you've got some assignment risk on that short option on the 150 strike.
Okay, let's gain respect on this support.
Also, but giving yourself exposure, I like to call this, it's not a bearish trade, it's a neutral to bearish trade.
What are you going to call it?
On here, but the idea here is you go down about that $15 to $18 and you're right around that 150 strike, and that's where you're going to see max profitability on this 4-legged spread. So good look at that one. But now, Kev, I'm going to go into my example trade. It's a little bit different. We don't really have a bull-bear debate. It just gives you some exposure either way without having to pick a direction because, as you mentioned, Kev, this is the option market pricing in about that plus or minus 9% move in the shares. And with it sitting at these lofty levels, we could see some outsized move. Remember, Oracle was near all-time highs going in their report. The stock still jumped 36% the day after earnings. So I looked at a strategy that says, hey, if this thing moves big in either direction, maybe $20 or $30 to the upside or downside, this is profitable. You just don't want any consolidation in the shares. So I looked at buying an iron condor here. We're going to buy it out of the money call vertical. We're going to buy the 180 call, sell the 185 call, buy the 157.5 strike put on the downside, sell the 152.5 strike put. So you're buying a call vertical, buying a put vertical. You're paying roughly about a $2.50 debit. That's where it's trading right now. There's your risk, $250 per spread on this, with the potential to make $250, but that's got to be below 152.5 or above 185. Kevin, you know, we talk about this. Implied volatility levels are high, but this is a 1-to-1 risk-reward ratio, and if you get that 2 standard deviation move, this one pays off.
Yeah, you're right. Implied volatility.
Well, we're at support again, so this has got to hold for it to run up and continue. We haven't broke out of the snake yet. The market's a tough one today. This last trade was. Back in the channel again.
slash ES is at a double bottom. A little higher low, but almost a double bottom. It probably will be. I'll be back. Oak. We break out this channel on the slash ES, we'll move out, break out the 63. So they weren't talking too good about Lulu a bit ago. Beard downgrade Lulu to neutral, lowers price target to 195. Well, Beard, it's at 175 right now. Oh, the prison guy's on. Let's see what he's got to say.
Advertising almost an afterthought, and so now that they're a public company, you know, they're getting pressure to monetize, and they've been able to unlock extreme value by, you know, basically by producing what many might consider basic advertising technology for their advertisers to use. It's just their content is better and much better organized, so there's a significantly higher ROI to advertising on their platform than some of the others where it can be pretty sporadic.
Part of it is, I think, just the community aspect. When you go into Reddit, you're looking for, you know, kind of a curated thoughts from different people on the topic that you're searching for. And personally, I do find their ads less intrusive compared to other platforms because it's, you know, not right at the top of whatever you're searching for. But let me ask you this. I know you have fresh data on what impressions look like for Reddit compared to other social media sites. Obviously, TikTok has been top of mind recently. But tell us what you're noticing about the trends for Reddit compared to other social media platforms on impressions.
Yeah. In terms of web presence, you know, Reddit growing 5% year over year. So it's it's not anywhere as explosive as TikTok's growth, but it's positive when you compare it to Facebook or Snapchat, which are both negative. And when we look at visits versus stock price, Reddit trends remain pretty much right in line with stock performance. So we think Reddit is fairly valued here, despite an extraordinary ramp up. We don't think that this is one of those bubble stocks, and it'll probably remain volatile for a significant period of time as they continue to roll out these new advertising technologies. But this is a really solid platform with a really solid user base that is extremely loyal and defends the culture of their communities very well. So it's a good place for advertisers to start spending more and more money, and the technology is finally there to allow them to do so.
All right, thank you, Andy. Appreciate that insight and the latest data that you all have with your look across Reddit and the entire space. That's Andy Swan, co-founder of Likefolio. Appreciate it. Now, for the trading perspective on all things Reddit, I'm going to yield the floor to you, Kevin, and Tom. Bring Tom back in to dig into those insights from the Likefolio team. He brought a perspective that it's getting more web impressions, not obviously the same level as TikTok, but certainly more when you compare it to other platforms. You guys take it away.
Yeah, go ahead, Kev.
Tom, when I look at something like Reddit, it's one of those movers, but it's also, has recovered. It's come down $40 off its recent highs. So it's not void of volatility. Implied vol has ticked up, and there's, some of the articles you read have serious doubts about their user growth. They say it's starting to stagnate, but Andy's numbers are pretty glowing, Tom. And so, again, maybe like we talked about Amazon, 50, this is 55. A little bumpy patch in a pretty good company. Because the stock, like I said, has come significantly off its highs. So the trade I looked at, Tom, was something in the pretty simple camp of taking the expected move. I went out to October 10th, and I looked at the expected move of about $25. It was a little higher, I think, earlier, and I just lined up the 215, 205 short put vertical. So just taking that move, still giving it room more on the downside as it kind of figures out its way, because it's down pretty hard so far today already, and just selling that put vertical. I put it in for $1.70. I think it's trading probably $1.50 now as the stock has come a little bit up off its lows. But this is a way to get long deltas in Reddit, but not have to worry if it's playing the expected move during that period and giving yourself a little time for this stock to maybe base and recover a bit. Tom, your thoughts?
I agree with you. The bid-ask spreads are pretty wide in this one, so some price discovery may be warranted on the price of these. But let's break down Kevin's example trade here. Going out to the October 10th weekly cycle on this 17 days to expiration.
That's
you got 2.5
63
weeks
again.
On this position, neutral to bullish, so maybe gives yourself that better probability of success, but that's what we talk about with trade-offs, where you're collecting roughly about $1.70 credit on this, selling the 215 put in the October 10th weekly options, buy the 205 put short, $10 wide, neutral to bullish put vertical, collecting $1.70, we'll call it. That's what you can make, $170 per spread, right? But you've got some risk, about $830 per spread, but that's all the way below the 205 level. Your break even $213.30 to the downside on there. So you have that big cushion from the current $246 price that the stock's currently trading at. I think one of the key things here is we talk about these trade-offs. Well, I can only make $170 and I've got $830 in risk. Well, your probability of finishing out of the money on that short 215 strike, which is what you want the stock to remain above that level and the vertical just go out worthless and you get to keep the $1.70 credit that you collected. There's a probability of finishing out of the money at over 78% for those options. So that higher probability of success is the trade-off to the higher risk that you're taking on the position on this one. Kevin, you mentioned the pullback that we're seeing. It's right at its 20-day simple moving average. We haven't really traded below there for more than a day or two over the last 4 months or so. And that 210 or 211 area is a 50-day moving average. When you look at something like this, Kevin, you got 2.5 weeks in this short put vertical. It's, trying to hit a single in a baseball analogy, not swinging for the fences because of the run up that we've seen just off of those all-time highs near 283 per share. But being conservative, and giving yourself better probabilities of success might be the way to go here, especially with this pullback today.
Well, I look at it as, when a trade gets choppy like this, it can go further. Remember, it's $3 off its lows already today, so it can still go down. One thing we talked about, not a big float in this name, 187 million shares, not a really thick name, so that leads to wide bid-ask in the stock, which leads to wide bid-ask in the options, Tom. So you really got to be able to control your risk here on this. So therefore, high probability, collecting theta, and of course, risk-defined.
Yep, I think those are some key points. A high probability of success, the trade-offs that you're risking more to make a little bit less, but that cushion to the downside to the 215 level at this point, that's $30 from the current share price. So you do have that big, massive cushion while still taking a bullish
it's up quite a bit.
So Diane,
still.
There's the breakdown of the
It's still up big.
Bullish strategy there.
There we go. Passive bullish strategy there, as Tom just mentioned.
I don't know. It's way overbought.
We've got some comments coming in. The Fed Chair Jerome Powell speaking, get his speech kicked off just a few moments
way
ago
overbought.
at the
It's
Greater
up over
Columbus Chamber of
700%.
Commerce. The Fed Chair saying that downside
Yeah,
risk to
I don't
employment
trust it.
shifted the balance of risk, prompting last week's rate cut. The rate cut was another step towards a more neutral policy stance. He did say two-sided risk means there's no risk-free path. Policy is not on a preset course, mirroring some commentary we've heard from the Fed chair before. The policy stance, he says, still modestly restrictive, and it's positioned to respond to developments. He did mention that economic growth has moderated, downside risk to employment have risen. He also said inflation has risen and remains somewhat elevated. So there you have the comments on the dual mandate and the dual walk that the tightrope walk that the Fed has to monitor. In terms of market reaction, little change in reaction to this. Continue to see mixed markets. Coming up, the breakdown. We're taking a look at CoreWeave after it's been on the receiving end of multiple upgrades on the street today. We'll be back with a look under the hood on the other side of this break.
I think it's not. I question the upgrades on that one big time. CRWV. They're not making profit. They're calling it for 2027, 2020. It just makes no sense to me at all. I bet they're stuck in it. The rud's just too much. Bring it back down to 70, 80 bucks.
Stay connected to the markets with Schwab Network.
Tune in 24 hours a day, 7 days a week on SchwabNetwork.com.
And on all your favorite streaming services. Schwab Network.
Available anytime, anywhere, on any device for free.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Welcome back to Fast Market here on Schwab Network. I'm Diane King Hall, live at the New York Stock Exchange. Before we get to the breakdown, let me give you another check of where markets stand. Continue to watch mixed market action. The S&P 500 a little bit softer at the moment, off by about 0.2% there. The
I need a
Dow's
big
got
bounce
gain of
back.
A little more than 0.1%. NASDAQ lower by about 0.25%.
We broke the 63.
More than 0.5%. Time now for the breakdown. Taking a look at CoreWeave. That's pulled back from those pre-market highs. Shares were higher following multiple upgrades from Wells Fargo and Melius Research. The team at Wells Fargo upgrading the stock to overweight from equal weight. It's boosted its price target to 170 from 105.
That's a joke.
Says NVIDIA's recent backstop to buy all unused capacity through 2032 gives CoreWeave a blank check to build out new capacity for 6 years. Time now for the breakdown. For that, let's welcome in
CRWV.
Markets correspondent. All right, CoreWeave has been, I mean, it made a splashy debut. It's delivered for the investors. And of course, it's got its big relationship with NVIDIA. What are you watching here, George?
Well, I mean, first I'm just looking at the price action since the company IPO'd back in March. Now, clearly, there was a couple quarters where the stock hit some really extreme highs, around $180. It pulled back significantly all the way through August, early September to around the $80 range, and it's picking up a lot of momentum. And it's very remarkable, Dan, if you just consider some of these numbers that we're talking about with NVIDIA, you know, plus $4 trillion, and all the hyperscalers investing around $500 billion in AI infrastructure. You've got companies like Meta Platforms and Mark Zuckerberg saying that, you know, if we overspend by $200 billion, it's better to do so than fall behind in terms of AI build out. And so with that said, you know, you got to think about the platform as a service as well as the generative AI infrastructure, especially with companies like CoreWeave and Nebius Group, which is essentially a competitor out of Europe in this space. These are companies that are providing higher yield technology infrastructure platforms that allow flexibility at the margin to of course use excess capacity.
AMD's breaking out
From major hyperscalers to small and medium-sized companies that don't have the capabilities and the capital prowess to build out their own hyperscale infrastructure database warehousing. And I think if you look at CoreWeave's sales, they're pretty tremendous. You know, looking at the last year, or at least last 4 quarters, $3.5 billion. And that's really small compared to some of these major hyperscale companies. But I went back and looked at 2022. They were only generating $16 million in sales. They're expecting $5 billion this year. And you fast forward to 2027, as of now, close to $18 billion in sales. So that's essentially a 4x increase, or close to that, in sales in the next year and a half. That's pretty remarkable. And I think that the blank check sort of attitude that NVIDIA has with companies like CoreWeave, with a $70 billion market cap, nothing compared to NVIDIA. But nonetheless, the visibility now for the backlog and the build out is just growing. And I think that's why Wells Fargo is still quite bullish right now on CoreWeave, what they're called the 170 from 105. They actually see market share gains for CoreWeave, and the partnerships that this company has with companies like NVIDIA, which are deploying their GPU and CPU technologies within these major warehouses, data warehouses, is quite compelling. And like I said, the company's still not profitable. They're burning about $1 billion in cash, at least in the last 4 quarters. But if you compare that to the market cap at around $70 billion right now, the negative earnings yield is quite low on a percentage basis. So again, it has pulled back from the highs early June, but it's nice. It's making a nice move to the upside, potentially back to those August levels where the stock was trading around 150, considering it did pull back after earnings, and that's to be expected because they did issue secondaries to recapitalize the firm through share offerings.
And so the point you made about them burning cash, it does seem like, though, investors are willing to show grace, especially when you think about this space. What's your final thought on that, George?
Yeah, so let me illustrate. I mean, you just say, when I say burning cash, it's close to 1.1 billion. I guess in absolute terms, it's quite a bit of money. But if you look at the market capitalization of the business at 70 billion, as of close yesterday, the percent of cash burn to market cap is quite low. Now, again, it's still a negative number, so you have to be mindful of that.
Yes, it's negative.
Nonetheless, with the top line sales growth estimates, like I said, this year 5 billion, 2027 18 billion. In terms of sales, they are expected to become profitable in 2027 after some losses, about 30 cents a share as of right now, next year. So they're getting closer to a profitable inflection point. And again, this is why
in a year,
institutional investors are bidding up the stock. But it still has risk because they're not profitable, and there could be some challenges to the build out in the next year and a half. If there's too much build out, the adjustments in sales estimates could come down. So could the earnings estimates and so forth.
Exactly.
All right, and that's good perspective.
In other words, don't buy it.
The point that you made about what the market cap looks like compared to what their cash burn.
And quit pumping
Thank
it.
you, George. That's George Sillis, our senior markets correspondent. Appreciate it. All right, let's get Tom and Kevin back in here. Tom, you've got an example trade here in George laid out the case there, and the stock was higher earlier, but we've got a little bit of weakness in flagging in the market in general today. Tom, what's your take on
a lot of weakness?
Trade, I should say?
Yeah, it's a good point. No stock is immune from maybe a pullback in the overall market, but the stock hit a high of 136 earlier in the session, so maybe taking advantage of this pullback. Implied volatility levels because of the rebound that we've seen in the shares. The partnership with NVIDIA, they own 24 million shares.
6690s or the 6695s.
We might not have. So if you believe these two analysts have upgraded the stock today, we're with price target hikes of up to 170 or 168. This takes advantage of in that low volatility environment. So going out to the
we got a megaphone on SPY.
4 days to expiration on these positions. So you've got 3.5 weeks on this position. We're going to buy the at-the-money 132 strike call, and then against it, if you think this stock's going to go higher, we're going to sell the 145 strike call. So a bullish $13 wide call vertical to the upside that you're going to pay roughly about a $5 debit for. I think it's trading closer to $4.80 now because the stock has pulled back, so you can probably get it a little less than the $5 debit. If you pay that $5 debit, there's your risk, $500 per spread. With the break even up at 137, stock was almost there earlier in the session, but pretty straightforward bullish call vertical here, Kev. And I think one of the keys is, you're playing for upside on this example trade, but at the same time, that break even's not too far above the current share price on a percentage basis.
Yeah, and you've given yourself duration, right? That means everything when you're long a vertical spread like this, because your break even is the 132 strike plus whatever you paid for this. If you pay $5, you're right, it's 137. There's where you have to get to. Now, boy, the news is awfully good on this name, but I wonder if CoreWeave's just down probably because of NVIDIA being down. I wonder if it's starting to track NVIDIA stock. But Tom, this company makes cloud for AI. How could it? I mean, you are on the cutting edge of everything going on in this economy right now. I think profitability here.
Yeah, I can't trust nothing today.
Yep, and I think that's what a lot of
too much
people are
bareness
with that partnership. that
I
they've
have to
got
wait
with
until
NVIDIA,
close
maybe down a little bit.
for I decide to really
NVIDIA
start
down
to trade.
2%, but pretty straightforward. You got some flexibility
Make
as far
back
as
my
trading
loss.
that goes on a trade like this too. You don't have to wait that 24 days.
On this
if you
trade.
get that pop to 138, 140, 145, you can start parsing maybe if you have multiple contracts on, as long as the market's open. So you got some flexibility there, Diane, with the trade
I'll be right
management
back.
of this bullish call vertical, looking for more.
We got a
upside
1,
in
2,
this
3
today.
on the megaphone.
I like the flexibility that you bring in there. All right, good stuff there, guys. That's going to do it for us today on Fast Market. I'm Diane King Hall alongside Kevin Hinks and Tom White. Download the Schwab Network app. It's available in the Apple App Store. Tune in 24/7 on Schwab Network.
6690s.
We've got Next Gen Investing coming up.
Schwab Bank Investor Checking, the checking account built for
I'll be right
investors,
back.
named highest in client satisfaction by JP.
We did break out of the
for
snake,
7
but we
years
pulled
in a
right
row.
back
With
into a
Investor
triple
Checking,
bottom.
You get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists, streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com. Iconic trading floor in the world, this is Opening Bell with Nicole Petalides, live on the floor of the New York Stock Exchange, the countdown, the setups, the stories that make markets move. Minute by minute breakdown of the biggest headlines, earnings, and global movers, just the trades that matter. As the bell hits and the markets react in real time, Opening Bell, live at the NYSE, right when it counts.
Welcome to Next Gen Investing. I'm Jenny Horn alongside Alex Coffey, and to check in on markets here as we have been somewhat in the slow grind lower, at least in the S&Ps and NASDAQ, but hasn't necessarily been a sort of stark losing session. I wouldn't say we're seeing a sell-off by any means because we're down, I mean, modestly, now about 0.25% in the S&P 500. Actually, the Dow now slightly unchanged, and the NASDAQ down about 0.3%. But it does feel like right now the appetite for this, I mean, overall, buying some of these dips, buying some of the weakness is pretty much what we're seeing every single session, as yesterday was set to open lower. And then NVIDIA had this massive story with OpenAI, and everything turned around.
Yeah, so how I see today is if you were, especially earlier, just looking at the headline index quotes, you might think that it's sort of a nothing day, not much to, phone your friends about and chatter. But I think if you open up the hood, you'll find a little bit different story. You mentioned NVIDIA, we'll of course cover that throughout the day. You look at a name like Oracle down 4.3%. On the other side, one of the names we're going to talk about later on is Palantir. It's up 1%. Boeing is up 2%. Energy's having a nice day. So I see today almost like a battle of tug of war. You see the screen. There is as much green as there is red. It just happens to be where the red is largely isolated to the Magnificent Seven stocks and some of the bigger names within the index. And so when you start looking at this, 60% of the S&P higher, about 53% of the NASDAQ 100 is higher component-wise, but it's right now leaning on it a little bit given the fact that some of those bigger names are under pressure.
No, that's a really good point, because I was also seeing, in addition to energy, it's like the commodity exposed type equities are seeing a nice rally today. Anything also with gold exposure also is having a pretty nice session. So not typically what we focus on, of course, throughout our show, but it's worth noting that we have seen at least some pockets of strength throughout today's session that have held. I mean, and not really seen any major dips today. So as always on this show, we'll kick things off with some of these major tech movers for you to keep on your radar. We will also be diving into the charts and trades of NVIDIA, as well as what we're seeing in right now CrowdStrike, and so seeing right now, or CoreWeave, excuse me. And so what we're seeing there as far as NVIDIA's $100 billion investment into OpenAI, how that could impact a name like CoreWeave. We'll look at both of those technicals. And as Alex mentioned, Palantir actually hanging on to a decent gain today. We'll discuss that for FOMO, as well as previewing Micron ahead of earnings and discussing Symbotic, which has been downgraded to sell at UBS, but a robotics name. So again, wide tech focus today throughout our next hour.
Yeah, I'm excited to go through some of these names. I mean, we're in that period of time where I always say the market's sort of forced to sit with itself, and it may not have the catalyst to drive it. And what happens, one of the things I said to Sam today is, she was like, hey, are we down for this reason, or is this just rotation? It's like maybe a little bit of all of the above, perhaps. I mean, you have obviously Jerome Powell comments, you have the president speaking at the UN, you have these, NVIDIA, OpenAI stories, things like that. But you look at it and it does show that there's kind of just rotation going on. But we've said that rotation might be a little bit painful in the process. Doesn't mean it's going to be net negative, like you said. We're hardly down. It's 1/3%. But we are down, even though 60% of the names are higher. So it goes to show, if you're going to lose the Magnificent Seven, not saying that's happening, but if you do, it doesn't necessarily mean that every one of those dollars is going to go into a new S&P 500 stock or a new NDX stock. And it might go to a Russell 2000 stock, and that's okay. It might even be healthier, but that doesn't mean that these indexes won't be under pressure. I'm looking forward to Palantir, looking forward to NVIDIA, tons to get through.
Yeah, and NVIDIA yesterday, it was like, why did the market turn around? I'm like, look no further than we got a massive jump in NVIDIA, and that then propelled the rest of the strength. So without NVIDIA's participation today, I mean, NVIDIA shares now lower on the
This is a really, really good point that you're just basically stating, and it sometimes is oversimplifying things, but right now, NVIDIA, Microsoft, Meta, Apple, you kind of tell me what those stocks are doing, and the S&P 500 more times than not is going to follow it, particularly NVIDIA.
And that used to be Apple. Apple used to be our barometer of the overall market. I mean, traded with a really high correlation historically to the S&P 500. That really is now NVIDIA.
Yeah, no, it's a really good point, and if you look at it, I'll even give you the numbers, support that. Palantir, for example, has a only 0.68 correlation to the S&P 500. Apple's 0.9, so it's absolutely a strong one. But you look at NVIDIA, actually, at least over the time frame that I have here on mine, it's a little bit less correlated, 0.62. But I'm looking at a 3-month correlation. So it just comes down to what you're looking at. Certainly, these names collectively. I think the Magnificent Seven collectively is as important as any cohort of 7 stocks has ever been to a marketplace.
Okay, and to your point, Apple actually not seeing a huge day of pressure, down about 0.4%. So that is actually showing its correlation to the overall markets. But we'll start off with another Mag 7 name here, as that is Amazon. Now, Amazon has had several pieces of news. First and foremost, saying it plans to shut down 14 of its Amazon Fresh stores in the UK, intends to convert the 5 Amazon Fresh stores to Whole Foods markets, the company said, and added the decision to play into this enhanced focus they're seeing on online grocery delivery options, including expanding some of their collaborations with various entities in the UK. They also did say they'll be really providing these redeployment opportunities to their impacted staffers, at least as many as possible.
6690s.
Plus, we got some news that the FTC trial against Amazon that began yesterday, with the company's Prime subscription practices being under scrutiny. So the lawsuit was filed back in 2023. It alleges that Amazon used manipulative user interface designs or dark patterns
We're at the 50% pullback.
consumers into enrolling in Prime and creating obstacles.
This is what I was kind of looking for, the 50% pullback from yesterday's run. And we're right on it. Right now. Right there. 73.65. Almost right to the penny.
Okay, prepare ye in the name of the Lord. There's Jenny. See what she looks like today. She looks like a housewife. College student.
Type of names. Looking at Vistra here, which is seeing actually a rare downgrade from Jefferies to hold from buy. Reduced price target to $230 a share from $241. Following the stock's 160% run up in the past year, which they said really attributes to the expectations of their various nuclear deals. So, well, with the rally right now to $200 plus beyond what any bull could have predicted a year ago, the stock is now pricing in their opinion, a 100% probability that they're seeing some of these overall nuclear assets that are basically have to be at full capacity. So they did say that while they have a positive view of their power unit, it's difficult to ignore the growing political risks that right now are facing the Texas area as well as in so many of these energy exposed regions. So I think that checks out. It's basically a valuation call saying, you know, things have been definitely exuberant to the upside.
Yeah, I think that's well said, and I would add one more piece to it, is I think it's also a risk-reward discussion where it's like, hey, even if you look at their price target, I think it's 230 you said, versus the 207, that's clearly implying upside. It's actually implying kind of a lot of upside, still 10% more. But we're not talking about a consumer staple company. We're not talking about your traditional utilities company. We're talking about a company that's trading with nearly 60% implied volatility. And so to take that kind of movement risk or volatility risk for 10% more in their mind doesn't necessarily make sense to open a new position, but it also doesn't necessarily make sense for them to suggest to their clients to run for the hills and take the position off here. It's just kind of saying, hey, there might be opportunities down the line to get in at better prices. And if you're already in, no reason to bail on it just yet.
That is very true. And hey, the name trades at a forward PE right now of 27 times, which is a stark contrast to our next name, which is Oklo, which has seen a 63% rally last week, now a 480% plus rally this year. I mean, this has been a ridiculous move. And also
ridiculous.
Oklo is, I mean, a negative name because it doesn't expect to make any major earnings in at least the coming years. So
another
we're
one.
seeing a right now PE on a trailing 12-month basis of around 32 times. Seaport, though, with a downgrade to neutral from buy, not giving a price target following the company's groundbreaking first reactor installation at their Idaho National Laboratory. They do still see a number of positives in the company's business development, but they're stepping to the sidelines, again, based on all
They're probably laughing big time.
So, a fair assessment of both of these names because they have been, I mean, again, so...
The 66.90s are back to 140, 135, get ready.
These two are key. Like, Oklo is still very much in these early stages of development for these new...
I'm going to clean this chart up and start fresh.
It's still seeking regulatory approval. It hasn't seen yet large-scale deployment in this market.
That's
whereas
135.
This has already a broad mix of not just nuclear, but natty gas, solar, battery, as well as coal under its belt, and a more mature company, which I think speaks to some of that influx in their valuations on a forward basis, at least.
Yeah, it's almost like talking about Broadcom versus maybe a company, I don't know, like a Palantir.
No, I don't understand
or
this. Oh,
even an ARM,
that's
in the
why.
sense of like how much exposure do you have to this growing business and
66.90s.
how strong is your core business on its own. When you look at Vistra, it's clearly got a successful core business that's had for a while, that's going to provide some runway for investors and consistency, but of course, this growing aspect with the demands for energy due to AI, giving it this growth runway. In the case of Oklo, it's all growth, right? It's all potential. And one has
potential growth.
This stock trades with about double the implied volatility. So everything
it's a guessing game.
On Vistra, take that by 125% implied volatility for Oklo. Another key piece of this is there's plenty of doubters. I know it's not like in the stratosphere for short interest, but you're still talking 10-15% of the float. This is serious pain for those shorts right now. Perhaps you're seeing covering, adding a little bit of fuel to the fire.
Yeah, that is also a good point. Hey, I know
That's all it's about.
Ever so slightly positive on the session, but a name that has made a now monstrous move over the course of the month, up 91%.
Get ready, folks.
In September.
Jimmy's getting ready to take this trade.
Top of our show today. Now coming up next, it's time to chart and trade NVIDIA as well as CoreWeave. NVIDIA, of course, as we discussed off the top here, is down about 2.4%. CoreWeave, on the other hand, right now,
And he's
down
pulled
about
back some more.
10%.
We have a double bottom, ladies and gentlemen. Snake breakout pullback, double bottom. Take rid of that. The 66.90s at $1.10. Let's have a breakout, pretty please. I've got to make up what I've lost on that last trade. It's horrible, but it's got to happen. He went from the singing day trader to the crying wine baby. Strike. 66.90s at 110. Give it to me, please.
Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are.
I love you.
What's up, Carl Nation? It's
Nicole.
your number one broker.
There it is,
for
110.
Service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh.
Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning.
We're having technical difficulties.
Carl.
We're experiencing technical
Schwab,
difficulties.
a modern approach to wealth management.
Not again.
Whether you're a bull or a bear, you'll want to catch the latest market action on Morning Movers with me, Diane King Hall, live from the floor of the New York Stock Exchange, only on Schwab Network.
How you say?
Welcome back to Next Gen Investing. It's now time to look at the charts with, of course, our chart master, Rick Ducat, to help us break down the technicals in both NVIDIA as well as CoreWeave. NVIDIA is where we'll start, as that's always where I tend to look for.
Would you get
any
over
real
CoreWeave?
market, but
Who's paying you to pump it?
I mean, closing out yesterday at a record high. So walk us through the latest from the technical front.
Right, so we made our way back up to a familiar area at this point, that level near 185. Right around there is where price has topped out multiple times here. The intraday high is a little bit shy, maybe 184, 185 would be the general boundary there. But today we can see price has retreated somewhat here. Yesterday's large green candle has given way to a much smaller red candle that is completely contained within the previous day, giving us the makings of a harami type candle here, the opposite of an engulfing candle.
Yes.
Kind of perhaps slowing momentum and indecision after we have this breakout. We can see that we had a downward sloping channel here, beginning with those highs that has
God,
been broken.
turn.
But still, as I said, we stopped
I'm
short
about to give
of the
up.
key resistance area here. So now the question is whether price will regroup and continue to push upward here, or if we will continue to move lower and perhaps test.
I'm really about to
that
give up
trend line
today.
once again here. That would come in near about 177 or so at this time. If we were to look at our moving averages and RSI as well, we can see that our two shorter term moving averages, our 9 and 21 day exponential moving averages, are right on top of each other near that trend line as well. So 177, 176 would be an interesting supportive area to consider here. RSI also has broken above its downward sloping trend line here, so the bulls are still hanging on in terms of momentum here, Jenny.
So as far as recent volume we've seen also in NVIDIA, I was looking at, I mean, like its historical volume over the last year or so, not really jumping out right now, but what else are you watching as far as the technical profile?
Right, so we can see that the volume starts to drop off just above the current price activity here. Our node, our volume profile
2 minute hit my support.
Heavier trading there comes in
Wait a
at
minute.
77 once again. So
Isn't it sassy? Yes.
level could translate into a more of a downward move here if that key supportive area is breached. Also, notice that our +1 standard deviation channel here,
I might as well work on my checkbook.
One standard deviation above our linear regression line here. This is used to project potential resistance. That comes in near 184. So even more technical factors aligning here near these highs. So that would be the other potential breakout point here. In terms of other volume and technical support, not really too terribly much to consider here. We can see that volume doesn't really pick up again until all the way down here near 137, which is quite far away at this time.
Okay, not really seeing any selling pick up necessarily on the session, which is encouraging again if you're looking at the overall markets, but appreciate it to Rick. And of course now as we do think about an example trade in NVIDIA, we talk a lot about like the coming events. We have PCE, I know, on the back half this week, but there's not really any major market catalysts. But for NVIDIA, they somewhat make the market catalyst, as it does feel like commentary between Beijing and China.
MU would be a catalyst for tonight's earnings.
Are right now going to be still central for NVIDIA and the movement we're expecting.
Sweetheart.
Totally agree, but even setting everything aside, technicals, fundamentals, and every reason aside as to why it moves, like I still have sticker shock just at how much this stock moves around in terms of market cap on a daily basis. Now, granted, percentage-wise, it's not that unordinary or extraordinary, but we're talking about hundreds of billions of dollars on a daily basis.
Yes,
so
sir.
It's just incredible just how big
That's what we're talking about.
And how much it moves around. But from a
I'm at
trading
105
standpoint,
again.
one thing that really sticks out to me is every time it seems this company's finally under a little bit of pressure, buyers continue to step in. And I kind of eyeballed it as Rick was going through the technicals. I don't believe it's been more than maybe 1 or 2 days where this stock has been below maybe the high 160s going back to August. And so I basically went onto the October 17th monthly cycle, looked at a short put vertical, went $2.50 wide just to keep the risk.
I don't understand how they do these puts and they call it
This
bullish.
stock doesn't spend a ton of time or hasn't spent a ton of time in this area. You can go all the way down to the 167.5, 165 put vertical and still get 50 cents. So it's a 4-to-1 risk reward, high probability of success type of trade. But this
Back to even.
just off its all-time high.
Let's go.
Today's move, 167 break even.
Can't believe I got
That
stuck in this thing and it dropped 30 frickin' dollars on me.
me. You risk 200 chance to make 50 over the next few
Oh
weeks.
God.
Yeah, and I think that a good breakdown.
One candle drops 20 bucks.
Be aware of some of the risks of NVIDIA, but also be aware of the
Just
fact
like that,
NVIDIA,
just
like
within a
everything,
second.
has been
What? I mean, it wasn't even a
quickly
second.
by the bulls. But looking at another related name right now is CoreWeave, which many have been speculating could actually be a beneficiary of now
That was
NVIDIA's
illegal.
AI investment, $100 billion. I mean, I think that is going to be the rising tide that lifts all boats a bit. But for CoreWeave,
Right when I
that's
get-
quite opportunity to go off of here. So walk us through your thoughts, Rick.
In all fairness, 100 billion isn't as much as it used to be. I'm just kidding.
So true, though.
It's a lot.
It's crazy to think of that. That's the amount that's being thrown around here. But 147 for this name here, an old high point here.
I don't say you can drop a candle that fast.
We had our low point, and then the
Not even 1 second.
failed to get too far above that level here. So 147 to the upside stands out as a potential guide mark for the bulls to look for resistance potentially, or even a further breakout point. The longer term picture, and this is a rather short term chart as well, but starting with the high point
Hey,
here,
here's a couple grand, man. Drop this down 10 cents real fast, 20, a buck real fast.
You can see now, though, price has broken beyond this trend line.
Here, I'll give you $10 if you drop it $3 right now. I'll give you 1,000.
Rising wedge type shape has formed where our two trend lines are both pointing up and converging toward each other, but the upper trend line is a bit more modestly sloping here. Typically, this is regarded as a more bearish type of
I
pattern.
mean, I
here.
want it to drop within a second to shock everybody so I can go ahead and get out of it.
Trend line could be tested once again. Currently, that would be right around the 120 level or so. Beyond that, 105, our green line there, we can see was a high point and a low point, high point, low point here, as well as a low point from this area. So even though it was breached once again, it became resistance when price was transitioning.
The market
to
action on this
downside
thing
here.
today
It
is
became support
nuts.
once again. So 105 to the downside as well.
Okay, now zooming out and looking at anything else you're keeping on your radar here, I know that the importance of standard deviations is definitely relevant when you don't have a ton of price activity to go off of, but as far as things have fared, I mean, it is in a pretty nice uptrend as of late.
Yeah, our moving averages, once again, exponential moving averages didn't have enough data here, so 20 and 50-day simple moving averages, pretty close together. Prices moved above both of them. They're around 108, 109, that general region here. RSI also still trending upward, but a little shy of that overbought threshold of 70. That would be another area the bulls would want to be on the lookout for further bullish signals. Volume profile here, a bit of a mess, to be honest with you. A lot of more nodes that are closer together here, but the standout area right here, 147, that's our red line that we highlighted earlier. That's where things start to pick up once again, and they thin out noticeably above 160. Right now, we are in the thick of another smaller node near about 134, 135.
Yeah, these pulled back.
Things start to pick up
At least
again down
30
here,
bucks.
near about 125 or so. That would be another supportive area just below.
That's right.
Great insight here as Core has actually picked up some of its pressure on the session, now down about 1.3%. Appreciate it to Rick, our chart master.
I love you.
Now, as we do look to trade, CoreWeave for example purposes, walk us through the thinking.
Yeah, the thinking is a lot of the same when it came to NVIDIA. If you're a believer in this AI trade, you want risk-defined exposure, these stocks are under a little bit of pressure, relative to the highs.
It's a crazy day today. The second half.
But also still high volatility. Looking at
Look
the
at
put
that crap.
Same expiration going after that October monthly cycle. In this case, though, went to the 121, 118. So
about to that second
wide,
support channel.
But unlike the case of the NVIDIA trade where it was risk 200 to make 50, this one's risk 200 to make 100. So same risk, double the reward. Maybe not quite as high of a probability of success in that case, but you're still nearly 10% out of the money at that break even of 120 based off the 131 and some change.
Always clean this Jim.
Quite exactly, probably closer to 8 or 9%, but it's still a decent cushion there. Same risk profile.
Hello. I said Washboardjim. This is Jim. Unbelievable, that's what you are. We've hit below third support now. Are we going to give up everything today? We're down more than 62%, Jim. Have you ever thought about adding on? Yeah. We're right at a major support level. Top of the channel. Can you get in at 45 cents, Jim? I buy the son of a bitch. I bet you it dips on me. My sister called me last night, said she might have gallbladder problems. I said, oh boy, it's not going to be good. So your next support is 666.023. It's like the set of tires I want to buy. I could pay $11.50 for them, or I can stay here in Springfield and pay $8.50. $666,044 is next. I got 3 support levels with the bottom line at 665808 or 17. Unbelievable. It's now 12:32. Okay. Alex, help me get out of this rut. Marley got us in it. Q held orb. It's unbelievable. It's still dropping. We're going to hit the bottom. I mean, there's no reason for it to stop now. The 6670s. Grab one of them. This one here stopped out of that one. Now I'm looking at the 70s. Well, don't get in a hurry. Dow continues winning streak. NASDAQ, S&P retreat from record highs. I'll be right back. I'm going to take a walk-away break. I'm going to go out and check the mailbox. Do something. I'm looking at the 6670s next, unless it drops. Then it'll be the 6660s. See? Walked away, came back, it dropped. I'm waiting for the bottom. I'm waiting for this. 664807. I mean, what's going to stop it? You watch me, I'm going to jump in it. No, 3 more bucks. Prepare ye in the name of the Lord. Chris, watch this. Time to get a good grade. The 6660s. We could drop just one more little bit, or I get in now. And I think I'll just go ahead and do it now. Get ready. Any second. Now, 420. There it is. I got 3 of them. So fuck with me now. There's $300 just like that. Get that grading pin out. Anybody else jump in? I got an A+. Is that for me, O? Very good. Come on. Give me $1,500 a contract. I waited for this all day. I waited for this all day. $640.
That's what's been driving up demand for these guys, especially the high bandwidth memory HBMs. So we'll see what they do tonight. The expectations are high, but I would say
9:30 bell rings. He's got a plan. Sneaky snake moves, slither through the charts. Washboardjim's the mentor, teaching trading odds. Gamma exposure, man, the pressure's tight. Breakouts hit, gotta catch that flight. Gain levels flash like neon signs at night. Living goose on the grind, his aim's in sight. Sneaky snake strategy, wiggle and weave. Living goose don't stop, he's got tricks up his sleeve. Charts go wild, he don't get deceived. Stack those gains, it's a game he believes. Washboardjim's got the rhythm of the trade. Don't chase the hype, let the setups cascade. Goose nods sharp, eyes on the prize. He's dancing with the market, watching lows and highs. Gamma squeezes lurking, keep it cool. Respect the levels, that's the golden rule. The market's a jungle, it's a beast to tame. But Goose and Jim, they're ahead of the game. Shots like graffiti, painted on the screen. Trades hit clean, it's a money vacancy.
break out, pull back, high or low, let's go.
Washboardjim's got the rhythm of the trade. Chase the hype of the sales cascade. Stop shot, rise to the prize. He's dancing with the market, watching lows and highs. Never squeezes lurking. Keep it cool, respect the levels. That's a golden rule. The market's a bundle, it's a piece to tame. But Bruce and Jim, they're ahead of the game. Candles flicker, green and red glow. Bruce rides waves like a pro superstar. Just like a feed, pinning on the screen. Trades it clean, it's a money you can see.
Break it, break it, break it, break it, break it, break it. Break the double top out of the snake. Snaky, break out, pull back, let it break. I'm still in, I want to win. I want a grand out of these babies. Break the double top. Uh-oh. He's up $600. What's he gonna do? He's up $660. You ever thought about selling when you're up $660, Jim? No, I need another 400. $690. Come on. Bad News Bob was in here yesterday. Bad News Bob. I had to erase one of his quotes he put in here yesterday. I forgot Bad News Bob. I should have thought about that. I tried to, what was Bob? What was the deal with Bob? Now I remember big time. Did you see me erase his quote? This is a room where you can't express your opinion. Yeah, I did. I don't want no fighting in this room. The only one that can fight is me. We got 3 white soldiers. The first time I've seen anything good today. I forgot all about Bad News Bob. That made me laugh. I remember I laughed all day when you wrote that song. I think I wrote it down somewhere. We're at $7.10. I'm up almost $300 a contract. Have you ever thought about selling, Jim? We're almost up $1,000. This makes up for your loss today that you made on the last 2 trades. Have you thought about selling? No. Not yet. No, don't. God. Okay, if we respect this candle right here, we're safe. If we're not, I got to get out. Come on. Save it. Because if we save the first soldier, third soldier, and this is the smallest one of the 2, I just now remembered that. That was pretty funny. What was resistance now has to become support. Come on, Jimmy. Oh, there he is. Come on, baby. Did I ever tell you about how much I love you? Come on. We got to hold this here support level, please. Don't die. Don't die on me. Whatever you do. I mean, this is the last straw here. I have to get out to maintain my profit. This computer's acted up again. We're at 580. We held it. God darn it, what's wrong with this computer? I don't want to have to get another. Do you think it's toss? This is on my typing on Discord. I mean, this, I've got to explain this here. This is a double top resistance. So if it respects that double top, we should move on up and hit the 200. Or 63. That or I sell here and take 600 off the table. But I want 1,000. I really do. That'll give me a couple $100 for the last 2 trades that I screwed up. Oh, come on now. Panic attacks. Battery, I just put new batteries in here. Maybe it's, well, I don't know if they're brand new. They were, might go out and buy me a new set. I think that's probably what I should do. Okay, we're back to 670. Now, if this thing breaks, I'll be able to get another $100 out of them. 200 maybe. Yeah, I think I'll go buy some new batteries today. When I get done today. I'm going to check my blood pressure. It's got to be up huge. These last 2 trades have really ruined my reputation. So Benvenuti, I'm going to find out what that word means. Benvenadu, Wakamomen. Benvenido. Meaning welcome. is a boy's name for Spanish origin, literally translating to welcome. Bienvenido.
Bienvenido. Bienvenido. Bienvenido. Bienvenido.
I'll redo my blood pressure because I took my eye off the ball. WILLKOMMEN. As a greeting, welcome in. Okay, we're flagging out here. I'm just one notch out of the money, so I'm doing okay. Vimamito. Vimavendido. What's the term in Spanish for Jesus? Oh yeah, my blood pressure's not looking good. We'll get one more shot here. Not too bad now, second time around. Benvenuto, Nidai. Is an Italian word for meaning welcome. Benvenuti.
pronouncenames.com.
Benvenuti. Benvenuti. Benvenuti.
Do we have the correct pronunciation of your name?
No.
.com.
Benvenuti. Benvenuti. Benvenuti.
Do we have the correct pronunciation of your name?
Benvenuti. 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 It's another bull flag again. To the right. Benvenuti. I'm gonna get back in. Six 649. You got one more in here. Benvenu. Where can I put the word in? BENBIEN VENUE in French. Welcome in French.
Bienvenue. Bienvenue.
God. Well, that kind of sucked.
Progressive's Up-Payment program provides down payment assistance for first-generation home buyers. Because we believe everyone should have the access and opportunity to own a home.
this word, meaning welcome as in you're welcome in French. Let's hear how it's said in France. Bienvenue, bienvenue, bienvenue in English. You could say it as
Bienvenue. Well, here we come back to the right shoulder again. Get ready. Landy. Bob, pay attention. Bob. $2.60. Damn it. Come on. There's Debbie. Uh-oh. Oh, yeah. Jimmy needs to hold these. Come on now. Jeez. It's been a brutal second half. 122 right now, 222 Eastern. And I got the 6660 at 260, and we're at 245. Come on. If I get to the double bottom, I'm going to add 2 more. If I get to the double bottom. Always clean this gym. Yeah, what's up? Good afternoon. What's up, I said. Can't you see I'm in the middle of a trade? You don't mess with me. This call is being recorded. Sammy, did you pick it up? Scarface? Yeah. Head on over there. Let's break a couple legs. Yep. I got you. Thank you. We got the location? Why hang up? We got the location, man. We're going to come over and break your legs. We're at 3:30 now. Come on. Let's get to 1, 2, 3 bits. It's funny how fast it doesn't take me long to get these trend lines on here. We're at 340 right now. I can sell them. 360. There's a $300. I mean, 24. Yeah. 300. I was going to double down when I got down to the double bottom and I didn't get there. Come on, come on, come on. See, I should have sold that third crow again. That was at 360. And got 350 for sure. Okay. What'd you get him at, Chris? Oh, you're mostly watching and learning? Well, Jimmy's at 330 right now. And on a day like today, you know, I could have got 900 out of them earlier and didn't take it. End up making 300 on these ones right here. That kind of hurt me mentally. Now these are at 370, so I'm up $100 a piece. And we hit the 63. That's a resistance. So what do? On a day, choppy day like today, if it breaks, I mean, these suckers are going to run. And that's my dilemma all day long. Just waiting for it to break, and it hasn't broke. None of them. All but the ones earlier. So I either sell it now and get out, or I hope for a miracle, because I really don't have a wall. Well, this 1, 2, 3, that's a wall right there. That's the next wall. You know, could be a pretty good little jump. Now I'm at 410, so I'm up $140 a contract. Now, if you're a rookie, I want you to get out of the trade. If you're in it with me on this one. If you got money to burn, hold it. If you got money to burn, hold it. Oak. If you got money to burn, just hold it. Take a chance, just hold it. You know right, hold your money tight. You got the money to burn, just hold it. Break the double, triple copper right here. If you got the money to burn, just hold it. 6, 6, 6, 8, I've got on my mind. It burns every time. If you got the money to burn, just hold it. Okay, I'm at $4. I'm at 430. Now see, if I get 460, I'll be up $600 on 3 contracts at 260. Now I really got to think about taking profit. Because we're still at a double top here. Actually, it's a triple top because we hit that wick right there. Quad top. 1 of them, 2 of them, 3 of them.
Where do we stand now?
Well, it's obviously
Stop yelling, Nicole.
A bit of pressure on the stock narrative and news headlines not supportive of it, but the stock has bounced well off the July lows, up 45%. It's managed now to hold that 20-day moving average more than 5 weeks, and today's move could be what we would call a hold move, a close above the high of the low day in a retreat. And so we had that stock make a high back here on September 12th.
So it's a gap fill, you idiot.
The low pullback or the low trade since that date was yesterday. And now today we have cleared the high of yesterday. So some traders might look at this as that opportunity to enter into a potential continuation pattern and do so at what they might consider to be a low risk area, choosing to move on if we get back below the low we made yesterday, for example, or maybe that 20-day moving average, which resides at around 329. But if you're optimistic and you're thinking about layers above, the bottom of the gap presents a first layer around 377.
Oh, he did say gap.
And then the 200-day moving average above that at around 410 could also be a potential resistance spot. So plenty to
I'm
keep
still
an
in
eye on.
these.
It is a
I didn't take my
downtrending stock,
profit
so any
like an
bullishness
idiot.
here would be considered counter trend, and yet there's still potentially an opportunity.
Well, that's what I got too.
To take some chances here.
I got the same chart he has.
All right, thank you. Kevin Horner, great to see you. Always
I'd stay in the
really
trade.
Appreciate Technical Tuesdays with Kevin Horner, Senior Manager of Trading Services Education at Charles Schwab. Coming up, it's still earnings season. We're looking at
And I'd use the 9 EMA.
after the bell today. So we need to check it out. Obviously, we've seen some of these names related to semis on the rise, some volatility. What do we see going forward? Because some investors eye a strong fourth quarter AI-driven memory demand and U.S. chip expansion. Let's see what our panel has to say. We'll be right back.
So this is how I look at UNH. We're in the gap. We held the gap, the bottom of the gap. We've been holding the 9 EMA. As long as we hold the 9, we stay in the trade. If we don't hold the 9, for now, the major support level would be the gap. If we don't hold the gap, I'd get out. But if we hold the 9, I'd run it up to pivot point area, which is a double top inside the gap at UNH at 356.77. If we broke that 356.77, I wouldn't sell it until 377 or a little under. And then if we broke the gap, I'd take it to the EMA. That's UNH. But the buy signal would be 336. If we held the gap. Or the 9 on the daily. And then on the weekly, which I would probably use also, I'd say the buy signal would be definitely the 21 or the 9. If you had the patience enough to wait for the 9. And if you touch the 9 on the weekly, I'd jump in it. UNH. Carl? The way is the best way. "13 more minutes to power hour." Okay, we had one good Trump correction. We've done nothing but run up to new high on SPX. So if we had another correction, it would be this triple top breakout. Bob, we love you. We loved your bad news. I know you're listening now. We love diversity. We love the freedom of speech. We won't assassinate nobody for their opinion. We want you to talk. No gusto. We have an ascending triangle at the bottom of the snake, so we still could get a nice little breakout. By the end of the day. Should I pay the $11.50 for the tires or $8.50? They're the exact same tire. Feels like they're going to drop it more. We'll see if it holds support. They could be sending a message. You're right. If it drops more, they'll be sending a message. There's your low support. Here's your, I mean, it's a wide mouth ascending triangle too, so it's really nothing to write home about. Come on. Did MU pull back? We got earnings tonight on MU. The ones that want 1150 are one of them. MU did pull back to double bottom. I don't know if I want to take this trade or not either. I was going to do it, but I'll wait until after earnings. Because I don't trust it. It's up too high. One of them, 2 of them, 3.5 weeks. It's up over $60. $55. That's a 33% increase. See, this thing could drop too. I mean, big time. Be back at 140 where, or even down here at the triple top. Okay, we're at support. We will test. And we're going to test. There we go. $125. Now let's run. It's very important you hold the triple bottom, even on a rough day like today, where supports don't mean nothing and resistances mean a lot. A mechanic wanted to tune my car up for $1,000. I took it to another shop. They did it for $250. It's now power hour. This is one of the hardest days I've seen. At first, man, everything was so easy and bam, 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 5 good trades out of the way. Then I get stuck in a trade, and then I get stuck in another one. And I got it, well, the one before I didn't, but this one I did. I could have got out with some good profit, but I didn't take it. I took a chance. I took the chance. I would like to see 170. Purdy, please. Purdy, please. It's really too early right now for the run, too, if it wants to do it. I'm gonna put a new resistance on this. I'm saying if we break. If we break that, we'll go higher. God. 50 cents in that little bitty candle. This really sucks. Man, that's a tough one today. Oh well. Another triple bottom. It's now 307. We kind of have a wedge. Marley's talking about Boeing.
And then last but not least, Trump did say we could see a deal struck with the Turkish president during a meeting sometime on Thursday, as they are expected to meet. And Bloomberg did report that Turkey does aim to purchase hundreds of Boeing airliners. Lockheed Martin also part of that conversation. So a lot going on today.
What do you think about that, Marley?
Aerospace and defense type names.
You know, and Boeing is still in the midst of this turnaround story under the new CEO, trying to right the ship here. These orders coming in as the United Nations General Assembly is taking place in New York, bringing all these countries together. And they're saying more and more, we've seen more commentary on both social media and from ambassadors saying more deals are expected. So it may not be the last time we mention a jet purchase, but Jenny, as we talked about Boeing, let's take a look at Paramount Skydance. So not a lot of new news on Paramount Skydance, but a monster performance from Paramount Skydance today, the top performer in the markets.
I know, amazingly so. I mean, a name that's pacing for its highest close since May of 23. I mean, we're seeing also, again, it's now 3 of the past 5 trading sessions. It's up 40% this month, which actually is somewhat dwarfed by some of the moves we've looked at, but I mean, still a phenomenal move. We're up now 7.6%, so we have pulled back from the highs where we saw shares trade as much as 11% to the upside, but right now up 96% roughly, and some change on the year. So
It's going to be funny if these things run up and I get like $5 or $6 a contract.
I know that right now there's been a wild ride for shares. It's a bigger story than just an analyst call, as we've seen right now many that have said with its overall potential bid for Warner Brothers Discovery, that the offer could land between roughly $22 and $24 a share, mostly in cash with some shares included as well. So the market's reaction has been swift, hinting that either investors are seeing this major growth potential, changes in risk, or both. But the potential is really what we're trading on right now, which is kind of amazing because typically with these mergers and acquisitions, you don't necessarily see just a straight shot to the upside as we have in both this name and Warner Brothers Discovery.
I mean, I'm gonna step back and just show this straight shot to the upside here. It was interesting. We talked about this in our 360 round on Trading 360 this morning, and both of the people on the panel were saying, it's so odd to watch a company skyrocket on reports and single reports, not multiple confirmed reports, single reports of a possible deal. And they didn't even really want to discuss the idea of it because it was something that hasn't really been fleshed out, and we don't have enough information to even determine what it might look like.
Then why is the
Major
stock
regulatory
running?
Concerns here, but the street likes the potential. They like the David Allison story of him building these big companies and going after
So it'd be
streaming
sell on the
sports
news?
and making a bigger umbrella under what was Paramount, now Paramount Skydance. and
PSKY.
We don't even want to talk about what to call it if it becomes Paramount Skydance, Warner Brothers Discovery.
No, we need some consolidation as far as the long title that is all of these companies, but I think that speaks to the fact that there could still be regulatory concerns. I mean, this would create a massive, the largest media company really of its kind. And I do think that you have to acknowledge the fact that, yes, we've run up so substantially, but there are still major lagging assets within both of these companies, being everything legacy TV. And I can acknowledge the obvious, I think, strength of the fact that they would have all of the major U.S. sports franchises under their umbrella. I just wonder about trust and the regulatory process there. But we know that from looking at the Trump administration, they're seemingly more of a friend to some of these big deals.
Absolutely, and I want to move on to our last one today. Disney shares under pressure following this Jimmy Kimmel saga of him being pulled off of air, now being brought back on air. Shares are under pressure. They're down today. They're down on the month as he makes his return to television, but not on all ABC stations.
Correct. So Jimmy Kimmel Live will be coming back to ABC's broadcast network beginning Tuesday, which was per the company's statement. The decision was announced nearly a week, though, after ABC first said it was suspending the late night show indefinitely. And they said that this was really attempts to avoid a tense situation as well as an emotional moment for the country. However, they said they've spent days now having thoughtful conversations with Jimmy, and after those conversations, they've reached this decision. So the late night host addressed the matter during his show, which is set to be taped on Tuesday. Bob Iger, as well as Dana Walden, the co-chairman of Disney Entertainment, did make that decision to return to air. But the broadcast pushback, as you mentioned, we did see that right now.
I think making jokes about someone getting assassinated is not really a, no matter who it was. Can you imagine if you make it, if let's say Obama got assassinated? You think he'd make a joke about that? Or tell false truths? If he did, I would find it very hard to believe. Or if Hillary got assassinated, or... I mean, it's just something you just don't joke about.
You being with us to cover all of our top stories. And we did see Jerome Powell speak publicly for the first time since we got our Fed rate cut decision. We'll dive into
if he was joking, I don't think he was.
Look at the latest manufacturing data when Market on Close returns.
Hey, investors, you know the market moves, and Schwab is here to help you move with it. So, whether you're buying, selling, holding, or planning, whether you're ETFing or 401k'ing, saving, spending, or even retiring, you can count on Schwab for market insights, live support, powerful trading platforms, and 400 branches. All at your service, all so you can invest your way. Sounds nice, right?
Can you imagine joking about John F. Kennedy being assassinated?
And this is the watch list. Your midday view into the trends driving the markets.
Or Martin Luther King.
On technology, innovation, and companies leading the next wave of growth.
They even joked about it when Trump almost got assassinated.
And insight from analysts, founders, and market voices you trust. The watch list, 2 p.m. Eastern.
I've been shot at.
On Schwab Network.
Whether you're
It's not fun.
An experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different
a drive-by
growth, value, income, and more.
at a convenience
Most
store.
of all, you can ask questions by chatting directly with an education
It took me almost 3 weeks to get over that.
Tune in live or on demand. Head over to schwab.com/coaching and
I still think about it.
today.
Real-time access, data-driven analysis, from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live, subscribe free at schwabnetwork.com.
Welcome back to Market on Close. I'm Marley Caden in Chicago. Jerome Powell was one of 3 Fed speakers today, and in his commentary, he addressed the labor market, asset values, and risks that he sees to the market. To discuss this further, I'm joined by Alonzo Munoz, the CIO of Hamilton Capital Partners.
So there's a
Alonzo, thank you
1,
for being
2,
with us this
3
afternoon.
breakout,
So much to
pull
discuss
back
in
to
terms
support,
of Fed speak.
pull back to support.
Let's start with Jerome Powell.
Now it's a triple bottom. So, see if we get back up here to 6. If we can get back up here, I'm getting out of the sun gun, and then it'll probably break out. I mean, she's so, I don't know about this girl. She's just so,
I want to get your thoughts too on the tone. We got
I don't really care. I don't watch Jimmy. It doesn't bother me a bit. Because I know what he's like. He's not funny. Steve Martin was funny. John Belushi was funny. Chevy Chase. Okay, I'm about even on these. So make a business decision. We're right out of resistance too. See, this is what gets me every time I want to. Should have bought more. It's 20 after 3. Well, we got 32 minutes left. Days like this, man, I've seen the market just take off at the end of the day. I don't know if that's going to happen today or not. The supports have been holding here at the bottom here, but the resistance sure haven't. They've been giving up. So Disney got 1150, the last low yesterday. This is a stock that the fat cats will buy, because most of them are liberals and they don't care. They don't It's just one that's in a lot of portfolios, and I think Buffett bought this one time and he run it up. I was kind of shocked. Benzinga Marketplace S&P Disney to reportedly raise Disney Plus prices. Nehem Laura Martin says Disney should shut down ABC. Here's why. I know why. Her reasons are probably different than mine. Walt Disney to raise prices on streaming subscriptions in October. So that's the market should love that. Here we are back at resistance again, and the resistance gets lower and lower and lower and lower. "25 minutes to go." Dow Jones, today's losers is Amazon, Nvidia, CRM. Let's see how much up these are. Put that on. So we got Amazon. So Amazon was at, what is this? SPX. 3 years ago, Amazon was $81. This, we've had a triple top, and we're at all-time highs. Nvidia, all-time high. 3 years ago, it was 1081. Now it's at 184. Reality check. CRM. 3 years ago, it was at 126. It ran to 369. And we're bouncing off the 200. So if there was one to watch, it would be this one. Bounced off the 200, bounced off the 200, bounced off the 200, bounced off the 200. That would be one to watch. Visa was at 174 just a couple months ago, or 1, 2, 3, 4 months ago, 375. Microsoft, $2.13, up over 150%, 120%, 35. Almost at an all-time high again. Merck. Low this year is 73. We got a 1, 2, 3 window. This thing can jump down. We got a head and shoulders, inverse head and shoulders. So this one could be ready again. Apple. 3 years ago at 124. ran to 260. We got a double top. Disney has a lot of volatility. It's way overpriced. This thing can come down to 95 to $100 and be a very strong buy. So far, almost every one of these, all but one, has been overpriced. Walmart, triple top. All-time high. Nike's cheap, but Nike missed the boat. Nike didn't start changing the brand to the loft tennis shoe, and they went woke. Had a transsexual commercial. Cisco, all-time high. It was at 38. We hit 72. Procter & Gamble is 122 3 years ago and hit 180. So this one hasn't had that big of a run, and it's pulled back. So that's 2 out of all the ones that I've mentioned that are at support. Home Depot, 265 all the way to 439 at a double top. A little bit lower. Head and Shoulders. Broke out of the Head and Shoulders. Now it's below the Head and Shoulders. So, I mean, it could drop down more and be a better buy. I don't know what SHW is. I don't even know if it... What is SHW? Sherman-Williams, I knew that. Let's bring this down just a little bit so I can see the name. So 195 to 400. So that's a 100% increase. And we've been hovering to 63. It respects the 63 pretty well. Strong buy if it hit the 200. JP Morgan, $100 up to 300. Overbought. McDonald's, 230 to 326. We're at resistance levels. We came back. It doesn't respect the 63, but eventually bounces up off the 6 once it goes to a dip. So triple bottom just under the 63. Cat was at 160. We're at 485 this week. All-time high. Up. Needs to pull back to a respectable price of at least $400. 407. I'm at 130. I better watch my trade. Okay, I'm even. Let's go. We're at 185, 180. Let's just sell it because I've been in this thing forever. And again, we're at a frickin' resistance. These drops are huge. Yeah, this has been a cruddy second half of the day for me. I got out of that one, but I'm telling you. Right to resistance and it gives up. Just like that, it drops $1. And I ain't gonna trade it no more. I'm done. I'm done. Yeah, I've seen the days on volume profile on what? The SPX or? Where's my volume profile? Oh. There's 140 from 75. If I'd have took that one. Today's the 23rd. God. There's $100 a contract right there. There she goes. She hit my target finally. Just a little bit more, one little more candle. So what was resistance, it broke out, pulled back, and hit the resistance line and bounced up and hit my target, 175. So that's $100. That's $100 scalp right there. To the 200 EMA and SMA. Boom, right there. It's the only thing that looks halfway decent today in the second half of the day, right there. It actually broke a resistance, pulled back and respected the resistance, and then came up and hit the hard resistance. Now 75 to $180, $1.80. Boom. God darn it. 235. 255. 270. So that's $200. $2, I mean. I said that would happen. Oh boy. Chris. Boeing and PLTR. That's a good catalyst. They were talking about how much PLTR has gone up this year. And they were kind of pumping it this morning to run. And it knifed. $8 dip. Well, 4 more minutes left and I'm going to be done. What a day. I mean, today wore me out. The second half, I don't like being down and not being right. I'm not down for the day. I'm just saying. Sit here and do nothing for 3 or 4 hours. Soon I'll be traveling and trading just a couple hours a day. I don't think this would ever get old, but I got to think about how much life I got left in my body. My sister says she might have gallbladder problems, so I'm gonna find out what to do with that. She didn't have insurance, so I hooked her up. One minute left to go. 1 minute left to go. Okay, well, I want to say thank you to everybody for hanging in here and kind of cracked a smile when I forgot about Bad News Bob's song. I was really tickled this morning. I was hitting it, nailing it pretty good, and then got stuck. And it never looked back. It just kept going down and down and down and down. And I kind of said we'd consolidate, and we did. A little bit too much. To yesterday's open. And I nailed that bottom, so that helped out a lot. And I left, again, you know, I left more money on the table than I should have. I tried to let them run, and they wouldn't hold resistance levels. I mean, break resistance. They weren't holding supports at the end of the day, so that didn't help. I'm going to get out of here and go get something to eat and get some rest and watch some videos. Trying to debate what I want. I don't want to eat a lot. I didn't thaw out any soup, so that's out of the question. And I don't want to have another burger. And I really don't want to go out. So I might just go get something. That's my line. Later dates, YouTubers. Hit the like. Thank you, Ringa. If you ever get stuck in a trade that I am, feel free to ask. Don't be shy. It just wasn't, second half wasn't easy. I don't like to let go, but we'll catch you later.